Good morning. All right, so obviously futures are higher. Excuse me. Just about everything is up on the day.
What do you think, Lizanne? Yeah, there's an interesting calculus going on with regard to the Russell 2000. You get these knee-jerk moves in part.
Okay, I don't know what to look at first. Okay, let's just do the normal. Check the sectors. Let's see what the sectors look like. We got all sectors green. We have three sectors unchanged, two sectors unchanged: utilities and pharmaceuticals. Airlines are also unchanged. Junk bonds are unchanged. Semiconductors are leading, so we'd expect to see NVIDIA up big today. It's up, but not huge. Looking for a follow through.
We talked about the decline in the stock yesterday after earnings. The CEO joined you on Mad Money last evening. What do we make of this? Okay, so he had the best Comscore sales number of anyone, okay?
All right. Excuse me.
Is get away from the episodic nature of good times for Chili's. What he's saying is, you know what? I'm going to spend a lot more than people think in order to create and use this.
All right, we got 7 minutes to go. 7 minutes to go. First 15 minutes, 20 minutes, I'll be taking profits off the table. If it makes sense to do so, stocks like Nike that are up. You could thank Nick for that one. Dell's up. Thank Rick for that one. Leestar. Tesla's up. Scott B has been in that one for a while. Scott B trading in and out of it. Hold on one second, guys. All right. Let's see. Apple's up 2.5. Amazon's up $4.87. Meta is up 5. Tesla's up 3.25. Dell's up 4. CrowdStrike up 4. Google is flat. Netflix is up 4.50. Nvidia is up 90 cents. And Microsoft is up 3.70. Market's looking good. Looking good. Let's take a look at the NASDAQ 100. All sectors are green with few exceptions. Leading Cisco after earnings. Cisco. Let's see what Cisco looks like. Cisco. Not crazy about it. It's up on the NASDAQ 100. Yeah, Cisco, I'll pass. Lulu, on retail sales. Amazon up on retail sales. Lulu coming out of a low. Dollar Tree's up. Okay, we got 4 minutes to go. 4 minutes to go. Nike is up, of course. Nike. Okay, we'll get a nice follow through today. Let me shift to the 4-hour. Okay, so Nike pushing higher. Daughter's leaving for college. She's going to go to a friend's house first, and I'll meet them tomorrow. Just a reminder, I'll be out of here tomorrow. Going to drive up to Duke with her and her friend. Make sure everything is cool. Did the fatherly duties, oil change, check the tires, check the engine, all that good stuff. Okay, what's going on here?
Things are still fine. You've had sort of a common thread, at least today, in terms of the data and the backdrop of earnings that have been better.
Okay, we got 3 minutes to go. 3 minutes to go.
And this sort of good news is good news. Whether that lasts for any extended period of time, I'm skeptical.
I guess that's basically just it. It's nice to see like fully good news.
I'm glad this retail sales number came out after I had a chance to use Thinkorswim for a while. Now I'm starting to get used to how to use it to best enter and exit trades. So futures continue to push.
Tightening their belts. Home prices there in July, a 9-year low.
Yeah, it's so far any stimulus they do is not working. I noticed Alibaba was down 3 at one point, started to come back. June quarter results, there's really nothing to write home about. Every company I deal with that has China issues has China.
Starbucks. What's Starbucks doing? Starbucks. David told me he was taking a position in Starbucks. Okay, Starbucks a little drift lower, looking for a bounce there. Basing at highs, looking for a base up there. Okay. Nike looking good. Nike.
That does a lot to influence confidence as well in the country. That said,
Pinterest, what's Pinterest doing? Pinterest, Palantir. Pinterest is higher. Palantir up pre-market. What's Rivian doing? I haven't looked at Rivian in a while. Rivian. Okay, that's pulling back. We're about to open. Okay, we are open. Okay, a lot of pops on retail sales. Okay, Amazon should continue. ARM Holdings. Let's see, ARM. There goes Tesla. ARM Holdings. Looking for a follow through in ARM. What's Chipotle doing? Chipotle. No, nothing there. Okay, Meta. Dell, nice gap up on Dell. Okay, first 15 minutes is just people taking profits off the table. Okay, Dell. Okay, nice reversal on Dell on the weekly. Daily making progress. Okay, Amazon on retail sales. Looks good. Nike on retail sales. Looks good. Clearing some levels. Nike.
Forestry Beats reiterates the guide. Kind of a nice Midwestern quarter.
Yes, I mean, it's funny because, again, I look at Home Depot, and they did not say that particular end was strong. So another area where the hedge funds are so smart, they were probably shorting
Nike.
Deere because Home Depot didn't say that area was strong and the grain complex is bad. And David, normally that would do the job.
But not in this case.
No.
Caterpillar had a pretty decent quarter.
Yeah, it did. Yeah.
Now I'm
Look, the industrials.
forgetting.
There is a lot of people feel there's an industrial recession. I would say that it's almost impossible to find an industrial that didn't do really well.
So what does that mean? What does that say about the overall sense of the economy at this point?
Money.
Yeah.
A lot of Jacobs one tonight, the old Jacobs Engineering. I mean, these companies just got huge checks from the government. One of the reasons why the deficit requires the interest in the deficit.
Nike, Microsoft. What's Microsoft doing? Microsoft. Nice little pop on Microsoft.
Yeah. By the way, that said, I mean, it's a good point. My understanding is, for example, the allocations from the CHIPS Act that we.
Okay, let's take a look at Microsoft.
Like they have not seen the money.
Ooh, Microsoft.
Yeah, they have not seen any of the money yet.
Well, when I had Secretary
Microsoft following through.
Some of them have seen some.
Have they?
Yes.
I'd like to actually see what the actual numbers are. My understanding is, for example, my understanding Intel. Yeah, the commitment's there, but the money hasn't yet actually been dispersed.
Brookfield and Apollo will have to learn how to make chips. Remember, they're the partners, and I don't know if you watched, if you read the story about son abandoning his work with Intel.
Okay, Tesla, nice follow through. And Tesla, I was thinking about selling some
To your point, Brookfield and Apollo have both partnered with Intel.
credit spreads on Tesla.
49%
Put credit spreads,
They also get the actual revenue that comes from
180, 175, something like that.
Doesn't have the capacity, dollar-wise, to actually do that on its own.
No,
But it's doing it, and it's doing it with partners. And in other sense, the U.S. government.
Upstart, what's Upstart doing? Upstart.
I question whether they were the company to partner with.
Tesla looks good.
The balance sheet isn't that good. And Carl, when I read this morning, this is the piece in the
Upstart grinding higher.
SoftBank doesn't want to be with them.
Okay, the FANG stocks pop and fade. Let's see if they follow through. Nike with a little fade.
Comebacks, back above 5,500. S&P almost erasing its losses for the month to date. Walmart, the best Dow name, Jim. And
All right, let's take a look at the S&P 500. Okay, firmly above the 50-day now. S&P 500 firmly above the 50-day. S&P cash. Okay, that looks good. All right, so we're coming up to some resistance pivots overhead, so we'll keep an eye on those. S&P.
Apparel being amazing. The fact that they gave the managers much more say over their area. So if you go to a neighborhood, they actually reflect the neighborhood. These are things that McMillan has done. They keep refining the model, and the e-com is really terrific. And the deal with e-com, I mean, like, it just
Okay, so we're creating a lot of gaps that we need to fill, obviously.
We didn't think they could do
NVIDIA looking good.
People misjudged them. They're much better than people think.
Nike starting to bounce. Nike.
Market value now approaching $600 billion. And as I mentioned earlier, just because I do think it's interesting, 46% of the
Nike clearing the 50-day. Coming out of a base, the overhead resistance level for Nike is the top of the Kirby. Okay, here's Nike. Okay, so accumulation leads to phase 2. Markup, you can see the Kirby clearly over here. 88 to 89 is where we'll start to run into some supply. NVIDIA looks like it wants to keep going. NVIDIA.
It is every bit of the treasure hunt that Costco is. It's so electric to go.
NVIDIA with earnings coming up.
We're going to hear from the president today, talk about these negotiated prices.
Bitcoin again. Bitcoin is doing well. Bitcoin.
They include, I think, Eloquist Gyms in there, Emerald, Januvia. Some of the savings they're talking about as a result. This is part of the Inflation Reduction Act.
Right, it is. And if you take a look at Merck, which is such a great company, I mean, Merck has just been, I think, really got that, and they got whipsawed by the Chinese too. And Merck is a very inexpensive stock. Now it's 2.7% yield. It's come down. You know that Rob Davis doing a fabulous job there. but it doesn't
Yeah,
matter.
but
They're the
continued
crosshairs.
concerns. I mean, Keytrude is such an important component overall of their sales. It doesn't.
All right, Nike looks good. Lulu. Let's go take a look at Apple. I know my son just went to the gym. He's following. Good morning, Antoine.
The Chinese CEOs. J&J still stuck with Tao, and they have
Apple.
drugs that are, they have drugs that are part of it. Like J&J is the
Okay,
chief
Apple,
doesn't matter.
almost to the top Bollinger Band.
So let's not forget that
Nike. Nike looks like it wants to go here. Nike.
has historically been very tough.
There is a halo from.
Okay, can Nike get something going? Let's see. Nike again.
Even how you know it's zero sum.
What?
Right. It
Okay.
very much is zero sum. And Amazon is up another 2.68.
Nike.
And again, I would assume that's just on basically the idea of the strength of the consumer that was expressed during their conference call.
Absolutely.
Okay, Nike's got resistance up there at 96.
The conference call was very good.
Nike.
They made a comment how the Olympics were
You're talking about Amazon now.
Yeah,
their conference call.
yes, because we were mesmerized by the Olympics. No, in the middle of the women's volleyball, I just said, you know what? It's time for me to buy a fan at Walmart. Are you kidding me? That stuff was so great. I know CEOs, prominent CEOs who stopped and looked at the Olympics and took them seriously and enjoyed them. Hey, Chuck.
Are we going to bring him in now?
You're never going to
We
be
already
this.
have.
He's a real person.
Let's get
Because
started.
we have a real CEO who had a really good story to tell, and I am so thrilled about
Okay,
that.
I sold Kellogg.
I know that's
Scott has sold it.
but Chuck Robbins reported
Free up some more cash. Looking for positions that are on the move. Okay, S&P, we've got 5-to-1 up volume on the New York Stock Exchange, 3-to-1 on the NASDAQ Composite, 7-to-1 up volume on SPY, 12-to-1, 12-to-1 on the Qs. It keeps jumping back and forth, 9-to-1, 12-to-1, 19-to-1 on the Dow Industrials, and 3.5 on the IWM. Let's look at IWM. Yields popped this morning, which is really interesting that we'd have the S&P up 1%, NASDAQ up 1%, and the Russell up 2.25%. Russell's been beaten down, so IWM maybe sees a follow through.
The order growth was great. We saw the demand return. We saw it across the board. And if you look at the last 2 years,
IWM with the gap up into the gap.
So we had our best gross margins ever.
All right, so Bollinger Bands are starting to turn on that one. Qs,
We've seen it over 20 years.
watching the Qs.
It was pretty solid.
There were people who told me Chuck made a mistake buying Splunk. I happen to love the CEO of Splunk.
Qs are coming up to the 50-day. S&P is already above the 50-day.
Security's really important, but more importantly,
S&P is above the 50-day.
they needed more scale.
Okay, let's look at, actually, I don't want to do that here. Let me go back to that.
It is ahead, and you're right.
Let me do this here.
Things that we bring to them, number one, is scale of customer reach. They were very concentrated in a certain set of customers.
Okay, Meta, continuation, Meta.
Reach, the partner community that we have that they really hadn't established. So we have all of those opportunities.
So up volume is leading. We've got TTM with cyan colored bars.
10 deals that we have now closed with the teams working together.
Let's go to the 60-minute. 60-minute SPY, cyan bars. Since Monday of last week, we reversed. That's looking bullish. Now, you know what junk bonds look like, all right? So I harp on the junk bonds. Junk bonds lead, okay? Yesterday, many of you were pointing out that junk bonds were at new highs or 52-week highs. Okay, still at highs. So junk bonds tend to lead the markets. Antoine, if you're listening, junk bonds tend to lead the market. Anyone who would be concerned about the markets dropping on retail sales, for example, or CPI or PPI, any of the data points that everyone seems to be focused on, if investors were worried about a market downturn, they would have been selling this instead of buying it. So since Monday, 2 weeks ago, this has been reversing. That's a good signal. Let's go take a look at, while we're waiting for the markets to finish imbalances, Let's take a look at the number of stocks above the 20-day and 50-day.
Security was strong, and so it was right now we feel like we're past the pain points that we've experienced, and demand should be normalized.
So you don't think there'll be future layoffs?
Okay. First off, let's go take a look at growth and value. We know that both of these are rising. Growth and value. Okay, so both of these are above the 21 EMA. That's good. So all your sectors, growth, tech, software, cloud, hardware, infrastructure, all that stuff. In the growth sector, that's following through. The 21 EMA is turned up. That's bullish. Now, we could see a little dip over the next couple of days and then a follow through, but the bullish trend has reversed after 3 weeks down. Same thing with value. Materials, energy, banks, industrials, consumer staples, utilities, healthcare. These are all in play. Number of stocks above the 20-day and 50-day, those had turned up yesterday, so breadth was improving. Okay, Microsoft fading a bit. Microsoft, let's see. Nike.
There is an aspect of AI that'll go into that, but I don't think this is a sign of a bigger trend.
You talk about customers upgrading for AI and you becoming a beneficiary. I'm just wondering if you could explain when you say they're setting aside for money for AI to actually spend it on modernizing their infrastructure. What does that translate to when you modernize your infrastructure for Cisco?
Yeah, we heard this for the first time this quarter. We had customers telling us
Okay.
that they were actually
Nike
upgrading their
flagging.
switching infrastructure. Their
See, Meta looks like it wants to follow through. Meta.
The data points we gave on the call, high single
Okay.
digit growth in enterprise switching, enterprise routing, double-digit
All right, the
growth
number of stocks above the 20-day. Do note the S&P Equal Weight Index, which removes the weight of the big cap tech names on the left, which everyone's always talking about on CNBC or whatever. You know, it's only 5 stocks leading. It's only 7 stocks, the Magnificent Seven, whatever. In order to exclude those names that everybody seems to think is a bad thing, this is the index to look at. So it's the S&P, where everything on the 500 are weighted equally, pushing higher above the 50-day. That's been above the 50-day before the S&P made it. Also, the number of stocks above the 20-day is rising. Number of stocks above the 50-day is rising. So you got nothing but bullish signals. Sell some into strength. There's going to be some profit taking up here, most likely. Tesla looking good. Meta's looking good. Apple looking for another pop. Apple. Let's take a look at Apple. Let's go to the New York FANG Index. New York FANG Index yesterday. Come on. Having issues with stock charts. Okay, so let's look at the New York FANG Index. Okay, so we get a nice follow through. Big move today on the New York FANG. You can see a bullish chalk here. That's a break, change in trend. Change in trend. We're making it through some supply areas. You can see the supply that we just made it through at the open. All right, just don't buy the high of the day. That's the only problem. Okay, the people get into, you know, I was talking to a few people, members, new members, you know, took a loss on this, took a loss on that. Try buying on dips. If you are buying on dips, buy dips after 11 o'clock, 12 o'clock. Look for that ABCD pattern. That might help you quite a bit. Because the run up this morning will most likely see some profit taking. Okay, Tesla looks good. So the New York FANG looking good. Tesla looks good. Tesla rising. Scott, you still in this, right? I believe.
And as I said on the call, I think over time it's going to become increasingly more difficult to measure.
Yeah, take some profits off.
AI from a sales perspective, because I mean, if I have to upgrade my network to accommodate an AI app, is that AI-driven investments? You know, we'll have to see how it goes. Right now, we're sticking with
Okay, so this is definitely looking good today. Let's see.
We just want to be a beneficiary, David.
Jim mentioned Splunk, and I know you're still absorbing that, but do you think the ground for M&A gets more fertile from here? And does that get you more interested net?
I don't think it changes how we think about M&A. I think we're really pleased. You know, it's interesting when you do a really big deal like this. You're probably more focused on the successful integration than you might even be on a smaller one. So Gary Steele's done an amazing job. He's personally leading the
New York FANG
integration, and he's
Index.
also taken on the
No, I don't want the weekly. I want the daily.
phenomenal.
All right, so we've been watching this as it moved above the 100-day moving average to start the week. In addition to what we saw with junk bonds and breadth indicators, this is giving us a bullish signal. Okay. So the 50 days next, RSI is green. RSI looking green. Okay, RSI is green now.
It's a hard, long journey to shift from a net 30 business model to get to 56% of your business coming from subscription. I'll tell you that.
That said, you have a tough
Okay,
compare coming
so
up.
we are green.
Q1 fiscal year 25 versus 24, right?
That looks good.
Last Q1 a year ago,
MACD, remember MACD? The triple MACD.
about the negative year-on-years, and it's really comparing against.
Okay, let's go take a look at that.
Started to clean up. We just started shipping like last
Okay,
year.
MACD.
A year ago, we think we shipped about $4 billion more than we normally would ship to customers.
Okay, this is about to cross. You see the long term? It's about to cross. So that's giving us more wind in our sails. We could see some momentum carry us forward. Okay. But we're up already. We're up, Vinny. We're probably going to pull back. Maybe a little bit. Yeah, we're not going to go straight up every single day. But look at the last time we turned when all three of these MACDs, short term, intermediate, and long term, when all three of these turned in April and crossed over bullish, what happened? We had a follow through and my chart stuck. There we go. We had a follow through in April, end of April. And that led to multi-weeks higher. All right, so we're only getting started here with people still ambivalent. I was a bit ambivalent coming into today because we were stuck right to the 50-day. I was waiting for retail sales. A lot of people were very negative on the markets. I kept thinking about junk bonds, though, when I woke up this morning around 5 o'clock and started puttering around. I was thinking, you know what, junk bonds, it's not going to be different this time. Junk bonds tend to lead, and they would have been selling. That's what I kept telling myself. They would have been selling. Okay. Junk bonds. So we got a nice tailwind. You have all three MACDs rising. You got small caps now participating. That's a good thing. Most stocks. All right, so we got a little fade from the high. Dow Jones Industrials. Watching that group. Okay, watching this group, Industrials. NVIDIA. Looking good, NVIDIA. Try riding your trades until about 11 o'clock. That's usually where we'll see some pivots form. We got strength in NVIDIA. NVIDIA looking really good. Let's see, what else? Oh, I wanted to look at the advanced decline percent. Okay, advanced decline percent. We started off the week. Remember, NASDAQ was the only one that made a higher high. All right, so we just had this little dip right at the zero line. And then as we started the week, we had a higher high. The rest of these were following, including the S&P 500. Now all four are saying the same thing, all right? So while this is something of a lagging indicator, it's also real time. So this is what's happening right now. Let's look at the New York Stock Exchange. Remember, we were above the zero line on Monday, Tuesday. New highs, new lows. We're above the zero line. Okay. And we were looking for that black line to hook. I didn't think it was going to hook this much, but this retail sales numbers really got the markets goosed. We're making a new high, advanced decline, higher high. And we got green elder sticks since Tuesday. So I don't know what else to show you. I can't find anything bearish at the moment. The only thing that's bearish is that we shot out of a cannon and probably going to see a little profit taking in some of these stocks that are ripping higher. We're not going to go straight up. So if you're up 25, 30% on shares, maybe you're 50%, 75% on options. Maybe you want to take some off, keep some, depending on how much time you have left. But yeah, we got a good momentum trade at the moment with Gerald Appel's 3 MACD setup. What else do we want to look at? Let's look at bullish percent. Remember, bullish percent made a waterfall drop. Okay, look at the change in direction now in bullish percent. You know what that is? That's a point and figure buy signal. A lot of stocks going on point and figure buy signals. Okay, so that's another tailwind. We're at 50%. That means we can get all the way back here to 60% and not even be close to way overbought, which would be 80, 90% bullish percent. Okay, so we got a nice hook in the markets, bullish percent. Let's go take a look at the bullish percent. Something like the S&P 500, point and figure. Okay, we want to see point and figure filling some X's. We want to see green X's. We do. 5550 fills. That would be a little breakout above the August high. That 8 right there is the August pivot high. 5600, 5650. If we were to fill 5700, we'd be well on our way to 6,000. The call wall is still at 6,000, right? Let's see, the call wall. Volatility trigger, S&P is 5425. We're above that. So we're in positive gamma. Absolute gamma strike 5,500. So we'd like to see it get above that. Call wall. Okay, the call wall did move back down to 5,500. So it was 6,000, came back to 5,500. So we got some short-term resistance levels overhead. That said, most indicators are bullish. We're at the high of the day. Maybe you want to take a little profits off here. See if we get a little dip. We could keep going, but what I'm looking at is strategies where you've got this nice rip in something like Tesla. You know, keep some on, but sell some into strength. I might do that right now. Let's see. TS. You know what? I'm going to do? I'm going to sell some covered calls on this. Tesla. TSLL. Let's see. Where are we right now? TSLL. I want to sell some covered calls. Okay. 950. Let's see what the 12s look like. 10s, 12s.
They need to start caring about making money soon. And I even looked this morning at the Wells Fargo downgrade on the stock. That needs to come in.
Covered stock.
Soon. It's certainly a risk. But when we look at where the stock has been, where it's at now, the move down, I think a lot of that risk is priced in. So with the potential that they have, it's pretty good value at the point we're at now, and that risk is certainly out there, but it's discounted.
Okay, Tim, thanks for the thoughts. Good stuff.
Oh.
Great to see you, Alvin.
Yeah, absolutely. Tim Urbanowicz, Head of Research, Investment Strategy, Innovator ET.
Okay, this is something I haven't done yet, guys. Selling a covered call on Thinkorswim. What do? I go up to covered stock. Is that the spread I want to do? Sell, single. Let's see. The 12 strike. Okay, I don't know what I'm doing here. Okay, I'm not going to do it today. But we have a nice little rip in. Nice little rip. In the markets, NVIDIA is still going. So I'll just concentrate on reducing my exposure. When I say reducing my exposure, it sounds like I'm bearish. I'm not bearish. What I want to do is sell into strength. I want to sell into strength some of these positions that I have open. So I'm going to do that right now. Let's see, Nike, Nvidia look good. Nvidia, that's an earnings play. We were looking for a few more days upside in Nvidia, so I'll leave that alone for now. Volume is really high on Nvidia. TJ Maxx, I was in TJ Maxx, Mondo. That place is always busy. Best Buy was busy. TJ Maxx. What else did I do recently? Lowe's, Home Depot. Oh, you know what was packed was Ross stores. Okay, Meta continues to go. Meta, Dell. All right, Dell's on a mission. Dell on a mission. One week and counting. Thanks, Rick. Okay, Dell on a mission, following through. Rick pointing this out last Thursday, gapping up. Okay, it's becoming more obvious that the buyers are in there. Yeah. You speak Kansas? Can you speak fluent Kansas? Fluent? All right, Dell looks good. Microsoft looks good.
Good Thursday morning. Welcome to another hour of Squawk on the Street. I'm Carl Quintanilla with David.
Okay, futures continue. All right, so I don't see anything slowing the markets down at the moment. ARM Holdings. Okay, ARM. Looking at ARM for the follow through. Somebody sold a stake in ARM. Who was that mentioned that?
And we're 30 minutes into the trading session now. Here are the big three movers that we're watching. Walmart posting a quarterly beat. It raised full year guidance with comp sales up more than 4%. We'll have more on those numbers in just a moment. But
yeah, I like Hobby Lobby.
Cisco shares also gaining. We saw top and bottom line beat. Orders growing 14%. Yet Cisco is going to cut 7% of its global workforce. You saw CEO Chuck Robbins really characterizing this as a reallocation and spending toward AI, he said, because there's tremendous demand for those products.
Dell, okay, Dell's starting to peak out a little bit.
He's a top gainer on news that Warren Buffett's Berkshire Hathaway has taken a stake in that name. We're seeing shares pop almost 10% as well, David.
Yep, 13 now. Sorry, we got
Okay, Dell. Let me just take another look at Dell. Dell.
Business inventories. This is an important number. I'll tell you why in a second. This is a June read. So the last month of the second quarter expected up 0.3%. It delivered up 0.3%, right on the nose. So consider this: the 3 months of the second quarter, we had 0.3 on.
I like Rick Santelli.
April, 0.5 in
He's a bit
May,
obnoxious. He's from
0.8 in
Chicago. He's got that,
June.
kind of New York or Chicago
3 months with positive inventories.
positivity, if you will.
Is it important? Because 2.8% GDP, advanced looking, second quarter.
Good job there, Antoine. Good job.
By inventories. Now we have National Association of Home Builders Market Index coming out, and to that we aim east to Diana Olick. Diana.
Okay, Apple, Antoine. Apple looks like next level of resistance overhead for Apple is that upper Bollinger Band right around 228, around 228.
December of last year. Anything below 50 is considered negative. Sentiment was at 51 back in April and 50 a year ago. Now, mortgage rates dropped pretty sharply in August from over 7% to the 6.5% range, but the builder said a lack of affordability and buyer hesitation stemming from
Okay,
elevated
Nvidia
interest rates
starting to see a little profit taking. Dell's still going. Dell's still going. Okay, Apple looks good, Antoine. Got that upper Bollinger Band. Notice Antoine, you see that? The Bollinger Band starting to open up, so that TTM indicator that you used to using, this will start to turn cyan as this opens up. Let me just go take a look at that. All right, Apple. Yeah, Apple looks good on the daily too. Apple's still on a buy signal. There's no sell signals on Apple, Antoine. Talking to my son, he's at the gym. I think he's still at the gym. Are you still at the gym?
Yeah, Dave, you put it just right. Some dovish Fed talk after some strong jobs and consumer data. Let's look at Alberto Musalem, the new St. Louis Fed president, saying that the time may be near when an adjustment to moderate restrictive policy may be appropriate. His comments coming after the data this morning. He said the labor market no longer
Okay.
upside risk.
Dell looks good.
Part of that shift in the balance of concerns at the Federal Reserve. The balance of risk, he says, on inflation have shifted. He's more confident in the path of inflation back to the 2% target. And it seems to have returned, he said, path.
Microsoft at the highs. Microsoft. Let me just look at Microsoft. Microsoft.
30% recession probability, a bit elevated from normal.
Microsoft, Kellogg. I'm out of.
Quickly on those headlines, jobless claims allaying fears perhaps of serious deterioration of the job market, coming in below estimates.
Facebook, Meta. Dell looks good.
Maybe premature, up 1%.
Dell, yeah, Dell looks good.
X Auto 04. Taking a look, there's the auto parts up 3.6%, pretty strong, right there. A little bounce back.
Tesla.
And appliances also doing well. Food and beverage, sporting goods down 0.7. That's one discussion.
All right, Palantir. Let's look at Palantir. Palantir. I'd like to see that follow through. Palantir getting a lot of upvotes from fund managers, portfolio managers. Okay. Nvidia starting to see some profit taking.
Still there, that 100 basis points of cuts from the Fed by the end of the year. The most important thing Musalem said is an ease would be an adjustment from a more restrictive to a less restrictive policy. Translation, you could still have decent.
Okay, taking some profits on Nvidia. Nvidia taking a little bit of profits off. That was the 115, 120 vertical on Nvidia. Posted that information in the alerts channel. Okay, we're at the maximum. Okay, I'm at my max profit on a vertical is the strike that you are short. Okay, so on a vertical, you're buying a call, say, at the money at 115. You're selling a call at 120. The maximum gain is typically right around that 120 level. Depends on implied volatility. Implied volatility can explode, in which case you get a little bit more than the calculation, which is the case today. So I'm going to take some profits here on Nvidia. I'm still bullish Nvidia. I want to do, maybe I'll do the 120, 125 on the next dip. All right. So That looks good. NVIDIA.
Look, we're at 538, so there's
So I'll only do it on the next dip. Okay.
the economy. You're still holding the economy back.
It's a great setup for our next discussion, Steve. Thank you, Steve Leisman. By the way, S&P is
Okay.
expanding its win
So the
streak
same thing I
back
did with the 110, 115, I'm doing with the 115, 120.
She does think a 50 basis point cut in September is still justifiable. Charles Schwab chief investment strategist Lizanne Saunders joins us this morning. Lizanne, great to see you. I know you heard what Steve just said about that pad in there. What does the argument for 50 sound like?
Well, first of all, it may be justifiable based on how real rates have gone up. I don't think the Fed is going to do that. And I think to overseas that the Fed's bias, at least at this point, is probably 25 basis points. I think the jobs report will be the next key measure. The Fed has inflation data.
Max profit at the 120.
Have elevated the focus on the other part of their mandate, which is the labor market. So I think that could be the next potential needle mover for expectations around Fed policy. It's probably not going to be PCE because once you have CPI and PPI in the books, you can kind of map to what PCE is going to be, and it doesn't look like that will be an outlier. So I think the labor market will hold the key.
I'm looking at something JP Morgan wrote last night. Looking at the next jobs report, they say job gains in the range of about 160 to 200 would likely erase much of the fear invoked by the July print. Something in the low 100s, though, they say would put that risk balance back into growth and deliver a larger cut. Do those numbers make sense?
They do, but I think you have to go beyond the payroll numbers. I think the innards of the jobs report are at least as important as the headlines around payrolls. Obviously, the unemployment rate, long-term unemployment, what you see in terms of wages, hours worked, the differential between the payroll survey and the household survey, and not just the print on
Okay, so
payroll,
the next dip, I'll probably do that on NVIDIA. Okay, so it looks like we're going to see some profit taking. I would take some profits.
Next year. So I don't think you get anywhere near the full picture if you stop the analysis just at the payroll print.
You know, it's interesting because the Global Fund Manager Survey from Bank of America shows recession risk is the number one concern of these fund managers. Given the data that we're seeing this morning, are those concerns justified?
Okay, look for dips to buy.
We will get a recession at some point, but I think this cycle has been unique in the rolling nature of
Meta's still strong. Dell looks like profit taking. Many of these are up 5% or more. Amazon's up 3. What do I have on Amazon? I have that. Amazon. Okay, let me Amazon. What do I have here? Amazon. I have October 170, 175 calls on Amazon. So Amazon, I have October 170, 175 calls. Okay, vertical. Amazon looking for this to continue. It's a doji right now, so can we pull back first and then follow through towards the 50-day? I'm looking for this gap to fill on Amazon. So if you've had issues with options buying, it's probably because you've been buying at the wrong time. So right now, I'd either want to take profit. Well, not now, but I'd either want to take profits in the first 15 minutes or
that's why I think people are reticent to say, boy, it's coming, just because of the unique nature and the rolling.
And then reassess the markets. The first 15, you get your best exit most of the time. Then you're looking for Amazon to come back. I don't think it's going to come back a lot because more than likely any fund manager that was thinking about buying Amazon because it was down at a discount, I'm thinking that they would be considering, okay, so we got this discount, we'll buy some. If retail sales numbers come out good, we'll look for the next dip. If we get back above the 200-day, look for a little dip. Maybe some people will sell and we'll buy up their shares and then look for prices to move back towards 200. Some will also, if look at both sides of the equation. Some will look at like Mondo talking about this morning, Amazon, not Amazon particularly, but retail sales, the numbers, while they were good. You saw Mondo's comments. While they were good, do we follow through? There will be people who want to short this right here and look for a move back to 170. So let's keep an eye on Amazon. Let's go to here and look at Amazon. Let's see where supply lines up. Okay, you can see supply on the daily over there. Let me go to the shorter time frame so we can see supply. There's no supply right there just yet. Okay, let's go over here and go to the 4-hour chart. Okay, we're about, the 4-hour chart's about to give us a signal. We've got some supply up there after we fill the gap. So Amazon could keep going towards 190. Okay, so we had a couple of gap downs in Amazon retail sales. Okay.
As we head to break, let's give you a roadmap for the rest of the hour. It includes a
I like the white people, the white women that go and walk on the treadmill for 20 minutes and don't say anything.
Yeah.
Sometimes they'll sit on their phone. There was this one Asian lady who came in,
Mm-hmm.
and she walked on the treadmill for the entire duration that I was.
Look at Apple. Apple's breaking higher.
Yeah.
See that little dip in the morning? That was just profit taking. Oh, top left, you see it? So profit taking first 15, 20 minutes, then look for that, reassess the markets. After about 10, you see what it's doing. Apple's continuing. Looks good. Go eat some breakfast,
So there
man.
was this like angry Asian lady that came in the other day, and she was just yelling at her friend on the phone. She was so upset.
Yeah.
She was yelling about how they don't know who she is.
Being all
I don't
Asian.
know.
Yeah.
It was like so. Just the most.
I gotta have you watch Bill Burr. Bill Burr. We're talking about Asians. So funny. Yeah. Bill Burr. It's not a bad thing. It's actually pretty funny. Just being all Asian. Rick, you know what I'm talking about. Bill Burr. Every once in a while you gotta tune into comedy. If you get a little too stressed out about the markets, which we tend to do from time to time, watch some comedy. That'll make you laugh. Find somebody that you really like. I watch Bill Burr all the time. He's just a funny Irishman from Boston. Apple's still going. Okay, so Amazon looks good on this time frame. Fill in the gap. We're about to give ourselves a buy signal once we move to this level right here at 176.70. Okay. Yeah, I love Bill Burr.
Same-store sales in the U.S. rose 4.2%, and e-commerce sales jumped 22% in the U.S. and 21% globally. As the nation's largest retailer and grocer, Walmart is seen as a bellwether for the U.S. economy, and its leaders today largely shook off fears that the household finances in the U.S. have gotten worse. Chief Financial Officer John David Rainey told me that it has not seen a change in shopping trends. He said every month of the quarter was relatively consistent. He said consumers remained, quote, choiceful, discerning, and value-seeking, but he added, quote, we don't see any additional fraying of consumer health. For the first time in 11 quarters, Walmart's sales of general merchandise, the stuff that's outside of the grocery department, turned slightly positive. Still, he said the company decided against raising expectations for the back half of the year, saying it wanted to be a little bit guarded since the election and conflict in the Middle East could hurt consumer sentiment. But Contessa, in terms of pricing, Rainey said inflation was flat in the quarter, and all of Walmart's sales came from unit growth, not higher prices.
All right, Melissa, thank you for that. Let's talk to UBS retail analyst Michael Lasser, who joins us now. He has a buy rating on the stock, price target here of $74. I want to start where Melissa left off there with the guidance, because what they said was they were raising their guidance from their original forecast. So when you're looking at full year EPS guidance, it's coming in at a midpoint about 9 cents higher, but still below the consensus expectations at this point. My colleague Robert Hum is attributing this to the big beat in the first quarter. Where do you stand on this? Is it real, the rosy guidance for the rest of
All right, looking good, folks. Looking good.
Good morning, Tess. It is real, but what Walmart is doing very effectively, I might add, is straddling that line between showing how much momentum and power it has in its business.
Okay. All right. So Dell consolidating at the highs. Nike squeezing. Let's see. Nike. I really like Nike. Nike.
That have been driving not only the stock price higher, but the multiple to expand. And I think everything we saw today from Walmart suggests that that is going to continue, and this should be a core holding for investors.
What we've seen is really inconsistent results on the consumer from different retail companies.
Nike.
Strong retail sales out this morning, just smashing expectations.
McDonald's. What's McDonald's doing? I want to see McDonald's. Jimmy Yang's funny too. If you ever watch Jimmy Yang, he's hilarious. Lily. All right. Watching Lily for the follow through. Okay. So we got a dip on Lily.
You were right in that retail sales and consumer spending has become more consistent and episodic.
Okay. What's McDonald's doing? McDonald's.
Going to continue through at least the rest of the year. There's just so many distractions in the consumer environment.
McDonald's. Okay. McDonald's. MCD.
And that is going to have an impact on.
Let's do 280.
Willingness to spend. Now, that being said, what Walmart is showing is that it's on its own.
McDonald's up on the day.
Perspective between the second quarter.
Let's get McDonald's to 280.
Its sales in the U.S. for its core business grew about $4.5 billion, huge number. With about 130 million households in the U.S., that equates to each household spending $35 more at Walmart this year in the summer than it did last year. And that's because it's very convenient to do business with Walmart. Its prices are compelling, and its experience has been really top-notch. So I think that continues, and this is less about what is happening with the overall consumer environment, because it has been challenging.
All right, what's Meta doing? Meta's still going. All right, so let's take a look at Meta.
Given the market itself doesn't seem to be growing that much. Who are they taking it from? Are there any names
Meta.
investors should keep in mind on the other
Okay,
side?
let's look at Meta
Not necessarily the good side.
from the perspective of a point and figure chart. Okay, so the column of X's is bullish. The column of O's are bearish. Whenever we fill a box, we put a X in the box. 530 was filled on Meta. Now we've got 535 filling, so we got an X there. We're about to break out. We fill 540, 545. That will be a technical breakout, double top breakout on Meta. This is how I learned how to chart in the beginning. Much easier to chart a point and figure graph like this versus trying to figure out how to do candles and whatever bar charts. Back in the 80s, you know, the days of abacus and slide rules, this was an easy way to chart progress on or deterioration in a company's chart, stock chart. If it prints 520, closes in above 520, you put in an X there, it's at 535. If it closes there, that X will remain. So let's look at the regular chart, Meta. Okay, so you can see it's pushing. There's that 540, 545 area that needs to print. Okay, Bollinger Band still opening up top and bottom. That's a signal to you if you're long the stock, if you're a swing trader. You want to pay attention to RSI and what Bollinger Bands are saying. Volatility is expanding. MACD and stochastic are supportive. Stochastic's telling you to look for a close in the upper half of the daily range. So why is that important? Well, first off, you look at the chart of Meta, you know it's bullish. Secondly, you want to look for, if you miss the open, you want to wait for B and C pivots at this point. Okay. So you don't want to chase it up here. So the fact that you know that stochastic is turned up and embedded above 80, the fact that you know that, you can wait. So this is one of the problems that a lot of option traders make. One of the mistakes. You buy an option up here thinking it's going to keep going because of the ATR. But if you didn't buy at the open, you're making a mistake by buying up here. I don't think anybody in the trading room would disagree with that. So what you want to do, Steven's gotten really good at this. You wait for the dip that gets bought. You look for a dip back towards VWAP. If you didn't buy or coming into the day with options, you don't want to buy up here. Wait for the next dip. That's going to give you your best entry. Okay, note the Bollinger Bands too. So you're up at the highs. Look at the Bollinger Bands turning. That's telling you right there, don't buy up here. It's probably going to consolidate. Does it move sideways or does it pull back? That's what we're watching for. Because once those start to come back together, your implied volatility is going to drop a little bit and you'll get a better entry. Also, if you want to sell covered call or if you want to sell premium, you want to watch for these Bollinger Bands to be wide, sell your premium, watch it collapse, buy your premium back, close your position. Okay, Nike looks good. Netflix is consolidating. It's up $9.59. NVIDIA is up $2.38 at the highs of the day. Maybe take some NVIDIA off. We did that already. We had the 115, 120. We're at the max profit. NVIDIA is at max profit. So if you have the 115, 120 calls, I would take some off right there. I'm looking for the next ABCD pattern dip. Get a dip here. What I'll do, I probably won't do it today because I'll be driving with my daughter to her college. First trip, and I'll turn around, come right back after some lunch. Okay. Apple just keeps going. Apple. Let's take a look at Apple. My son's in Apple. We're looking at that upper Bollinger Band Apple as a target, 228. We're at 225. So there's probably some people here on that 225 pivot that were looking for prices to move up to the upper Bollinger Band. They got stuck. So these are bag holders. So 9 days later, they're finally able to break free. If we get rejected here, that just means that there's still people here that want to sell. If we make it through this area, however, it means that buyers are swamping the sellers and will push through this level. And the next pivots are our target, Bollinger Bands at 227, 236, 232. So market's staying pretty strong. So that looks pretty good. Apple. NVIDIA's going again. NVIDIA going. Okay, NVIDIA is about to break through the 50-day. Okay, I could do a scalp, but I don't want to do it here. We're too elevated at this point. NVIDIA is up $2.75. One of these days, NVIDIA is going to rip. Okay, let's look at the 60-minute. 60 minutes critical. We always want to look at the 60-minute. Where is price? Okay, so here's another thing. If you're an options trader, where are you buying? Are you buying when the 20 EMA is above or descending? Or are you buying options when the 20 EMA is rising? If you're bullish, you want to wait till price action gets above the 20 EMA. And then on a dip, intraday, ABCD pattern, or on the 60-minute, when we're touching and we follow through to the upside, that's where you want to start to buy options. Near the money, verticals preferred in this particular name. We're at 120. Looks like we're just going to keep going. Markets are pretty strong. Institutions take days and weeks to fill positions, days and weeks. So they don't mind buying high and selling higher. Okay, nice move back above the 10 EMA weekly on NVIDIA. Okay, daily NVIDIA, of course, looks good. At the 50-day, Bollinger Bands probably will contain price around 125, 126, something like that. We're going into earnings. So if you're going to buy a vertical, I'd do the 120, 125. All right, NVIDIA breaking out. So today could be one of those days. NVIDIA has an ATR of $7, so it averages about $7 a day. It's up $2.84. Could go some more. Could go more. Maybe buy some NVIDIA, NVDL. Let's see what that looks like. NVDL. That looks good. NVDL. Pershing Square. Frano mentioning last night Pershing Square up in their Nike holdings. GME Capital? Is that what you just said? GME? GME. GameStop. GME Capital. What's it? GMEC? GME Capital. Okay, what is that symbol that she's talking about? Caesars. Now it's been revealed. 2.6 million shares. So, you know, like we got this was Caesars. All right, so we're getting a lot of these 13Fs. Where they're going in and out. Saw Endeavor show up on a lot of 13Fs. Highlights from new Q2 13F filings. All right, so pay attention because that's telling you what the big boys and girls are buying. Okay, NVIDIA still going. NVIDIA. NVDL looking for a little dip. Looks like it wants to keep going. Okay, NVDL, NVIDIA looks like it wants to keep going. It's got an ATR of $7. NVIDIA. Okay, all the New York FANG index stocks look good. New York FANG. Okay, yeah. Looks good. Meta. Continuation. Meta. Really strong move on Meta. On a buy signal. yesterday, following through today. Meta. Looks good. What was the stock we were looking at yesterday? I was comparing it to the upper Bollinger Bands. Do you remember, guys? Ladies? There was a stock I was looking at, and I was comparing it to this Meta Bollinger Bands, opening up, top and bottom, RSI rising. You guys remember what that was? Was it Nike? It might have been Nike, right? No, it wasn't Nike. Was it Starbucks? Nike. No, Nike's gone. Nike, Starbucks. No, it wasn't Starbucks. I forget which one it was, though. Apple looks good. David Tepper's and Lyft. Okay, cool. Lyft and Uber. Let's take a look at both of these. I can't imagine flying, going out of town, and not using Uber. I don't use Lyft. I've never used it, but Uber, I mean, to the airport, why would I want to go, if I'm going to go out of town for a week, why would I want to leave my car in long-term security or long-term parking, pay upwards, what, $150, whatever it is, $25, $30 a day, when I can take an Uber, you know, for 25% of the cost. So NVIDIA looking good. So Lyft looking good. Uber longer term just keeps going. All right, so it's at the upper Bollinger Band. Looks good. Thank you. Yeah, Apple looks good. Meta. 2026 leaps. Oh, yeah. So Option Hawk was also all over PayPal. David was buying PayPal. Buford, he was buying PayPal earlier this week. I believe, right, David? Was it earlier this week or was it last week? I know you were in PayPal, you guys. Apple looks good. NQ. All right, so a good day. Just don't chase the highs. You should be fine. PayPal. Gap and Go. PayPal. December 2026. December 2026. The 6750s. Okay, so that looks good. PayPal.
Attributed his death to the psychedelic ketamine. Los Angeles police said earlier this year they were investigating
6750s. Yeah, okay.
and the U.S. men's national team is reportedly hiring Mauricio Pochettino as its new head coach. That's according to ESPN.
NVIDIA. Okay, NVIDIA still looking good. Riding the upper Bollinger Band on the 60-minute. NVIDIA, SPY. Okay, so everything looking pretty good today. S&P, McDonald's trying to get through 275 hopefully today. S&P 500 cash. S&P cash pulling away. Can we pull away from VWAP and keep going after a big gap up? We're going to have to come back and fill this gap eventually. Maybe we hit 55.50 first and then pull back a little bit. We're not going to go straight up, so don't buy the high of the day. Wait for the dips if you missed your entries. Don't be part of the FOMO crowd. You don't want to get caught with your pants down. Okay, Coinbase, Bitcoin has had a good day. We've been waiting for Bitcoin to do something. Finally, we got Bitcoin on the move. Okay, I'm going to take a 5-minute break, folks. SPY still going. And if we can just get some of these other stocks to go too.
Now we're back to roughly 5,500. Complete round trip here. Same with the CBOE volatility index, the VIX, only it's inverse. Complete round trip, same period, 15 to 60 on that day, August 5th, and back to 15. Round trip here. This has all happened while the market sentiment has remained mostly neutral, which may be surprising to you. One investor sentiment gauge, the weekly survey of investors for the American Association of Individual Investors, is largely neutral. During periods of euphoria here, bullets levels, you see here 42%, they typically go into the low 50s when euphoria is high. So a reading in the low 40s is well below any kind of euphoria. I'm calling this neutral. Let's look at other measures of the market. The fact that earnings growth estimates are holding up is critical here. Inflation is trending lower. Interest rates are rate cuts are expected. Growth is slowing, no recession, and the S&P 500.
Let's see what 13Fs look like today.
10% for 2024, 15% in 2025. That's very little change in recent months. True revenue growth is not as strong as we would like, and much of the reason earnings are holding up is just cost cutting. That and the need for more revenues is a big issue, but that is a 2025 issue. So regardless of what's going on right now, look at those, what I just showed you there. Inflation moderating, growth slowing, but no recession apparent, interest rate cuts coming, earnings still holding up, folks. That is the definition of the soft landing. If none of this impresses you and you're still skeptical, here is Walmart CFO John David Rainey telling us this morning on a CNBC interview. In this environment, it's responsible or prudent to be a little bit guarded with the outlook, but we are not projecting a recession. There it is. So what is remarkable to me is the most incredible things have happened. We were talking about a hard landing in October 2022. Remember the recession that was imminent? We were down 20%.
Okay, Druckenmiller, Stanley Druckenmiller. 13F is out. Let's see. Microsoft. He sold some Microsoft. He bought some Seagate, STX. Let's see, STX. Okay, STX climbing. Druckenmiller. COHR. He bought some COHR. 1 million shares. He bought 1 million shares of COHR. Coherent. Real estate CPT. He bought some real estate. Druckenmiller. PM he bought. Okay. Real estate, MAA. Just looking at some things that Druckenmiller bought recently. Market's still pushing higher. Okay. He sold 700,000 shares of Microsoft, probably taking some profits off. Okay.
You know what they call it in my world? A jackpot. It's a good idea of having a long-term plan if you're an investor and sort of staying put. You know, trying to trade your way or market time your way in the last 2 years would have led to tears for almost everybody.
What's the old saying? Give me a couple good stocks and a good book.
Yep. Yeah. And a beach.
Thanks. Yes. VIX back below 15 this morning. Futures traders raising their odds of a 25 basis point cut in September after that retail sales number today.
PayPal at the highs. What's NVIDIA doing? NVIDIA still going. NVIDIA kicking buttocks here. NVIDIA.
How are you thinking about this so-called growth scare given this morning's price?
Tesla. Okay.
We were always a little bit skeptical that
Bitcoin looking good. Tesla. Tesla. Big move on Tesla.
Deceleration from 2023 to 2022, but that's fine and to be expected. The economy grew over
NVIDIA.
last year.
NVIDIA still going.
Was very rapid because we were in the midst of this big immigration boom.
NVIDIA just keeps going. All right, it's got a $7 ATR. Average true range. Always check your average true range for the day. If you're just getting ready to enter some position, check the ATR. It's $7 on NVIDIA. So buying at the moment, it's at the high of the day. So you want to watch for a dip, but it still has the potential for another $4. And if we can get ATR to turn back up, we start to see some expansion candles. That'll be because institutions are buying. They are. You can see about what? 9 million, 900 million shares trading hands in the previous 3 trading sessions. Ooh, so lots of volume on NVIDIA. Okay, NVIDIA is not stopping, so you don't want to sell just yet. Just keep watching for flags that break instead of flags that break to the upside. You see that? These flags continue to push higher. This one probably would have, I took some off here because I was at 120. But this looks good. This looks good. The NVIDIA is still going.
As for the labor market, what is the line that sort of delineates danger from safety, so to speak, coming up in this next spring?
Yeah, we're thinking that the July report will turn out to be a bit of an outlier, that job growth is probably running more like 150K, that the increase in the unemployment rate reflects an inability to quickly digest what has been a huge surge of immigration, but one that's now cooling down, but that it's not reflective of overly weak labor demand. So if we see job growth coming closer to where we put it, trending at around 150,000, if we see the unemployment rate stop rising, or we think a bit more likely come back a little bit as some of those temporary layoffs reverse, then I think things would look fine. The Fed would feel good about where we are. And I think markets and Fed officials and we would agree that in that circumstance, the 25 basis point cut seems right. If we get a much weaker jobs number, then I think it does raise the question whether this is supply or demand driven. It's difficult to disentangle the two in real time. We do expect job growth to slow because labor force growth should be slowing as that immigration surge dampens out.
Finally, we haven't really mentioned much about former President Trump's comments yesterday, sort of opening the door to.
Okay, so Warren Buffett.
Tariffs of maybe 10, maybe 20. I know you guys have done some work on the potential.
Okay, Warren Buffett added AMR, Alpha Metallurgical. Warren Buffett adding, not that interesting, Arch Resources. Now, this could be his team, not necessarily Warren. I guess they got to get his approval, though, right? Okay, so they got some energy names. HCC, Little Buy. I don't, these aren't, oh, that's not even Warren. That's Mohish Pabrai. I don't know who that is. So that wasn't Warren.
One that we would not say is the base case at this point. If we do get further tariffs, the impact of that on the economy.
Okay, Palantir. Palantir, looking at some 13Fs on Palantir. Some ads in Palantir. You can see the volume indicating institutions buying. Okay, 560 institutional holders reported holding 89 million shares of Palantir.
They're not going to hike. Could it disrupt cuts? Perhaps.
62% of these holders were either new or increased buyers.
2019, that there was a growth scare around the tariffs, that the equity market got very anxious. And in the end, for the Fed,
watching hedge funds as well to see if they share the same view.
The perceived threat to the expansion from the tightening in financial conditions. So that's another complication. All of this, the question of how does the market react?
Right. From inflation to retail sales to the labor market, that's all good insight, David. Good to see you. Thanks for the time.
Thank you.
Over at Goldman.
So we come a tough quarter for cryptocurrencies, but Wall Street is still buying, at least when it comes to one part of the crypto market. You're going to find out why and where that money is going next. Don't go away.
HedgeMind. Let's see what they've got reporting. HedgeMind. Stanley Druckenmiller reduced his stake to 214,000 shares of NVIDIA. cashed out 98% of his max position, 9.5 million shares he once held of NVIDIA. His NVIDIA trade made $500 million in profits in less than 2 years. Wow. That's NVIDIA. Wow. That's incredible. Wow. Very impressive. Nice. All right. Is everybody having a good day? Hopefully everybody's having a good day. Let's take a look at the FANG stocks again, going into 11 o'clock. We're looking for pivots. This time of day, we're starting to look for pivots, okay? Netflix looking for a pivot, a higher low. Microsoft, Meta, Apple, NVIDIA, these are all at highs. Dell is continuing higher. Dell. Okay, that looks good. Okay, let's go to TweetDeck. Let's see what Jason has been posting this morning. Jason's been following 13Fs this morning. Q's seeing 12,500 of the August 30th 480 calls to buy.
Bitcoin on pace for a negative quarter, but interest continues to grow across Wall Street when it comes to Bitcoin ETFs. Let's get to Mackenzie Sagalos with that story. Hi, Mac. Hey, Contessa. So that 13F deadline on Wednesday gave us a read on which banks and hedge funds took a position in the
Okay, let's listen to this 13F.
Goldman Sachs in particular went big in Q2, lifting its holdings to over $418 million, up from zero exposure in Q1. Now, most of that is coming from the 7 million shares that it holds in BlackRock's ETF. Morgan Stanley actually trimmed its Bitcoin ETF holdings to around $189 million and swapped out its Grayscale shares for BlackRock's offering. HSBC has nearly $3.6 million worth of spot Bitcoin holdings, and Bank of America has $5.3 million in these products. UBS and JP Morgan both took on minimal stakes. Now, it's worth noting that most of these banks are likely just snapping up crypto for their clients, not their own balance sheets. And then you've got hedge funds like Millennium Management, which are some of the biggest buyers.
Okay, we're at the high of the day, 11 o'clock. There goes NVIDIA.
Recent filings also show that Point72 Asset Management, Elliott, Apollo, Citadel,
All right, looks good.
and the
NVIDIA.
Michigan Retirement System have all got spot Bitcoin products in their portfolio. Interesting. Mackenzie, thank you for going through that. Thanks, Contessa.
Still ahead next hour, billionaire investor Leon Cooperman with this. He's going to give us his take on the opportunities in this market and the presidential election. That's coming up in just about 10 minutes. Plus, the White House announcing the results of their first negotiations when it comes to Medicare and drug prices. We'll get details on that as well after a short break.
In a few clicks. Can't be that easy. It is with Schwab.
NVIDIA still going.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
All right, NVIDIA.
Right, we're at the highs of the morning. Here is the Russell
Okay, we're coming up. You see supply right there? Watching NVIDIA, you see the supply on the screen. That's a 4-hour chart. There's supply right overhead. Most likely you're going to run into that.
Diana, New York, and Mr. McCurry, Director of Schwab Advisor Services, deep in the charts. So let's start with the S&P. Mike, what you got? Give me the technical take.
Sure. There has been no shortage of movement over the last month and a half. So you can't complain that the market doesn't serve up plenty of opportunities. We did have, on the downside, about a week and a half ago, we did have a major distribution day, which was a very significant for the broader market.
Okay, NVIDIA right near the supply overhead. Here's a 4-hour chart, but there's some supply. After that gap down, we had a little bounce. Shorts came in and dropped this lower. Is 88 million, 270 million up at the highs. So can we get through this? Probably not on the first attempt.
Almost a capitulation, if you will, in the current price action. And since that, it nearly marked the bottom, and we continue to kind of bounce back as length and positioning in the market was flushed out. Carry trade, largely unwound if you look at the commitment of traders report.
Okay, NVIDIA.
And we've continued to climb.
Dell looking really good. Dell looking smart.
The confluence of the 20 and 50-day moving average for the S&P, that's right around that 54.15 and 54.50 level. And those were vaulted today with this gap up higher.
Okay, Dell continuation. Let's see what Dell looks like. Dell through the same lens. Dell. Okay, Dell doesn't run into some resistance until 115. Heavy resistance at 115. About 2.5 million shares there. Above that, another 2 million at 128. 13 million at the 148 to 150. So Dell certainly changing directions, breaking a downtrend. Is it going to go straight up every single day? Absolutely not. Will it give some back occasionally? 2 steps forward, 1 step back, and then take off? Probably. Watching Dell. Okay, here is NVIDIA. I was just talking about NVIDIA. Sorry, wrong screen. You can see the supply overhead. Nike looks like it wants to go again, squeezing. NVIDIA looking strong.
The obviously cautious Chinese consumer stock was down double digits over the last year of trading, but moving higher today, almost 2%.
Okay, so NVIDIA looking good. Dell.
Medicare drug price negotiations are making headlines.
Dell looking strong. Dell.
She's a look at some of those key changes, I guess, which are going to result in lower prices, correct?
Lower prices, certainly lower costs for patients, at least. The administration is having
So right now, Dell looks pretty good on the shorter time frames. Let's go to the 15-minute, see what we can find.
Some of the drugs that cost patients the most, like
Looking for supply. Not until we get up there a little bit higher.
Well, for cancer drug Imbruvica, at the bottom of your screen there, it's only about a 38% discount. Medicare and Medicaid Services Administrator told us this morning they were
Looks good, Dell.
Innovation.
Nike, squeeze, going.
We all are committed to making sure that drug companies will continue to want to innovate. It is crucial that we have a strong market, and we include
Nike, squeeze, breaking out of the squeeze.
Now, the discount prices may not really compare. We don't know what the real net prices is, the apples to apples. Market reaction is fairly muted on the
Nike, the TTM is triggering here. Looking for a follow through and a breakout.
Really change the equation for everyone. In 2025, out-of-pocket costs will be capped at $2.
Okay, Apple's starting to see some profit taking, Antoine, if you want to take some off.
$7.4 billion collectively. Patients will also be able to smooth out their drug costs over time, like buy now, pay later. Now, that extra drug coverage is going to mean higher Part D plan premiums, though the increases will be capped at 6%. And the reason is that insurers will face higher costs here after patients reach that $2,000 cap.
Dell looking good.
Co-insured space, and Medicare is scaling back
Dell.
Medicare payments or reinsurance, so the plans are going to be on the hook for more costs. As a result, Medicare is offering insurers some subsidies for the first 3 years to help stabilize premiums during the transition. So, David, they're saying that base premiums will probably only go up about $2, but still, this is something that everyone is watching.
Yeah, for any number of reasons. I wonder, so are the insurers more at risk here? Are we going to be talking about earnings under pressure at some point down the road? Or is it the drug companies, given some of those numbers are coming down rather sharply for some of their key therapies?
Well, to a certain extent, both of them, because remember, in
Dell.
addition to these
Okay, Dell looks good.
negotiated
Dell.
prices, the drug
All right, I'm going to
makers
take a 5-minute break.
prices of
I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is August the 15th.
quite a bit. For the insurers, the fact that they have to pick up more may mean even more pressure on the drug makers.
And we're approaching 11 o'clock. So we're looking for pivots this time of day, looking for pivots. Nike looks like it's going to pivot and move higher. Nike. All right, Dell's looking pretty good. All right, I'll be right back. Give me 5 minutes. I just want to take a couple of minute break.
Thank you. Give you a look at this market before we head to a quick break. Of course, continue our market coverage. The S&P up some 1.2%. You can see the Nasdaq having a very strong session. 1.8% is the gain. Of course, we discussed Cisco shares, which continue their gains up about 8%, off a bit of the highs, and Walmart as well. A good reflection of the consumer, it would seem, at least a positive one, is helping the market overall, and certainly those shares as well. A lot more market coverage straight ahead.
Game plan.
Good Thursday morning. Welcome to Money Movers. I'm Carl Quintanilla with Contessa Brewer here at Post 9 of the New York Stock Exchange. Today, the bubble is not in stocks. Billionaire investor Leon Cooperman on market opportunities and the presidential election.
And then we take a look at Walmart shares hitting a new all-time high after strong quarterly results and raising guidance.
Great story today on nuclear's make or break moment. The first one built from scratch. Nuclear reactor in the U.S. in the 30 years. We're going to take you live to Georgia.
Right now, let's take a look at the markets, and the Dow is up 1%, the S&P 500 up 1.2%, and look at the Nasdaq up 1.8%, as well as the Russell 2000 up more than 2%. The yield on the 10-year Treasury is up to 3.9%. Let's bring in CNBC senior markets commentator Mike Santoli now. Mike, give us a sense of the markets and how the data we got this morning is playing into the action we're seeing.
Yeah, Contessa, I guess the growth scare has been called off, at least for now. I mean, for the last, I'd say, 4 or 5 weeks, we've really been fixated on the possibility that July was weak for the consumer. You've seen this erosion in the labor market. Maybe that was going to gain some momentum. And over the last couple of days, we've seen some evidence that those concerns were maybe premature, overstated, or at least the market had overcompensated for them in the near term. So I do think right now we're getting back to rebuilding confidence that a soft economic landing is more plausible than feared very recently. I think we got well beyond that sheer panic liquidation moment of the unwind of those hedge fund trades. And now it's more about getting back toward that notion, which we had in mid-July, that earnings are going in the right direction. The Fed was going to have room to cut rates, but it could do it slowly and deliberately and on a sort of insurance basis as opposed to an urgent way. And so we'll see. I mean, obviously, the path to a soft landing is full of these fits and starts and head fakes in the data. But I do think that's what the market's telling you right now, that we didn't have quite as much to worry about on the macro front as the market was braced for.
Hey, Mike, I know it's just one example, but looking at Berkshire this week and knowing about the Apple trim and now the Ulta new position, is that a reflection of the playbook that you would use if you were going to start broadening out your exposures?
Yeah, it's an interesting microcosm, Carl, of what you might think about doing. And not even just Berkshire, but in aggregate, you saw a lot of sort of big institutional money we now know with these filings trimming the big, tech stocks that had led the way, sort of taking profits. The NASDAQ 100 was up huge in the first half of the year and sort of rotating into maybe more economically exposed, but sort of cheapened stuff. So I don't know if you want to say, go name by name and say there are lots of Ultas out there, let's say, but it does show you, I think not just that, but also even the deal flow that we've seen and the activist activity and the idea that people are trying to find value and sort of surface opportunity in names like Starbucks and other associated kind of elite brands falling on hard times. It just generally gave a sense out there that there was more to do than just bet on AI earnings momentum and the Fed rate cut.
Mike, thanks. Talking a little bit, great job on Squawk today. Mike Santoli doing some double duty over there. Let's take a deeper dive into the economy and the markets, politics with one of Wall Street's biggest money movers. Needs no introduction, but Omega Advisors Chairman and CEO Leon Cooperman joins us. Lee, what a treat for us. Good to see you again.
Nice to see you. How you doing?
I'm good. You're always so good at giving viewers a sense of how far removed we are from fair value overall. What's the temperature?
Well, I would say I have a more conservative view of the outlook than most. But it's predicated on 2 assumptions. Assumption number 1 is that we're heading towards a fiscal disaster in our country. There's nobody focusing on the debt creation in the economy. In 2017, the national debt of the country, I think, was $17 trillion. 5 years, wait a minute, not 5 years. Yeah, it's about 5 years later, we're knocking on the door, 7 years later. So I'm a little slow this morning. So currently the debt is about 35 trillion. It's a growth rate in debt far in excess of growth rate of the economy. I think we're pulling demand forward. And neither political party is focused on this. And I think that's going to be a problem ultimately, but no one knows what's going to hit. And my second assumption is nothing is overvalued if the 10-year bond belongs at the current rate of 3.9%. I've gone back and I've looked at previous periods of excess. The Nifty 50 period of 1972, the 10-year government bond was 6.5%. Avon Products was 65 times earnings. They just declared bankruptcy. Eastman Kodak went bankrupt 48 times earnings. IBM was 37 times earnings, not bankrupt. Kmart went bankrupt 34 times earnings. Polaroid 90 times earnings. These are companies that were actively being bought by JP Morgan and U.S. Trust. So the Nifty 50. So and the 10-year bond in 1972 was 6.5%. The 10-year bond currently is about 3.93. I see it on your screen. And there's nothing overvalued. If the bond belongs there, I don't think it does. I think interest rates are too low, not too high. And I expect the Fed to cut in September, 25 to 50, only because the yield curve is going to go positively slope. I think the 10-year bond will rise in yield and decline in price. So, you know, if the 10-year bond belongs where it is at 390, nothing's really overvalued. And if the deficit doesn't mean anything, nothing's overvalued. And I think the deficit does mean something.
We've
It's
heard
not timing
from,
difference.
well, we've heard from a couple Fed governors that maybe it's time to cut. We've heard that we don't want to stay too restrictive for too long. Do you not think that the Fed has created a restrictive environment?
I don't really see the evidence of restriction. The evidence of restriction would be a stock market decline. The stock market's at a record high. You know, you see broad-based participation. You see speculation in the market. And I look at past cycles, the level of real interest rates in the 10-year and the Fed funds rate is materially higher than it is currently. So, you know, I'm not academic. I think the Fed will cut. But I look at the short rate and differently than the 10-year rate. I think the 10-year rate will go up and the short rate will drop. The short rate belongs about 150 basis points over inflation. With inflation of 2%, 3%, Fed funds rate could be
Pretty obvious, Leon Cooperman.
no problem. So I think the 10-year bond.
Can't mistake that voice anywhere. Great investor, Leon Cooperman on CNBC talking about the bond market. All right, Dell doing very well. Dell starting to squeeze now, So we're probably going to consolidate in this area, Dell. Meta's at the high. PayPal's at the high. PayPal's still going.
It's interesting to listen to you talk about the Nifty 50, Lee, and I wonder how you think about that population of popular names versus, I guess, the 7 that we talk about a lot today.
I think the
Do you feel-
Magnificent 7 today are much better companies than the Nifty 50. And so, you know, I think we're in a market of stocks rather than the stock market. I was in a conference call this morning with a stock that is down this morning. It's so ridiculous. It's so stupid. You know, if the company comes down now to $200 million buyback, which is about, I don't know, 12% of the company.
What was it? What was the call?
It's called Fidelis, F-I-H-L. And I'm buying it as we speak.
It's health insurance?
I to buy today. It's an insurance company. Okay, Fidelis, F-I-H-L is the symbol. So the street is focusing on the wrong things. The company has a couple $100 million of excess capital. Their book value at the end of the quarter was 21 3/4. They earned about 20% on book this year.
Dell.
$4 or so in earnings. And the stock is down. It should be up, in my opinion.
Okay, Dell.
Opinions are like noses.
Dell.
Everybody has one. You know,
We just showed your sort of favorite stocks right here, not just Fidelis, but Cigna Group Health Insurance, Elevance Health Insurance. How does the announcement from the White House today on prescription drug prices influence your view on the health insurers?
well, the only thing that worries me about the health insurance is they're living up to largesse of government. But, you know, that's been the case for many, many years. They're selling at low multiples. They have generating a lot of excess capital, buying back stock, so on and so forth. So, you know, I tend to look at, valuation levels that motivate me. I'm a value-oriented investor. And, Elevance is a well-run company, buying back lots of stock, and selling about 13 times earnings.
You also are interested in apparently mortgages because you've got Mr. Cooper mortgage loans in here.
Mr. Cooper, I didn't mention Mr. Cooper. It's extremely well-run. I got 10 bagger. I'm up tenfold in my investment. It's extremely well-run company.
That's my mortgage company, Mr. Cooper. It's a weird name, but that's what it is. Okay.
And Arbor Realty Trust, which also deals in, but at this time, commercial mortgages and multifamily loans. Are you concerned at all when you look at those about the costs of insurance? Because I've done some reporting, Mr. Cooperman, about investors walking away from big real estate deals because the cost of insurance eradicated any potential for profit.
I think you gotta be more specific. I think apartment real estate is very well positioned. We have a lot of immigration to the country. You know, workforce housing is in demand, and you got to make sure that they were underwritten properly. So one of my favorite positions, and I think the guy did a fabulous job, Ivan Kaufman of Arbor Realty. Stock yields 13%, and mainly workforce housing.
Nike pulling back. All right, Dell, Nvidia at the highs. Dell.
He's 100% right, but he's not in commercial real estate. In the main, he's in apartment real estate. Very well-run company. I think it's 13% yield is safe. So, you know, I'm very bottom-up, very stock-specific. I have a lot of exposure in energy, mainly what's going on in the Middle East. I think you got to own energy. You know, the world's all crazy. I think the big problem I have is the market is 20 times earnings. When I look at the political situation in the country, we have guns and butter. We're going to have crowd again ultimately. We don't have it right now.
Dell starting to consolidate. Watch Dell consolidating. Don't buy the high of the day. That's not the purpose of the chart that I just posted in the trading room. The purpose is to show you that the developing trend since Thursday of last week, identifying a potential follow-through, buy high, buy the dips, sell into rips. Okay, SPY at the highs. Looks good. Dell. Looks like a little profit taking coming in. Amazon still pushing. Amazon.
Lee, really quick before we let you go, the two of the moves that might interest viewers are Citi and Microsoft. You want to talk about either one?
Yeah, well, I own Citi. I own it right now. I moved out of the banks. I think the banks have a
Let's see. What's ARM Holdings doing? Amazon continuation. Amazon looks good on the retail sales number. Amazon still going. We can debate it, but price dictates what we want to do. We're about to give us a buy signal on the 4-hour chart on the right. You can see where supply is overhead around 188, currently trading 178. So you got about a 10-point move potentially in Amazon.
Again, it comes back to is the fiscal situation in the country problematic? We have two people running for president. I don't hear them talking about the deficit. I was busy to say, I read the Democratic platform, 80 pages long. I read the Republican platform, it's 22 pages long. I relate more to the Republican ideas, but I don't relate to the candidates. So, you know, I think a nation of 330 million people deserve better choices, but it is what it is.
So who do you vote for then, Lee?
Well, I'm voting strictly, this is my view, I'm voting strictly Republican on the House and the Senate. I'm not voting for the president because either candidate does not excite me.
You abstain from the presidential election?
I will write somebody in. Maybe I'll write you in. Are you born in America?
If elected, I will not serve.
Lee, that's interesting.
I'm 81 years old, so I'm too old. You know, I'm in better shape than Biden. But, you know, I have my own health issues. But I would say that I don't.
Leon Cooperman, good guy.
Look, you have to be flexible. 2 years ago, J.C. Vance was crapping all over Bush and Trump, and now he's his running mate. And 2 months ago, I think people would have said that the worst vice president in the history of the country was
Pinterest, nice turn. By the way, Frano.
My problem, I think Trump has better, superior economic ideas. The deportment is disgraceful. You know,
Pinterest on the move.
He mocked John McCain, a true warrior. He basically mocked Nikki Haley's husband, who's serving with honor in the Middle East. And then he denies saying this, but there's a question about whether what he said about the people that gave up their lives during World War II that are buried in Europe. You can't be a president.
Okay, McDonald's clearing anchor VWAP, good. McDonald's, watching McDonald's.
And I think that we have means. What I've said
McDonald's.
your shows.
Okay, clearing the 200-day. McDonald's also clearing the 200-day.
That will define the revenue yield to the government. The government's got to size themselves that revenue yield. Well, if you talk to Bernie Sanders as a communist, he's not a socialist, he says 90%. Elizabeth Warren says 70% plus the wealth tax. Paul Krugman says 64%. You know, and the guy
PayPal's still going. PayPal.
The black conservative economist, and I guess
PayPal strong like a bull. Wow, nice move on PayPal. Don't want to buy the high today, but looking really good. Okay, Meta, what you doing? Meta looks like it could do something here. Amazon, very strong. Amazon got about $10 to go.
9 years ago, Simpson Bowles talked about tackling Social Security. That intelligent views, nothing was done. Now Manchin and Romney are talking about it. The problem is 3 times greater than it was 9 years ago.
Yeah.
We just, you know, we have a system of government, of leadership in a crisis. There's no leaders in the country. We're crying for leadership, but we have no leaders. And that's the trouble. And the market is too high, in my opinion, but you have to find lots of stocks that are reasonably priced.
Okay, Bitcoin looking good too.
When the Fed cuts and the market does very little because the 10-year bond yield rises in yield, that will be a wake-up call for people.
NVIDIA.
Lee, appreciate it. Covered some important ground. It's always a treat for our viewers when they hear from you. Thank you.
My pleasure, and you stay safe and stay healthy. Thank you.
Lee Cooper.
Still to come this hour.
Yeah,
an issue that's
2026
weighing on
calls.
auto sales.
Yep.
That's next.
Watching Cisco as well. Top and bottom line beats, along with the announcement it will cut 7% of its workforce, second major round of layoffs this year. In February,
PayPal
5%.
looking good.
Chuck Robbins, we'll hear some sound.
6750. 6750s. 6750s. 6750s on 2026 December. PayPal. All right, PayPal having a good day. David mentioned, I believe yesterday, if not earlier. Okay, we're into supply right now. As you can see on the right, let's look at the daily. Okay, we clear this level. That'd be good. Okay, that'd be a nice breakout. That would be a nice breakout. Okay, so next level would be up here at 76. Looks like PayPal wants to go. PayPal. PayPal. Yeah, it just keeps going. PayPal. All right, let's see what PayPal's ATR looks like. PYPL. All right, so it's probably up most of its ATR. ATR, yeah, $2. ATR is $2. It's up $2 basically. So we're running into some resistance levels. If you like PayPal, wait for the dip. Don't buy it right here. I know it's hard, but wait for it to dip a little bit. If you didn't get into it earlier this week or yesterday when David was mentioning it, Buford, nice trade on PayPal. Let me go check when he mentioned it. PayPal. All right, so IWM looking for the follow through. Okay, got rejected right at the 200-day. Let's see what the intraday looks like. Intraday. All right, looks like it could get going here. IWM. That's tomorrow's calls, huh? 212s. Delta's 27.
Welcome back. While auto sales have seen steady growth, new risks are now rearing their head. Phil LeBeau has that part of the story this morning. Hi, Phil.
All right, IWM looks like it wants to
I want to show
go.
you some data that we have obtained from Cox Automotive. Jonathan Smoke, the chief economist there, does a wonderful job in terms of tracking auto loans, defaults, delinquencies. Well, look what he has discovered as he's been looking at why auto sales have just not been as robust as many have expected. When you look at the auto loan defaults, now these are people who have basically said, I'm not just late a month or two. That's it. They're defaulting on their loans. 3.06, higher than pre-pandemic. And you have to go back to 2009 to find the recent high water mark of 4.1%. But by the way, that 3.06% right now, that's the highest since 2010. So what has Jonathan Smoke discovered?
212.
Basically, that auto lenders, both the captive ones that are run by the automakers as well as banks, they are tightening their credit standards. In other words, what used to be acceptable in terms of getting you into a new vehicle loan, it ain't acceptable right now. The average loan rate for a new vehicle, for an auto loan, 9.84%. You put all this together, and what you have is an auto industry that was expecting auto sales to be closer to 16%. They're not there right now. In fact, if you look at auto sales for this year, on track with where we were last year at 15.5 million. Certainly better than it was a few years ago, but it's not close to the 16 million many were expecting. As you take a look at shares of Toyota, General Motors, Ford, Stellantis, keep in mind that the average vehicle price, new price paid, or new vehicle price paid, is $48,401. Not far from the recent high in terms of average transaction price. The average incentive is rising. It's now over $3,300. Not quite to the 10% of average transaction price that we saw at the high watermark for the industry. But clearly, what you see is an industry trying to figure out, okay, how do we move sales a little bit more? If they're not going to be doing it through tightening or through loosening up auto credit, they are tightening their standards right now because you're seeing the default and delinquency rise.
It's so interesting too, because then even if consumers do buy a car, then they get hit with insurance prices they may not be expecting because car insurance premiums have skyrocketed so dramatically. It's expensive to buy a car.
It is expensive. Bottom line is this, Contessa. When it comes to buying a new
Okay,
vehicle,
IWM looking good.
what can you afford? And the average new vehicle monthly payment is like $780. Average for a new vehicle. Used or leasing is probably closer to like that $580, $600 mark, and used is down around that range too. Those are dramatically higher than they were a few years ago.
Although down year on year, at least that's what CPI said yesterday. We'll see how much relief we get, Phil.
Yeah.
Thanks, Phil LeBeau. When we come back, Oppenheimer's chief investment strategist coming up next on why he says ending tight monetary policy is easier.
Yeah, I like IWM.
Maintain the second highest target on the street for the S&P when we're back in 2.
Looking good. Yeah, Lyft looking good. Okay, Lyft is working. Okay, Lyft coming off the lows. Lyft. Did they reported earnings, right? Lyft. 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 Next earnings is November 6th. They got all 4 metrics green. Lyft looks good. Lyft. When did they report? What do you want, Kat? What do you want? You want some of these? Okay. November 6th. Right, November 6th. All right, what do we got here? Lift. November. Let's look at November, October. Okay, you got open interest at 12. All right, that looks okay. Looking at buying some calls on Lyft. Let's see. All right, so Lyft 10. Lyft. Okay, that looks pretty good. Lyft looks good. I'm more comfortable trading Uber, but this looks pretty good. Revenue growth is 40%, earnings growth 22%. Surprise, they beat top expectations. Revenue surprise. All right, so they made $1 billion for the quarter.
Walmart now is the biggest gainer on the Dow Jones Industrial Average because of what happened today. So it's up 39% for the year.
Walmart.
Leading the Dow Jones Industrial Average. So obviously they're dragging up all the retailers with them today, including its competitor Target.
Lyft. Coming off the lows, Lyft.
Just gets them essentially break even.
Like Dell, if you like Dell a week ago, this looks like it could break trend. Lyft. What's Dell doing, Dell? Dell looking good.
This is stuff that moves more than when the overall market moves, when risk goes on. And what's in it? Well, it's tech stocks. Right here, ServiceNow. And this is one of the big holdings in that ETF, up 1.2%. That's been a huge mover for years and years. It's been on a regular basis. But also companies you don't think of, like Carnival. It's a high beta stock. It moves a lot. If the S&P is up 1%, Carnival might be up 1.7%, and maybe look 4.5% move. That's a high beta name.
Dell at the highs. SPY looks like a little profit taking.
Maybe the Fed's not going to cut quite as much here. So all the regional banks are doing well. KeyCorp's having a nice day. Huntington Bank shares.
Okay, at this point, I'd be waiting for BNC pivots. If you're thinking about buying anything, I'd wait for BNC pivots.
What is that? Oh, food stocks. General Mills generally is not doing too much. McCormick, Campbell's, Conagra, Procter & Gamble. These are all consumer defensive low beta names. Another group not doing very well, but understandably with rates a little higher are the utilities. They've had decent runs recently. This is Eversource.
McDonald's.
When rates are higher, utilities compete for the yield. Eversource is a 4.4% yield. Okay, so this is competition.
McDonald's, looking for McDonald's to follow through. All right, some decent buying here on McDonald's.
So in theory, that's not a bad thing.
Hourly chart. Very nice move on McDonald's.
These tend to move to the downside. So the bottom line here is you got earnings still stable.
Okay, McDonald's. Supply up there north of 280. So if we could get stay above the 200-day moving average, we should be fine on McDonald's. Okay. McDonald's looking good. Okay, we just need a little bit higher for Skier and a few other people that are in McDonald's looking to make a profit there.
early last month. We're at 5,500 now. S&P having a good day. What do you think about when you hit that target?
IWM,
Well, Contessa, thanks for having me on the show.
nice gap up on IWM.
You know, we came into this year.
Spent the last 9 trading days below the 200-day, or the 50-day rather. Bounced off the 200-day Monday over a week ago.
We held it through the recent pullback. We think probably 5,900. We feel comfortable.
All right, so this is day 9 on IWM. IWM day 9.
Worst, slightly bumping landing if we get a tantrum if the Fed doesn't give the market 50 bips in September and goes for 25 instead. I'm not sure. But essentially, things are looking good. We've got resilience related to the consumer, resilience related to earnings. If you look at the S&P 500, 5 sectors, double-digit earnings growth, cyclical still outperforming defensives, and beginning of a broadening of the market to show some respect to the smalls and the mids, which we like as well.
When we're looking at international, for instance, Alibaba today missed expectations. We're seeing some difficulty with the China consumer. Give me a sense of where you see global markets and whether the sort of entrenchment that we've seen to pull back in and focus on U.S. investments continues.
We've been overweight U.S. equities versus international for the last 12 years, and I've been a global investor since about 1985.
All right, Tesla.
Markets in 83.
Tesla.
Was my first license in 83. It was the second term for Paul Volcker. We'd have to say
Maybe some credit spreads. I put credit spread on Tesla.
if we're playing, we're intermediate.
185, 180, something like that.
Focused on the diversification away from one country centricity in terms of the global supply chain. So when we look at this, we think China has got its problems that are related to ideology and policy. They're going to work it out in their own way. In the meantime, I help to think, Japan, Korea, Mexico, Vietnam, and a variety of countries, even in developed nations. That's why I mentioned Japan here. Are likely to benefit along with India as we get this diversification. But we think the dollar has to weaken somewhat, not weaken on some kind of a structural problem, but just it really has been on a high perch because the U.S. has done so well, and we've also had as much trouble as we've had since 2008, on through the pandemic, the problems getting out of things. Then this is a workout market, is what it is.
All right, Tesla looking very strong. Be interesting to see what 13Fs.
500 top gainers right now. You've got Ulta Beauty at the top of the list with an 11.3% gain. Lululemon's on this list with more than 6%. United Airlines, Tesla as well. Where do you see consumer discretionary in terms of?
Okay, SPY's still going, looking good.
Consumer discretionary has
Broadcom, nice follow through. Steven, good job.
now and throughout this year. We didn't give up on it when a lot of players in the market pulled back on it, acted as if the consumer is going to disappear. We're not surprised to see what's going on. If I look at my screen right now, consumer discretionary as a whole is the best performing sector today. Information technology second, industrials third. Those are 3 of our top 4 or 5 sectors in terms of our recommendations. So we're feeling good today. But while we have the courage of our convictions, we allow for the fact that there's never an all clear signal sounded over the market. The things are looking much better than worse.
John, we really appreciate you sharing your insight and perspective with us. Thank you.
Thanks.
Dow's up nearly 450, close to session highs. Let's get a news update with Silvana now. Hi, Silvana.
Hey, Carl. Good morning to you. The United States announced sanctions today on 1 individual and 6 companies tied to the Houthi and Hezbollah militant groups. The Treasury Department said the targets are involved in the shipment of Iranian commodities, including oil and liquefied petroleum gas that serve as a primary source of funding to the Iranian proxy groups. Ukraine's president says the country's troops have taken full control of the key Russian town of Zubja amid Ukraine's incursion into Russia's Kursk region. A top Russian commander has already disputed the report. The town of about 5,000 is home to a measuring station for Russian natural gas that flows through Ukrainian pipelines to Europe. And forecasters say the Category 1 hurricane Ernesto continues to gradually strengthen as it heads toward Bermuda. It is packing maximum sustained winds of 85 miles per hour. The storm left some 730,000 customers without power in Puerto Rico after it passed nearby the
All right,
U.S.
McDonald's,
territory on Wednesday as a tropical storm and dumped more than
MCD.
inches of rain.
Let's see, earnings, MCD.
Ivana, thank you for that. After the break, Walmart
Missed.
surging to a new all-time high. Does this stock still have room to run? We'll discuss that right after this quick break.
I have prices above the 200-day. What's McDonald? Very interesting. 21. Oh, it's a 21. What is that? 200-day. McDonald's looking for a move towards 280. All the moving averages are turned up. All the moving averages are turned up. Let me see what market surge. Maybe that's a different number. Okay. Where is my, there it is, cell phone.
Dave, sadly, are you worried about a recession?
No. I think all the indications we see on the ground are strong. Thank you.
Thank you, Dave.
Thank you. No, thank you.
Great conversation.
Thank you for letting me be myself again.
Kevin Green will join us. Take a
Thank
look at
you
Alibaba after
for
its
letting
earnings.
me
We'll break down the
be
numbers,
myself
example trade as well here on Trading 360, and a look at Ulta Beauty, which is
again.
jumping. We'll be right back.
Where did, oh, there it is over there. Bum, bum, bum. Let's see. McDonald's.
Ethan, how's my favorite client? Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech. Trends?
All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
It's time to look forward
Find the next trend.
from every click to every tip.
There's no fear of missing out on next trend investing.
Available anytime, anywhere, on any
McDonald's.
device for free. Empower your portfolio with the Schwab Network.
Shares of Walmart today, all-time highs after beating on the top and the bottom line for the second quarter. Company also raising its outlook for the full year, noting the steady health of the consumer. Getting those results as retail sales data also comes in better than expected today. All this raises the question, are we reaching a turning point in the health of the U.S. consumer? Joining us this morning is Jefferies Discount and Specialty Retail Analyst Corey Tarlow. Corey, great to have you. On the Walmart guidance, particularly, do you think it reflects a better rest of the year, or is it just baking in the strength of the year so far?
Good morning, and thank you for having me. So the messaging that we've heard from Walmart today and that we've been hearing for the last 2 or 3 quarters now is one of consistency. And there's been a lot of talk from a lot of other companies about some cracks that we're witnessing in the consumer. And Walmart to date really is just seeing overall very consistent behavior. And on the outlook, we're expecting most of the same to be continuing ahead. So it's just more consistent consumer behavior with what we've seen in prior quarters. And so the higher outlook is really just the reflection of flowing through the better results in the first half to the full year guide.
Do you think the locus of strength from here on out is going to be at the discount end? And if so, what does that say about the consumer right now?
Well, I think the interesting thing as it relates to Walmart is really that they've been, for the last couple quarters now, again, and still gaining share across all income cohorts. And it's really led by higher income households. And so if you think about what's always made Walmart important, it's value. Their ability to acquire and retain these higher income customers that previously did not shop at Walmart. Let's look at the growth of e-commerce, for example. That business was doing, call it $25 billion only 6 years ago, and it's now running at a rate of $120 billion a year. And by enabling same-day delivery, next-day delivery, and charging a little bit of a premium for those options, specifically same-day delivery within, say, a 3-hour window, you now have the convenience that I think a lot of consumers desired and have desired for a really long time. And that's really where you're seeing the consumers gravitate toward within the Walmart ecosystem. And it's going to mean more share gains ahead for the company.
I'm just curious, how do you marry that to this bigger outlook for the U.S. consumer that is so rosy? If you have customers who didn't shop at Walmart before and now are opting for Walmart, doesn't it indicate like sort of a budget choice for them rather than shopping at Target?
Yeah, it's a great question. I think one of the things that we really appreciate about Costco is that Costco has been great for about 40 years. And they've had the benefit for over this long period of time since they were founded in 1983 of looking through the world through rose-colored glasses and looking through the world as a market share gainer. I think that Walmart is now maybe not rose-colored glasses fully, but we're starting to look through the world through the lens of being a market share gainer. And so, to your point, Contessa, in an environment where you're starting to see some cracks, we are seeing more customers go to Walmart, and they're gaining market share from plenty of other retailers. Look at some other mass merchants, traditional grocers, even dollar stores and pharmacies. So the share is coming from so many different places, and it's all been to Walmart's benefit.
And Target reports next week, so we'll have to see whether we get some similar themes emerging from Target when that happens. And I know you'll be paying close attention to that too. Corey, thank you.
Thank you.
Well, after the break, it's been nearly 2 months.
Okay, Dell continues to push higher.
In San Francisco, the reaction of residents to
I'm reducing some positions. You know that I'll be out tomorrow. I'm going to drive my daughter to college. She starts next week. My son starts high school next Monday. Lyft looking good. Lyft is working.
It explores the secret life of a young Russian oligarch who was part of the historic prisoner swap between the U.S. and Russia earlier this month. You can follow and listen wherever you get your podcasts.
Lyft working. Oh, wow. Super Micro looking good. Nice job. Okay. E-Tard? You mean E-Train? All right. So what was the scuttlebutt with Lyft? Wasn't there somebody on a 13F somewhere? Lyft. Tepper. David Tepper's in Lyft. Okay. I'm thinking October. Okay, McDonald's. Finally, McDonald's doing something. This is. I think this is a great example. Great example of why you want to wait for a dip. Okay, this washes out anyone. It looks like a cup and handle too. This is washing out anyone who is impatient. So you don't want to buy the rip. We also, when a first attempt to get above the 200-day or the 50-day, as we saw with the S&P, the first time we get above the 50-day or the 200-day, we want to see what happens. Okay, same thing here with McDonald's. Okay, so it moves above the 200-day. Give yourself a little time, wait for a pullback, and then buy your options. On that reversal candle that we saw here on Monday, if we go and look at that price action on Monday, okay, so the 12th, you get this little push lower, and then you're buying your options in here off the lower Bollinger Band on the dip, and now you're doing really well. We're probably going to take out 275.
Laying on the horn late at night. Big deal. We have taxi drivers doing it here. Tech anchor Deirdre Bosa has the latest. I don't mean big deal because honking the horn really drives me nuts.
No, I mean, at least you can tell the taxi driver to stop honking, right? You can't really tell a driverless vehicle to stop doing that. You can tell to file this under things that go honk in the night. These are Waymo self-driving cars, which are all over the San Francisco roads, Bay Area roads increasingly. At night, they must park themselves, and in doing so, this happens. They're backing up and honking and keeping residents up at night. Waymo, which is part of Alphabet, calls this feature useful, designed to help avoid low-speed collisions by honking if other cars get too close while reversing towards them. Raising the question, are they able to hear? Residents sure do. This wasn't already the most San Francisco story ever, guys. There is more.
Okay, McDonald's looking really sharp.
She started a live
So
track of the activity made up.
Keep an eye on pullbacks. Those are your areas where you want to buy both intraday and daily, weekly.
Everything from the honking to cars that become stuck mental breakdown, looped erratically, stopped repeatedly.
McDonald's on the move.
Now, Waymo tells us that they have fixed the issue through a software update, but as a San Francisco Bay Area resident myself and an early Waymo adopter, I cannot say that I'm surprised. The rollout, guys, over the last few years has been bumpy. Safety concerns, public backlash. Still, though, they are expanding its service area, delivering tens of thousands of weekly trips. This week, guys, this is a big deal. They're testing on freeways in the Bay Area, which could open it up to a lot more people.
So I mentioned that I just tried it out 2 weeks ago when I was in San Francisco with my children. We thought it was so cool. But the thing that I was so impressed with is that someone was trying to make a sharp corner turn, and the Waymo car actually backed up to make room for the semi-truck, which some humans don't even know how to do. So, or they don't. So I was super impressed with it, and I can see
McDonald's looking strong. Supply is 281. McDonald's.
That need to be ironed out, right? Which goes with any new technology, but I also find them incredibly convenient. I find them to be, in a lot of ways, safer, and that is really the point here. Is that robotaxis are supposed to be safer than human drivers. They don't get tired. They don't drink and drive. There's a whole list of things, but we're still in this period where features are still coming to light, like the honking, right? These need to be negotiated. I took a Waymo on my way to dinner last night, and it's funny, I'll actually sit in the front seat, right? Because there's no driver, so why not?
Why don't people sit in the driver's seat?
You can't. You can't. That's like a big no-no. If you even lean over and touch, go close to the wheel, there's someone that'll come on the speaker and yell at you.
We've done a lot of coverage in Newtown, Beijing. We're going to see Arizona.
Now that we're above the 50-day, dips can be aggressively bought.
Deirdre Bosa, thanks. When we come back, nuclear power's make or break moment. We're going to go live to Georgia with our Pippa Stevens.
Hey, Carl and Contessa, I'm 3 hours east of Atlanta, where the first nuclear reactors in the U.S. in decades are now connected to the grid. We got an inside look at the plant, and we'll have all the details coming up next.
Oh boy. Everybody having a good day, hopefully. All right. Cancel.
Run, but I think you really need to listen to what.
All right, looking good today. Looking good.
The future demand for AI investment and for other industries is going to be key, and we really aren't yet in the know-it-all area of different AI investments. So I think it's going to really be taking live data and live company commentary and really seeing, hey, like, do you personally see a large growth run for this company or not?
Pinterest. Let me go look at Pinterest.
And other areas. You also in your notes had Internet of Things, electric vehicles.
Pinterest turning the corner. Frano got us interested in these. September calls. What did you buy, Frano? Did you buy shares or did you buy calls? All right, so it consolidated for a couple of days and now it's starting to break higher. So it'd be nice to see if there's anyone in 13F. I mean, because it's good company, good advertising. If you ever use Pinterest, if you're looking for project ideas, always good to look at Pinterest, see who else has got things. I love the section on anything around the home, like garage, storage ideas, shelving, build your own, that sort of thing. I'd like to do that in the next few weeks. Some shelving in the garage to organize the shovels and all the other crap that I've got piled in a corner. Hate clutter. Lyft is working. McDonald's looking good. Looking good.
Ladies, I see you every day at 11 a.m. and 2 p.m. here on the Schwab Network. So I'll see you too.
Bum, 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 bum. Man, I miss Janis Joplin. She was a great singer. Okay, you can see McDonald's on the right. The next level of major supply, right around 280, 281, 282. Let's go to the videotape. Let's look at the 4-hour chart. 4-hour. Okay, so 280 is where you got a million shares there, but we should be able to get through 280. Okay, so we're looking for 280. Looking for 280.
Welcome back. As the U.S. deals with increasing energy needs, could nuclear power once again gain support? Our Pippa Stevens is in Waynesboro, Georgia this morning with that story. Morning, Pippa.
Hey, Carl. Well, I'm beneath this 600-foot link tower in the background.
What's not working? I'm sure there's some things not working. What's Intel doing? Intel. Intel looks good.
Built reactors in the U.S. in 30 years. Nuclear energy is getting a fresh look for a number of reasons. Russia's invasion of Ukraine has spotlighted energy security. Nations worldwide are trying to curb emissions, and power demand is now meaningfully rising for the first time in decades, including from the data centers. Southern Company CEO Chris Womack told me they are ready to meet that demand.
We have a lot of conversations with the tech industry. I mean, they're very excited and curious about how the supply will be met. And I always tell them, I mean, there will be power, and we'll figure out a way to do this together.
He said that nuclear has to be a part of that. Now, the industry is hoping that this plant will jumpstart new builds across the U.S., but the price tag, including big cost overruns here at Vogtle, has always been an issue. Now, I saw the inside of the plant yesterday and was struck by just how complex it is. Miles and miles of pipes and cables, both above and below ground, thousands of components, each with their own unique ID number. And each of these reactors behind me weighs more than the Statue of Liberty. Guys?
Incredible stuff and great stuff this morning on Squawk as well, Pippa. I wonder, can you talk about the difference between building new and some of the restarts that we're getting in other parts of the country?
Yeah, so it's crazy to think that now we're thinking about reopening some of these mothballed nuclear facilities. But as someone told me, there's nothing more valuable than energy infrastructure that is already up and running.
McDonald's still going. Woo, there goes McDonald's. Okay, Skier, there goes McDonald's. You still in it, Skier?
750,000 gallons of water in there that in the unlikely event of an issue with their cooling, that could just drop right down and
Cool.
heralded as the future and incredibly safe. How much power are they going to contribute? So all 4 reactors here can supply 2 million homes, so each one supplies 500,000 homes annually. So this is now both the largest nuclear plant in the U.S. and then also the largest clean energy source in the U.S. And while nuclear is very expensive, these plants will be online, these reactors, for between 60 to 80 years. And also the capacity factor is so high, more than 90%. Compare that to solar, which is less than 30%. And you can see why some people say nuclear really has to be part of the conversation going forward in this baseload clean energy.
Although solar got a little love today as well. GM signed a landmark solar purchase agreement for 3 of their assembly plants for 15 years. So a lot happening in the energy space, even as you're on the road, Pippa. I appreciate it very much. Great to see you there. Pippa Stevens joining us from Georgia this morning. Meantime, close to session highs here, 5530 S&P, which, as we mentioned, takes the index back into the green for the month.
NASDAQ and Dow Jones also higher. And with that, we leave you for Money Movers and head over to the halftime report. Have a great day.
All right, guys, thanks so much. Welcome to the halftime report. I'm Scott Walker. Front and center this hour, surging stocks as new reads on the economy come in better than expected. We'll discuss. Joining me for the hour today, Liz.
All right. Got to do some exercise. Man, I'm stuck to this chair. All right, let me do some push-ups and some stuff, some core, while we're waiting on the future's pulling back a little bit. Maybe you want to take a little profits off the table. A lot of stocks look good, but don't want to get too greedy. McDonald's at the highs. Okay, I'll be here. I'm not going anywhere.
Sure feels like it, Scott. The economy's doing what we thought it might. The Fed is doing, I think, it's going to do what we thought it might. I think that 25 basis points might not happen in September. which could cause the market a little bit of nervousness. We're still kind of going back and forth, Scott, on this. Is good news, is bad news, bad news. We're still trying to figure that out. I still think it's all part of this broader normalization trend, but earnings have been good. The economy's good. The dual mandate seems to be on track. And so I think we're still headed toward higher highs in the markets. And last week was, as I said, live on the network on last Monday. It was Christmas came early.
Yeah, Liz, I mean, it felt last week, certainly last Monday in the throes of the huge decline that Goldilocks had checked out and wasn't moving back in anytime soon. But here we go with inflation going in the right direction. And now you have these economic reads really easing some concerns about the state and the health of the consumer.
Yeah, so here's what I think has been happening for the last couple of weeks. We've gotten more sensitive to the economic data. So, for example, initial jobless claims today came in and surprised by 8,000 to the downside, right? So 8,000 better than we expected. We're having this big rally today. Last week, they surprised by 7,000 to the upside. Those are not big spreads, but the market is overreacting in the near term. So I think we've gotten more sensitive to some of this macro data, which is a risk because it just feels jumpy. But to Belsky's point, the economic data is solid. And right now, the consumer continues to look.
I like that she just called him Belsky.
It was a year ago, but still okay. And results from
That's
Walmart
funny.
show us that, although I think
Belsky.
we have to be careful taking those in because we have heard about a lot of
I like
consumers
Brian
trading
Belsky.
down to Walmart. So I think there's some cannibalization going on there. Walmart's gains.
Antoine, if you're listening, Bitcoin is still going, buddy.
There's not this big glaring headline of consumers are weakening, pulling back, and things are hitting the skids. Economic data right now is perfect. It's at a perfect level. If it goes further down, people will get skittish.
That's why
If it's
we asked the
people
question,
will
right?
get skittish, right?
Right.
But right now, it's like we can hold this line, everything's okay.
So, Jimmy, discretionary is leading today, up near 3%. Amazon's up. You saw Brinker today. That stock's, by the way, up 50% just about year to date. There is, of course, the Walmart news of today. They raised their guidance. The stock hits a record high, and it really relieves some of the pressure, I think, that was on the minds of investors that, you couldn't have. We know there's the disparity between sort of the higher end, the lower end of the consumer. What you couldn't afford to have happen was both ends of the spectrum start to weaken. And, look, it appears, for whatever it's worth, that the consumer is hanging in, well enough.
The consumer is hanging in
For now.
well enough, and relief is on the way. Brian, I hope you're wrong that we don't have to worry about a rate cut in September. I think that would be foolish of the Fed. But let's just say that the futures market is right. That's not always the case, but let's just say you get 25 basis points, which is where we reside for September, and then a cut at each of the next two meetings. That's going to take a lot of pressure off of credit cards, off of auto loans. By the way, Scott, you've already seen that mortgage rates have come down, right? This is going to help the housing market, which really has been flat on its back. So in terms of Goldilocks, I want to say this. Unfortunately, the industrial production numbers today, not that great. But with relief on the way in the form of lower interest rates, and I really do think they will cut at least twice, maybe three times, because they can. Because it's a mid-cycle adjustment, not because the economy's falling out of it. That will help all those rate-sensitive areas. It's going to look pretty good. I feel good, Scott. I feel good.
Belsky, you bought Walmart.
I did.
You must, so take me through this trade quickly, and then we're going to get Leisman's view on what's happening as well.
Walmart's one of our core positions in the value index, in our value portfolio. It has been for a while. And it's also one of our dividend growth names. And so why we like Walmart is because obviously it's America's grocer, but they continue to operate in a fashion where same-store sales are going up in an era where we're worried about consumer discretionary. And I think consumer discretionary and consumer staples being an expensive sector, quite frankly, but discretionary has become so select and really speaks to the stock picking orientation of the consumer, and that's why Walmart and others very select names are working in consumer.
Yeah, Steve Leisman, 1 week out from Jackson Hole, the Fed's got to feel pretty good about all of this, right? It also has to, in some respects, validate what Fed Chair Powell said 2 weeks ago, that, he thought they were in a pretty good spot, that things were working how they needed them to work.
Lift continues.
I think that's right, Scott. I think that the problem I hear, going
Pushing
around
the highs,
and
lift.
talking other investors and watching how these markets trade is they're having trouble digesting and forecasting and trading the nuance of a soft landing. And I think that's really the problem. I think what they want to know is, okay, are we headed for recession? Yeah, okay, I know what to do. Are we having growth without, strong growth? Okay, I know what to do. But this idea of a soft landing, which comes with this mixed data. Some of the data is going to tell you it's weak, and some of the data is going to tell you it's strong. It's going to be a little bit inflationary data, but overall the trend is downward. It's a very difficult nuance to trade and figure out what to do. And you see that in the volatility of the bond market, where yields shot up this morning on the better retail sales. I'm seeing a good belief, by the way, in the GDP reports after the retail sales are morning in that 2.5% range. So that's not very weak. The jobless claims tell you that, hey, we're not seeing a wave of firing. Maybe there's not a whole lot of hiring going on, but we're not seeing a wave of firing. So I think Powell, it's difficult for him to navigate this as well as it is for investors, but he's got a series of good choices here, as you suggest. He can cut a little bit, take a little bit off the top here because they're still restrictive. And our new Fed president from St. Louis talked about that this morning, Alberto Musalem. He said, hey, look, we're still restrictive. We're modestly restrictive. There's room to cut. I'm hearing that from a lot of folks. So, yeah, it's a good place to be in. And it's interesting to me. I think Jim was alluding to this. While there's debate in the market about how they get there, there's still pretty good confidence in taking 100 basis points off this year.
It's interesting, too, that we continue to have the debate over what is the right amount to cut. 50 basis points, and the probability of that continues to drop, and dropped again this morning with the better than expected economic data. But as you were talking about earlier, it's almost the wrong way to look at it, I think, because they could cut 50 simply because they're just too restrictive, not because the economy is so weak that they need to do 50, but they need to normalize at some level of reasonably rapid speed. So why not?
Yeah, that's the idea. I think Powell lacks a little bit of confidence in his ability to reduce rates in a way based on that reasoning. That idea was out there a while ago. I forget who was championing it. There was this idea, maybe it was Goolsbee, that, hey, if you don't cut in the face of lower inflation, you're becoming more restrictive, and that's not what you want policy to do. So this idea of measured cuts, of being able to restrain the market's projection of further cuts ahead. And I'll just do a little quick math for you, Scott. If you think about a neutral rate between, say, 2.8 and 3%, and the Fed funds is at 540, well, you have 240 basis points to play with. You can take 40 off or 50 off or 100 off and still be restrictive and guard against that risk of greater weakness down the road, but still be putting downward pressure on inflation. That's an idea that's out there that makes a lot of sense to me. My recommendation for the Fed is pick a neutral rate and go with it. You've got to believe in where you think neutral is and set policy for that. You can't say, oh, well, neutral could be between 3 and 500, 3% and 5%. That's not a way you can run this railroad.
It's interesting to have all this data come a week ahead of the Jackson Hole as well. Steve, thank you. You'll be following that, obviously. And now it takes on even more, I guess, an interesting tone given what's happened with this data. That's our senior economics reporter, Steve Leisman. So, all right, we go back to the market. We've had this tremendous Liz rebound from the depths of last Monday. Wells Fargo raises the target now for both 24 and 25. For 24, they go to 5,300 to 5,500. Now we could debate that a bit as well. They were 51 to 53 before, so in many respects, they're just getting caught up to where we are. In 25, they go 5,900 to 61. So they're looking for reasonably decent 2025 as well. And then we find that, the retail investor in the dip that we've seen is buying, far exceeding what Vander Research says was even their most bullish expectation. So people are willing to buy this dip and play the long game.
So one of the things I think has changed about this dip is that after last Monday happened, we had a few failed attempts at coming back, right? Tuesday was sort of a failed attempt. Wednesday was a failed attempt. What we needed was good data to really bring those dip buyers back in. So now they need justification of, okay, the economy still is fine. And back to the conversation with Leisman, I don't think Powell is the one that needs to send the message that we're going to cut 50 because we're too restrictive. I think the data has to send the message that everything is still okay. We can absorb a 50 basis point cut and it doesn't have to look bad. But these dip buyers are back because the data still looks solid. If the data had continued to come in weak, if initial jobless claims had surprised terribly again this week to the upside, or if something else had come in weak, if retail sales had bombed, I don't think we'd have these dip buyers. So the market is still very sensitive to each of those points. Earnings now that we're going to see from the consumer and all of these retail companies, this is like retail-a-palooza that's coming over the next couple of weeks, going to be very, very important. And I think the dip buyers will react to that as well.
Jimmy, NASDAQ's up almost 5% on the week. Yeah. Just Thursday. Okay. And that is where JP Morgan's retail trader radar is pointing to, that at the single stock level, retail traders net bought plus 1.8 billion. Large cap tech names led by Tesla, Nvidia, Microsoft, and Palantir. You have positive notes today out from Eric Woodring of Morgan Stanley on Apple that iPhone momentum is building. Sort of echoes what Dan Ives was saying this week as well, that he upped his estimates for iPhone 16 sales. This trade is back, and tech is the second best sector today behind the obvious move in discretionary names.
Yeah, and I think there's a couple of reasons for it. One is just pure muscle memory. If people say, I want to get back in the market, the easiest place to go is what they know and feel comfortable with. If that's NVIDIA, Microsoft, Apple, great. And that's what most people are comfortable with. The other part of this is that those stocks, maybe not Apple, but the other stocks got really clobbered. I don't care which one you're looking at. They really got clobbered. I mean, NVIDIA's got was below 100, with the recent high being 140. Now it's clawed a lot of that back, but it's still more than 10% off of its high. So is Microsoft. So there's reason for the money to go back there. Now I'm going to go a little off tangential to what you're saying, is that that's going to continue. But where I still think you can get a bang for your buck is small caps. I know it's the opposite end of the spectrum of what we're talking about, but when we're talking about buying the dip, and you, Liz, mentioned these false starts, they were all in small caps. You're still about 6% off of a recent high in the Russell 2000. That high, by the way, was itself about 10% below the all-time high from back in 2021. There's a lot of ground for the Russell to recover.
These numbers today on the economy are music to Tom Lee's ears, because when he joined me the other day and sort of shocked me by suggesting that his original call of plus 50% for small caps for the year could actually still happen.
Yeah.
Even though here we are in mid-August, he still thinks you could have a run. Now, we are outperforming on the Russell today because better than expected economic data is great for a stock, and the expected rate cuts that some say this now clears the way for even further. That's all lining up for the Russell. Whether you believe 50% is possible or not.
Yeah, I mean, we still think that small mid-cap stocks, the S&P 1000, can have a huge rebound, maybe not 50%, and 50% would be amazing, and that would be historic. But at the end of the day, I think we're still in this process of buying a little bit of everything. Liz nailed it in terms of this. I think it's the type of intense focus on macro is only because a lot of investors don't know how to stock pick anymore, no offense. And so they kind of missed it. With respect to the private wealth side of things, my conversations last week were very aggressive on high net worth private wealth. They wanted to put cash to work because they were worried heading into August, where institutions have been more flippity floppity. So I think the wealth side of things, going back to the muscle memory, which is really all about liquidity and results. So the earnings and fundamentals of the muscle memory, plus these new opportunities and value and small cap, really have private wealth excited with respect to being an equity investor again.
But now, Jimmy, I wonder if you start to look at other areas of tech that haven't been as favored, like a Cisco, which is our chart of the day today, because it's surging after its earnings last night. They beat. They did have their third straight quarter declining revenue, but they're looking to get more fit. My word, not Chuck Robbins, of course, who was on the network, but they're cutting 7% of its global workforce. So they're trying to get a little leaner. You own the stock. And what do you make of this move we're seeing today?
So there's a lot to talk about with Cisco. I'll try to make it quick. Good results, great guidance. They're seeing AI orders come in faster than
I'm here. I'm just scanning through stocks.
The layoffs had the analysts on the call sort of twitching a little bit, sort of saying, well, wait a second, if you see all this good growth, why are you laying off people? Management, Mr. Robbins, the CFO, were adamant that they are not just trying to cut costs here. They were adamant about this. They're trying to redirect people to the higher growth areas of the business, namely cloud and AI. They're seeing good orders come in. Look, the stock was in the penalty box, Scott, for about a year. In fact, it underperformed the S&P 500 by 30 percentage points over the last year. That's a lot of ground to recover, but it's now had 2 good quarters in a row, and that shows that it's back on track. That's what you need when you have 3 misses in a row. You've got to have at least 2 quarters in a row that were good. Listening to the call last night, it was clear that the analysts are starting to come around. They're starting to believe. So I think the momentum is now back in this name. I feel very comfortable with it. 3% dividend yield, roughly 14 times earnings. Stock have owned it about 10 years, Scott. It's almost tracked the S&P 500 over those 10 years. It's given up ground in the last year, but I think it's going to make that back.
Robbins described what's happening with AI spending as extremely early in the process. He wasn't going to, necessarily play the sports analogy game and say first inning, but he alluded to that very much so.
So you can take it either way, right? Are they late on the AI spending, quite frankly? But I think the thing that balances that out, though, I want to see companies when they're restructuring and cutting workforce and being
Okay, SPY still moving. SPY still on the move.
really from a value perspective, what we own Cisco, I think it provides value within a tech sector that obviously is going a different direction.
Let me ask you this. You sold, I see, MasterCard.
Yeah.
On a day we're talking so heavily about the consumer hanging in. Now, I get that this is more of a payments business.
Right.
Why sell it here?
That's the way we look at it, more of a payment side of things. And what we like to do is kind of consolidate positions, and we want to be in Visa now relative to MasterCard. From a correlation and valuation standpoint, they're very similar, so I don't need to own both in a concentrated 50 stock portfolio. But in the payment side, we'd much rather be in Visa.
Why so? Why distinguish?
Good day.
Distinguishing characteristic.
Looking good.
I think on the consumer side, Visa actually is a little bit more on the consumer side versus MasterCard. On the business side, it's just like American Express. And I'm going to be a little bit more contrarian to think that I think the consumer is not as bad as everybody thinks, and I think we're going to have a decent season heading into the fall. So I'd much rather be in Visa.
How about JP Morgan today? You guys see this going for 8 days in a row? Higher. Jimmy, you own that stock.
Well, along with the financials going higher, and Scott, I mean, there's a lot of reasons why. I think the nearest.
Oh boy, what a good day! What a good day. Monday and Wednesday were kind of blasé, flat, VWAP kind of days, but man, today's mirroring what we saw on Tuesday and then some, right?
All these companies said it's plateauing, so there's more evidence to that. There's a lot of other things we can talk about. JP Morgan and the financials. We can talk about capital markets.
Okay, so looking good, looking good.
I think the biggest reason right now is lowering concerns about credit.
Your city is looking to me like it's the best performing.
Still thinking about that Tesla
Up about 2 and
put credit spread. Just want to see a dip in Tesla to do that. All right, so we're starting to see a dip. BNC pivots. What I'd be looking to do is to sell maybe the 180s, maybe the 185s, and then buy the 180 or the 175 respectively
So here's
for a
the
credit.
question for the desk on this, because if you're bullish on something like financials, and if it's not
Marvell, the chips very active on the NASDAQ 100.
when you look at cyclicality ratios, the reason I'm asking this is because I'm looking at them right now. Many of them have flipped. So things like staples outperforming discretionary, Utes outperforming banks. This is over the last month. Gold outperforming copper. So the market is almost telling you that cyclicality is taking a step back. So when we look at what the
WBD
buy sector
200.
rise, how do you get bullish on cyclicality? What should we be rotating into if that's the case?
I think the answer to the question.
WBD looks like it's changing trend. Warner Brothers looks like it's changing trend. It's gone from on the hourly. It's gone from red to yellow to cyan. Let's look at the 4 hours. See what that looks like. It's a relatively inexpensive name at $7 per share. Warner Brothers, are they going to go out of business? I doubt it. The 4 hour chart has gone from red to yellow. Still got some tailwind. On the 4 hour chart, we're seeing Warner Brothers, WBD, giving us a buy signal on the 4 hour, looking for a follow through to add to the position. You never want to take 100% on your first entry. At least I don't. I start to look for reasons to add to my position only after it moves in the direction that we anticipated.
I think what happened
Okay.
last week was at least somewhat of a threat to the financial system. So what we're seeing now is this rebound and a recovery from, okay, maybe not as big of a threat as we thought, and maybe the Fed isn't as big of a threat as we thought, cutting rates too quickly, doing some sort of emergency move. So there is a rebound going on. And then obviously what's happening in the yield curve, as the yield curve steepens,
Lyft, doing well. Lyft.
in that environment, so should rates, and so should dividend payers. So I just don't know how long that's going to last.
You make a really good point. There was a danger last week that as this yen carry trade unwound, that some big player would find itself with a big hole on its balance sheet, and it didn't happen. You know, we give the Fed and regulators in general a lot of grief about fighting the last battle, but those battles that they fought after the great financial crisis probably had something to do with there not being a giant loss.
ARM, looking for it to follow through. 4 hour giving your first cyan colored bar, looking for some continuation on ARM holdings. Let's see, Meta doing well, flagging at the highs. Meta, all right, so stocks are starting to show flags. Starting to show flags. Meta flagging at the highs. You got supply right there. Supply. Meta breaks through this level, we could see higher. Let's go take a look at Meta on the daily stock charts chart. Okay, this looks pretty good. What's up, bud? Oh yeah, that looks really good. Let me see. Okay. What do you have in here? Like plastic tubing? You're so creative. It looks really good. All right, S&P is still going. Wow, pretty impressive. S&P still going. Boop, boop. Mm-hmm. Mm-hmm. I'm here. I'm just doing running some scans. All right, McDonald's looking really good. Thank you very much. That's what we wanted to see. Okay, so I just want to reiterate one more time.
We are back. Let's do a move now.
Okay, so here's McDonald's. Okay, if you bought a couple of weeks ago on the potential breakout there and you took too large of a position, over the last week, you've just been sitting in a position waiting for the break higher. Now, I know some of you have Friday calls tomorrow. We're right near 275. So one of the options you have is that, you can take profits into strength if we get there tomorrow, or you can roll to later. I have the September I have September calls. If you recall, I bought the 280 by accident. I meant to buy the 275. It was too big of a hurry. That's okay. I have plenty of time. So right now we're just watching for the follow through and McDonald's. I have the September 20th, 280 call. So you want to buy the dips, 9 and 21 day up and to the right. So whenever I see it's up and to the right and prices extended beyond a Bollinger Band, first thing I'm thinking about is, okay, where is support and resistance? Where can I get a better entry? A better entry would be on the pullback. You're buying for somebody that was too chasing. They were chasing too much. You're buying from somebody on the dip. So this is working out much better for you as you start to move higher. You can start moving your stop up. So this looks really good off the 9 EMA. So 9 EMA up and to the right with the 21 day, 50 days below. 200 day is just right here where price is. So we're looking for a follow through day tomorrow. It'd be nice to see this fill out. It's got an ATR $5.32. It's currently up 372. So there's conceivably another dollar or so in this if McDonald's can continue. All right. So watch your McDonald's for the follow through.
You're great at psychoanalyzing me. You know how I roll. So.
All right, let's hit Deere then, which is yours too, correct? Because it crossed back above its 50 day today. They got earnings. There's the stock.
Okay.
Pretty quickly. I mean, expectations were so low that they were easily surpassed. Look, there's a long road ahead for Deere. The ag cycle, we hope now has troughed. That's what the hope is. Fingers crossed. Let's see going forward, but it's awfully cheap at this level. So hopefully the ag cycle has troughed.
Yeah. You know, Cat, by the way, fired today. Probably in sympathy a little bit with this one too. Either of these names? Why?
We want to be a little bit more defensive industrial, so we own a lot of waste management, we own some rails, we own some aerospace defense companies.
Rails are defensive?
No, I think, well, from an earnings perspective and from a yield perspective, yeah, they are. And especially, we own some from Canada down in the United States just because, oh yeah, but I think Lockheed Martin is a name, like even Rockwell and Tenet and some of these aerospace names that from our portfolio standpoint, I want to be a little bit more domestic in my mind.
The industrial?
Yeah, Cat, the Deere's.
I mean, I'm from Wisconsin. I like farming. But here's what I would say about farming, about farming equipment. We went through a cycle where we had the breadbasket of America that drove a lot of upside in farming equipment. I think we came back off of that. There was some reset that needed to happen in supply and demand, and I think that has occurred. I would actually agree with Belsky on this. I would be more defensive in industrials because companies like Cat and Deere are very cyclical. It's big machinery. It's the durable goods of businesses. It's the durable goods of industrials.
Here I am sitting here hoping that you're going to tell me the ag cycle is trough. Look, I actually agree with you about earth moving equipment. But let's face it, the ag cycle has been terrible. Crop prices have been low. They just haven't been selling these combines and tractors.
There might be a contrarian play here, though, because AGCO came out. It's a great company, AGCO, AGCO. We own it, a little bit of it, and they just missed earnings. But you're going to buy a company like that after that work because exactly from a return on equity perspective, that company just kills it from a long-term side.
Let's get the headlines now with Silvana. Hi, Silvana.
Good afternoon to you. All right, lawyers for Donald Trump have asked to delay the former president's sentencing in the New York hush money case until after the November election. In a letter made public today, lawyers for Trump say sentencing the former president as scheduled on September 18th would amount to election interference. The vice presidential candidates have both accepted an invitation from CBS to hit the debate stage on October 1st. Trump's running mate, J.D. Vance, also said he agreed to a CNN invitation for a debate on September 18th. But Democrat Tim Walz has not commented on whether he would participate in the matchup, which falls on the same day Trump is set to be sentenced in CNBC News has now learned that multiple people are being charged in connection to after Matthew Perry's fatal overdose in his Los Angeles County school last October. Sources say at least one person was arrested in Southern California early today, and more details of the allegations are expected to come out when the indictment is unsealed later today, Scott.
Silvana, thank you for that, Silvana. And now, up next, we have Belsky's Buy Basket, a list of high-quality stocks he says to own right now if you want some protection against big market swings. We will reveal that list next.
McDonald's looks good. Meta consolidating. Lyft having a good day. Supermicro, Frano and Supermicro. Wow, that's really doing well. Supermicro, once $1,000 stock, turning the corner. Supermicro. What about selling some premium on this one? Supermicro, that's a good idea. Put vertical. Okay, the 16th. What about okay, let's see. Earnings, Supermicro, SMCI. Supermicro, SMCI. Supermicro. Okay, looks good on the earnings. November 5th. November 5th.
Yeah, this is a list that we put together using the following attributes. B plus or higher S&P rating, triple B negative or higher debt rating, and then low earnings dispersion, meaning that you don't have the variability of earnings.
SMCI.
Low segregation of earnings. Return on equity that's improving and free cash flow that's improving. So why am I really focusing on those last three? Because those are the fundamental attributes that we think, especially the low dispersion of earnings, Scott, because you don't want volatility. So here's what we learned. If we go back to 1990 and we run a basket of those names since 1990 and compare it through
okay, 520.
The S&P 500 by 800 basis
Sell.
points during periods.
Let's see. Sell the 520. 520, sell 520. I'm just looking at credit spreads on
Exactly. So here we are back, and so now all of a sudden,
Super Micro 520,
we're involved in a market, Scott.
510.
People buy stocks if they're going up, and from a long-term person, I'm not going to tell you. I know you hate when I tell you 30 years.
Let's see. 520, sell the 520. Let's see what that looks like. 520. 510. Buy the 510 put. Let's see what that looks like. It's 255 for 745 in cash aside.
Allegiance, the Applied Materials, which reports earnings tonight, the Amgens, Ameriprise, Air Products.
Here's what we own. We own Amgen, Ameriprise, Chubb, Air Products, Cisco, Alphabet, obviously, Honeywell, Coca-Cola, Ray J in our mid-cap portfolio, and we just talked about Visa. Those are the names that we own in our real life.
All right, 520. 520, 510.
Our viewers love ideas, so we're thankful to you for that. We have cross ownership out of this list. Do you want to? We already did Cisco, so we don't need to do that.
Yeah.
Why don't you do Applied Materials though? Because they do report tonight.
I mean, here's the yin and the yang on this. ASML reported several weeks ago, and it actually wasn't that great of a quarter. They're both in the same space, being semi-cap equipment. But I think that was just a one-quarter issue with ASML. The whole space is going to be benefiting from these semiconductor plants that are being built, not just here in the U.S. where they're being built.
They're talking Intel right now?
But around the world. I mean, Europe's involved in this. Japan's involved in this. India's starting to get involved in this. All of this plays really well in terms of multi-year, long-term demand for companies like AMAT. AMAT got knocked down with not just the ASML news, but the whole semiconductor trade unwinding a few weeks ago. That's clearly coming back. I think relative to the others in the space, this is an attractive.
Okay, look at, I'll put this in the credit spreads channel. Consider some spreads. Credit spreads, put credits. Super Micro. I'll post the chart in there. Let's see.
What about Nike? What gets you to buy that? We learned through 13Fs that it appears that Bill Ackman's taken a position in Nike. What about you?
Well, our great analyst Simeon on this stock really likes it here. I think he's a little bit early from an analyst perspective for us because we'd like to be more tight in our holdings. We're betting on Lulu after the pullback here to add more to Lulu relative to Nike. And I still think Nike from its China exposure has some problems. And so we've been
All right, so that looks pretty good for Super Micro being mentioned by Frano. I like the idea of selling puts, put credit as well. Maybe selling the 520, buying the 510. That's a $255 credit per contract. $745 in cash held aside. All right, Super Micro looking good. That's 100 points away. That credit is a 20 delta on the short strike, 18 on the long strike. Yeah, it's going to spread. It's going to split soon. Yep. Yep. Super Micro was split.
Up next, we'll talk casinos, cars, the cloud as well. Our calls of the day are straight ahead, just after this quick break.
10-for-1 stock split will be on October 1st. October 1st. So we'll be out of that. Be out of SMCI before split date October 1st. Thank you, Frano. Thanks, Frano. Do, 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 do. Okay. Okay. When, where is, there it is. Okay. All right, let me get the link for a new member. You can welcome Renzo into the trading room when he shows up. That's yesterday. Today. Renzo, where are you, Renzo? Let's see. Rob, what's Rob doing? Yep. Looking good on the slow-mo trade. Back above teal. PayPal. They just keep accumulating those 2026 calls on PayPal. Okay, PayPal.
So, you know, if they hit 76, they obviously blown through that. Earnings are next week before the bell. What's your outlook?
The thing we like about Medtronic is the last year or so they really been focusing
PayPal.
on
Still going, huh? PayPal. PYPL. PayPal. Oh man, that looks good. It's not too far away from where it started. So I got an ABCD pattern on PayPal. So if you're interested, maybe looking for a C pivot now, PayPal. Okay, let's look at PayPal. You got an ABCD pattern on PayPal. Okay, here's B right there. All right, so you're on a buy signal, looking for a C and then a follow through. It's up against supply right now. Okay, so we're looking for another break of structure and a chalk overhead. Chalk being a change of character. You can see over here, right at 130. We had a chalk at 130. We broke above it. On July 24th, continue to push higher. So we have a break of structure now, and now we have supply overhead that could impede price for a little bit. If we can get a better entry on PayPal, I still like it. I like it. It's a bullish development, so watching for that to follow through.
Reasonable valuation. That's what I was about to say. This is more like value tech, but this is value tech with AI and cloud exposure, which is major growth. So I think you're getting the best of both worlds. You're getting the growth that's going to come from all these data centers that they're building and leasing out, or actually, using for customers, the hyperscalers, et cetera. And at the same time, you've got this very attractive
PayPal. Watching VWAP. Briefly above VWAP. I'd like to get a position. I just didn't want to chase it in that uptrend this morning. You know, I don't like to do that. I'm looking for dips to buy. You could scale into it on this dip. Watching McDonald's doing very well. McDonald's doing well. Okay, at the highs. Looking for, okay, you're going to break a structure here on PayPal, on McDonald's on the right. A move above 270, 277 would give you a chalk overhead, change of character. Okay. You can see what happened the last time we had change of character in McDonald's. That was over here on the 14th of August. Prices moved higher yesterday. We got a nice move above the chalk today. Okay, SPY looks like profit taking. I would take some profits off. It's been a hell of a run today. Please take some profits. Don't be greedy.
Las Vegas Sands is pure Macau. Wynn is half Macau, half the U.S., and it's going to be growing into other geographies as well. They've got this UAE Dubai project that they're rapidly building. It's going to come online in 2026. But the U.S., Las Vegas, Boston is going great. I don't think that.
Okay, we got some profit taking. Don't be greedy. Okay, we're above the 50-day moving average. That's the critical line in the sand that we've been looking for. We wanted to see a move above the 50-day. We stopped right at the 50-day yesterday. Stopped at the 50-day. Okay. So let's look at the S&P through this lens, okay? Okay, so a nice move here on the S&P, the 4-hour chart on the right. Okay, break a structure, following through. Now we're starting to see a little bit of a fade. Let's go to the 1-hour chart over here, 60-minute 1-hour chart. Okay, I'm going to get rid of some of this stuff. 50. I don't think we're coming back to 5,200. Okay, that one. Delete. I'll leave 5,000 on here because that was a major level. 5,300 is now support. Okay. One level. More interested in the support at 5,400. Okay, we want to stay well above that. The call wall, what did we say call wall was? 50. Okay, we're above the call wall, 5,500. Okay, 5,500 is the call wall. Okay, here's 5,500. Volatility trigger, 54.25. We're above that by a wide margin. All right, so this looks pretty good. Okay, so retail sales, a lot of people were looking for that number to be more important. Well, it works in both ways. Okay, it works in both ways. A lot of people were thinking that retail sales would be off, and that would be a bearish indicator. Retail sales look good, so that's a bullish indicator. We're above the slow-mo teal-colored line. We've been above that for a few days after we reversed on Monday, a week ago Monday. All right, so 9 trading days ago, we reversed after that. Speaking of which, we need to check the... we need to check the Japanese yen, Australian dollar carry trade. We want to see that because that was important at the time. 5,500 is the call wall. Okay, so this all looks good. Okay, you see this chalk over here? See that chalk right there? Rob, you see that chalk right there? That was, we broke above that level starting off on the 13th. gapping up. We made it through that gap. Made it through this gap over here. We traded through it, which was what the best thing that could happen is that we traded through rather than gapping back above and missing this gap. We filled it out, although we did have a gap here. All right, this price action's already filled in. So I would say that this is filled. Now we got a gap up this morning that needs to be filled. We got break of structure. Okay, we got supply overhead, so we're coming up against supply. I would take some profits off. PayPal looks good for the ABCD pattern. PayPal. What's going on with PayPal? What earnings? I don't want to take anything too quickly here. Let's take a look at PayPal. PayPal. You got the dip on PayPal. It looks pretty strong. They're buying the dip. PayPal. 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 Okay, vertical. When is earnings? October 29th. Okay, so October.
Freeport McMoRan is a name that obviously we've known for a long time. Didn't do so great last year. This year, much better. We do think that in the material space, which we're actually technically underweight, Freeport McMoRan in terms of its earning power going forward, especially with the people coming back potentially in the year following.
PayPal.
Okay, how about gold? No one likes gold?
I like gold.
I love gold.
I like gold miners better than I like gold right now.
Okay.
Because they needed to do a catch-up trade. I don't think they've quite caught up entirely yet.
Okay, I'm buying some verticals here on PayPal. Let me just check here. PayPal. I got the dip that I was looking for, 67.50. Okay, 5 wide, 72.50 for a debit. A debit. PayPal vertical debit. Okay, so those are 18 October. Okay, that looks good. ABCD pattern, AB, CD next. Stop under B. B at I'd say 67-ish, 67. Okay, so that's a 75-cent stop on the stock. On the options, let's see, 67.50, 72. Sell to 72.50. It's right now a $3 debit, $3 debit per contract, looking for a follow through. Maximum profit would be at 72.50. Maximum profit on that vertical would be 72.50. Okay, looking for a C pivot now. C pivot. Okay, pretty good day. I like the idea of credit spreads. We've on Supermicro splits on October 1st. So you want to be out of that trade before then. Okay, we'll be out before then. Looks good. All right, so I'm not going to do anything else at the moment. It is lunchtime. Let me go make my son some lunch. I'll be right back. Give me 5 minutes. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. 12:56. You know what? I'm going to wait a couple more minutes just to get final trades out of the way, and then I'll go make him some lunch. Summer is over. Antoine, summer's over. School starts. He's going to be a high school student, freshman. You're on a roll there, Frano. Looks good. Yeah, Rob, what's something that you're trading you want to take a look at? Okay, so that looks good. There's a chalk right there at 53. Let me get rid of this. I don't need that. We're well above that. Chalk there, change of character, W shape. So this works. I mean, you think about it. If you're trading, you're looking for a W shape pattern. Here's a W right there to here to here. And where's your chalk? Right here, right in this area, right where you would expect it to be. As you break above that pivot, the middle of the W. So it just shows up as a graphic, which is really cool because if you're not paying attention, you'll get these alerts as well at the top of the screen. Let's see. You can see the alerts on Tesla, Apple. These all strongly bullish, break of structure. You got chalks here as well, changing character. These all look good. I need to fix that. Oh, there we go. Okay, so these guys fixed it finally. All right, so I want to change these. I want these to be something else. Let's go Apple stock. Apple, let me make this one. What this does is it follows the chalks, change of character, break of structure, bullish, bearish. So you can just look real quick at the stocks that you're thinking about. I like this feature in this script from Lux Algo. Okay, so that's that. Broadcom is another one, ABGO. We put that on here. Steven's been trading Broadcom. Amazon, another one. Up today on retail sales. Let's see, Amazon, Microsoft, Meta, Google, Microsoft.
Eastern time today. Adam Parker, Joe Terranova, Alicia Levine, Stacey Rascon, and Ken Squire. We're going to talk
Okay, Meta.
see what's going on in that world today as well. All right, let's do final trades. Mr. Belsky, what do you got?
Hey, thanks for having us. Show ticker symbol CB. It's part of our high.
Netflix,
30+ years of experience is worthy of having
Nvidia.
Farmer Jim.
I also like it when Brian talks about assets under management, which matters to him, to me, and
Let's go. US dollar. No, BTC. US dollar.
I think it does well in multiple
Crypto.
industries. If you want to be defensive, it pays a nice dividend. If cyclicality is coming back, it does well because of demand.
What else do I want to put on here? 10-year yield. US 10-year.
We will indeed see it. Tony Scott, thank you very much and welcome everybody to the exchange. I'm Tyler Mann.
No, bonds, US 10-year.
Stocks are surging, yields are higher after July retail sales.
And the US dollar, DXY. Forex.
We're going to discuss that and whether the soft landing is increasingly showing signs that that landing is being stuck. All right, so with signs that
Let's do Japanese yen, JPY, AUD. Okay. All right, so I want to set some alerts here. Okay, so I want to go. I wanted to percent change, price, rating, strong bullish, structure, bullish chalk.
The Dow is up, as you see there, by 400. Let me say, I got on my special glasses. 466.
Don't need order blocks. Don't need imbalances. Don't need PD zones. Liquidity grabs. Okay. All right, so that looks good. Okay, you can see the stocks that are the assets that are giving us what we're looking for. Chalk plus. Let me change that to just chalk or breaker structure because that'll be the beginning of a move. Okay, breaker structure instead of chalk. Bullish breaker structure. Okay, that should be good. So I should have more there. Okay, cool. Okay, NVIDIA, Netflix, Meta, strongly bullish. Okay, let me go make some lunch for my son. Looking PayPal ABCD pattern. Okay, just be careful that this doesn't take out B. All right, 67 is where I have a stop. Okay. Zeta, you looking at Zeta? Okay. Okay, you got to break a structure and a little pullback right there on the 1 hour chart, but looking for B and C pivot, Rob, that would be good. You got some buyers down here. Watching that closely. Okay, cool. So let me go back to S&P while we're waiting for a follow through. Zeta looking for a B and C pivot, Rob. So okay, S&P, look at that change in character right there, that W-shaped pattern we're looking at. Okay, S&P, I'll be right back. Let me just make some lunch. Give me 5-10 minutes. Thanks.
50 basis points, a half point in September and November each. Why do you see that as the likely path? What are you seeing that others aren't?
Clearly, the U.S. economy is slowing here, and inflation has come off the boil. And quite candidly, I think it's time, and at Citi, we think it's time for the Fed to get moving in taking policy to a more supportive stance. Another way to put this is that the risks around the Fed's dual mandate have shifted appreciably. 6 months ago, it was all about inflation. And now the Fed's got to be as worried, and we'd argue even more worried about a slowing economy and the labor market.
So, Steve, do you agree with what Nathan just said, and that is that the economy is slowing up? I don't know. Maybe I'm putting words in your mouth, Nathan. Appreciably. Do you see it that way?
I don't see it appreciably. I believe it's slowing. I believe we're getting into that soft landing, and I believe it's really hard for markets, for economists, for forecasters, and for the Fed to sort of separate this idea of an economy that's slowing down in a worrisome way versus one that's slowing down for a soft landing. You don't really know till you get there. The inflation numbers are coming down. I do agree with Nathan in the following way. I think the Fed can cut rates and have almost no impact on its fight against inflation. From my read, I think the Fed is excessively tight given what's happening with inflation. It has indeed become tighter based on its own metrics of following real or the inflation adjusted funds rate. So I'm not sure the Fed wants a down payment on 50 to start with. I think 25 is fine. The market's pretty confident in 100 this year. I think that makes sense to me to get down to a place where if you need to strike and help the economy out, you're a lot closer to neutral than you are at 540. One other element I would bring in, Tyler, which is sort of informing my thinking, which is I think that Powell will very much want a September rate cut to be unanimous. 50 might send somebody to the dissent side. And I think for the political optics of this rate cut, you're going to want all the voters on board with this. Trump appointees to the Fed and the Biden appointees.
So I want to get back to Nathan in a moment, but Andrew, I want, in the interest of getting you in the conversation,
we're talking about inflation coming down. It has come down, but wasn't the print earlier this week a 2.9% rate? And that is still not the 2% number that the Fed wants. So I have a hard time squaring those numbers with the idea that inflation has been slayed.
Well, we've got two economists on the show, and I'm just a portfolio manager, but I suppose what the markets are telling you is the direction is still in the right way, and therefore it's bullish. We'll have to see whether there are bumps. I do agree with you that there could be question marks. Right now, the market's seemingly pricing in a perfect landing, which is low inflation, cause the Fed to ease, but soft landing, not the economy breaking, and could either of those be challenged? I think that's possible.
So Nathan, let me bounce that question back to you, if I might. Inflation has come down, but it is not at 2%, which is what the Fed says its ultimate target is. So is it safe then to start cutting rates, and in your view, cutting rates rather aggressively when inflation hasn't reached that target, is merely directionally moving that way?
I think the key point here is that the Fed doesn't need to see and shouldn't wait for inflation of 2.0%. That the key issue is inflation clearly on the path back to 2%? When you look broadly at inflation indicators, I think pretty clearly the answer to that is yes. And then it's reinforced by the reality that the economy, we can debate how much the economy is slowing, but clearly the economy is slowing, and that's likely to further take pressure off inflation. And as Steve emphasized, the Fed at present is quite restrictive. And even if they cut 25, they cut 50, they cut 100, they're still probably in a restrictive territory. And so the question is, how restrictive should they be, as we all agree that the economy is softening and the labor market is loosening?
Reaction, Steve?
Yeah, I just want to give you a little bit of the, in the weeds a little bit on those inflation numbers. The 2.9 is the CPI tie. It runs about a half a point or so ahead of the PCE. So getting to what Nathan was saying, he was telling you what the Fed's actual metric is for cutting rates. It's not at 2%. It's confidently on the road to 2%. So what happened yesterday, if you really want to know, and maybe you want to put your waders on because we really are in the weeds here, is that the PCE forecast came out based upon the CPI and the PPI, and everybody thinks that PCE report coming at the end of the month will be really benign, a 0.14, a 0.15. That'll bring down that core CPI, core PCE number in a way that's, again, on the road to 2%. And that's really what the market was talking about. So you could end up, I know it's not really Friday yet, but you could be optimistic, Ty, and you could say, hey, maybe we have declining inflation and an economy that's going to hang in there. In that case, you can cut rates and remain a little bit restrictive and see how things go.
Let me turn to the portfolio manager here and get you to round third and bring it home with some investing ideas. As I read it, you say that right now we are in the middle of sort of an August recovery, a rebound rally that may well be short-lived before we go the other way. But longer term, you are quite constructive on the market and have some stocks to back that idea up.
Yeah, I mean, in terms of longer term, look, what's important to consider is that on December 31st, we're going to be pricing off 2025 earnings estimates. And the reality of this year is that that number has consistently moved higher. Bonds up has gone from 275, it's at 280 today, and it moved up after the second quarter. So that's the number that's going to be the denominator. The question is, what do you pay a multiple? And the Fed is going to lower rates. I think you can get over 20 times that number to start the year. So that's how I get kind of closer to 6,000 by year end. And I think, but near term, July, from the peak in July until this week, it was a total risk-off sell-off. So beta, anything with risk got crushed, and now it's coming back. So I think we're in that period of recovery for the leaders. And so, if I look at stocks that are still down from where they, their highs, whether it's NVIDIA, Taiwan Semiconductor, Amazon, all these companies had good quarters. NVIDIA hasn't reported yet, but the other ones have. And, they're still down double digits from their highs. So I think those are the types of stocks people are going to run back to that are having very good fundamentals. I am worried, however, as we get into September, is this perfect landing, that everyone's pricing in, could it cause, could there be question marks that cause another bump and, retest or a challenge to that last Monday low? I think that's a possibility.
There are lots of moving parts in the market in the world right now, and obviously you're on top of all of them. Andrew Sliman, thanks so much. Nathan Sheets, we appreciate it, and Steve Leisman, always great to see you. Appreciate it, guys. Thank you. All righty, while today's consumer data was strong, there is at least one segment where cracks appear to be widening. Phil LeBeau joins us now with that story. It's got to be one or the other. It's got to be autos or airplanes. Phil, with you, my friend.
It's not airplanes, not aviation. There's no shortage of people who want to fly right now, Tyler. What we're talking about is the auto industry, and it might be extreme to call this a crack that worries the automakers, but it is something worth paying attention to because it's a snapshot of the consumer, especially when it comes to auto payments. Now, this is data from Cox Automotive. Jonathan Smoke, the chief economist there, has given us an insight into what's happening. And basically what he says is that lenders, they are tightening auto credit right now. The average new loan rate remains elevated relative to where we've seen it in the past at 9.84%. And look what we're seeing in terms of defaults. Up over 3% this year. Higher than it was pre-pandemic, not quite to the 2009 recession high of 4.1%, but it is edging higher. And as a result, what we're seeing is that the demand that we thought would be there for new vehicles, it's just not there. Right now, we're on pace to sell 15.5 million vehicles in the United States this year, basically on par with what it was last year, but below what the analysts were expecting at the beginning of the year. Most thought we would be seeing sales closer to 15.9, maybe 16 million vehicles. The price that people are paying and the monthly payment that goes along with it, that remains elevated. The average price is still well over $48,000 for a vehicle. And then when you look at the loan payments, they remain elevated. A new loan, average new loan payment is $767 per month. When you look at the used auto, it's lower, obviously, $558 according to Cox Automotive. Bottom line is this: as you take a look at shares of the auto stocks, keep in mind that the automakers are being much more judicious in terms of increasing incentives, which have moved up. They're now over $3,300 on average per deal, but they're also being much more judicious about throwing more vehicles out into the inventory, if you will, Tyler. Now, there are some dealers, certain brands, you talk with Dodge dealers, Ram dealers, they are dying because of how much inventory they have. They would like to see higher incentives. But
All right, looks good. Looking for a C pivot on PayPal.
Comfortable with where they are. Would they like to sell more? Absolutely. But what we're seeing right now, Tyler, is a reflection of tighter credit that is in the system in terms of people when they're going to buy a vehicle.
Why is GM stock doing as well as it is?
Well, it sold off pretty good. And I think that's, part of this is when you are a GM investor, you look at the dividend yield, which is good. And you also look at what you see relative to in the past where they were throwing a ton of cash into EVs and capital. That's shifted. Mary Barr and her team have said, you know what? If we can generate more cash, we're going to do that for the investors. And that's been a reflection of why the stock has moved higher.
All right, Phil, thanks very much. Phil LeBeau reporting for us. Coming up, fintech giant Klarna taking on the banks, unveiling 2 new products today. We will speak with the CEO about their strategy as Wall Street eagerly awaits a potential IPO from this non-U.S. company. But first, homeowners rushing to refinance as mortgage rates hit their lowest level in over a year. We'll get an inside look from the CEO of Frost Bank down in Texas later on in the show. The Grammy-nominated rapper Fat Joe joins us in studio to discuss his newest business venture and the state of the consumer. The Exchange is back after this.
This is The Exchange on CNBC.
S&P is holding up very well. You note that there's supply overhead at 55.50. Just watching the S&P 500. It's kind of quiet, I'm going to take another break. Just watching price action. And the up volume is still leading 5-1 NYSE, New York Stock Exchange. 3.7 on the NASDAQ, 7.9 on the SPY, 20-1 on the Qs. The Qs are kicking ass today and taking names. 17-1 Diamonds, Industrials, 4-1 on the IWM.
Welcome back to the exchange, everybody. Home builder stocks climbing today despite sentiment falling and mortgage rates rising just a bit. Diana Olick joins us now with that story. There are those home builders, Di.
Yeah, Ty. Look, it was a rough day in the numbers for housing for sure. Following the big retail sales beat, bond yields jumped, and the average rate on the 30-year fix moved up 9 basis points to 6.58%. So it's back to the highs from a week ago, and that's all according to Mortgage News Daily. This came right after the August read on homebuilder sentiment in the single-family housing market. It dropped 2 points to 39 in August, and July's reading was actually revised down a point as well. This is the lowest level since December of last year. Anything below 50 is considered negative sentiment. And sentiment was at 51.
All right, we're starting to see TTM bars, red TTM bars on the 5 minutes. So keep an eye on your S&P.
Over 7% to the 6.5% range. But the builder said in the report that a lack of affordability and buyer hesitation stemming from previously elevated interest rates and still high home prices are all holding back sales. The index's 3 components, current sales conditions and buyer traffic, each fell, but sales expectations in the next 6 months, they rose slightly, almost to positive territory. And that is likely because builders are expecting those lower interest rates. And that's not just going to juice buyers, it's going to help the builders with their own borrowing costs. Now, you can see the home building ETF, ITB, dropped this morning after the retail sales data, but it made its way back up into positive territory along with the broader markets.
All right, Di, thanks very much. Diana Olick reporting. Well, they might be good for buyers, but falling rates not boosting the shares of Texas-based Frostbank, down nearly 7% in August. The bank projecting that a Fed rate cut could cost upwards of $1.5 million a month in net interest income. And Morgan Stanley recently downgraded the company on its exposure to floating rate loans, which are higher than some peers. Here to discuss rates and refinancing, Phil Green, Chairman and CEO of Frost Bank. Phil, welcome. Good to have you with us. Let's start with refinancing.
All right, let's take a look at money flow. Let's take a look at money flow. All right, so we know that advanced decline percent was very strong to start the week. NASDAQ was the strongest. It gave us the first higher high. Now it's continuing. It's about to get to plus 30% pretty quick. S&P 500, mid caps, small caps from in descending order, and the NASDAQ in the lower panel. These are all pointing higher. That's a bullish tailwind. We know that junk bonds are leading. Okay, that's at the high of the day. You can see the wick under this candle, so they bought the dip, despite the fact we're at all-time highs, or not all-time highs, 52-week highs on the junk bonds. Junk bonds lead, so we know that we should expect to see more bullish action as junk is moving higher. You can see over here, 2022, the bear market started, and we had this cascade lower. This is the kind of action that you're looking for. If you think bearish, if you think bullish, you're looking at what we currently are doing, which is to follow the 10 EMA on the weekly on a bullish path. So this is looking really good for the follow through. We know that the Fed is going to cut rates. It's just a matter of when and how much. Most analysts are expecting September for a 50 basis point cut, and then 225-point cuts after that, 225 basis point cuts thereafter. Futures are just moving sideways, a little dip, ABCD pattern potentially. Very strong day today. So you don't want to cut yourself too short on your profits, but do take some profits off, and the strength's always a good idea. Yep.
Recently, Morgan Stanley downgraded your bank to underweight from equal weight. One of the things they cited was that you have more floating rate loans than your peers, 59% versus a peer average of 50%. Why are you higher than your peers? Why are you exposed more in that area? And how would you like to respond to that downgrade that cited that factor?
Well, as we say in Texas, that's what makes horse races. And as relates to what
Taiwan Semiconductor, we know that SoftBank is looking at them instead of Intel now. The deal fell through. So Intel still basing down here. So there's no hurry with Intel. I mean, one day we could wake up, it could gap up, but a gap up would be a sure sign. Now, they are cutting their dividend. So any funds that follow dividend stocks are going to wind up selling Intel. And this base will tell us what to do next. So you know with Intel what we're looking at here. Okay, so you've got a high and a low. Okay. You've got a high and a low. So basically you've got this box. Okay. So we either break to the upside, in which case we'd be looking at bullish trades, or break to the downside, which I find hard to fathom, being the stock is at 19, does make chips. I don't know. So we got to wait to see what price action will do. Okay, it's trying to cruise. A lot of people were thinking it was going to stay below 20. Those people have probably gotten stopped out on the move to 21. A move through 22 would definitely be a long signal, despite all the other things. Okay, so I'm just looking at price action and volume when it comes to Intel. All right, so MACD's turning, stochastic. Okay, watching PayPal for a B and C pivot. It looks like a C pivot now.
Multifamily is an asset class. We've got, let's say $800 million or so, $900 million under construction. And we feel great about the way those projects have been underwritten, about the sponsors that we have. They've been responding to cash in, refis, that type of thing when needed. But again, go back to what I said with regard to the 10-year. When we have refinancing rates now around 6%, if you are a long-term holder, you can refinance it long-term. If you're a merchant builder and you want to sell that project, cap rates have been very behaved. In fact, we have a customer sell at a mid-4 cap rate on a project, North Texas. it was significantly in excess of the loan amount. So I feel great about the projects. I think the way interest rates are moving help overall with regard to the dynamics there. And so even though that stabilization has moved from probably what was underwritten to 12 months, and probably is more 18 months these days because of supply.
Roku's active. All right, watch Roku.
We haven't done a multifamily real estate deal since October.
Roku.
That tells you, not because we wouldn't do it, it's because the numbers don't pencil out for the equity holders. And so it just tells you that supply is not continuing to hit on the marketplace. And I think by 2026, you're going to see a really demand for the multifamily product that hasn't been put in place over the last couple of years. So we overall, I just said, we feel very good about it.
Phil, thank you. Phil, thank you for your candor. Thank you for with us. We appreciate your time.
Absolutely.
Phil Green of Frost Brain, Chairman and CEO. All right, coming up, San Francisco dealing with some growing pains when it comes to the rise of robo-taxis. We'll tell you what's keeping the Bay Area residents up at night.
Okay, Bitcoin pulling in a little bit. Bitcoin. McDonald's break of structure at the highs. McDonald's break of structure at high of the day. McDonald's break of structure at the high of the day. Semiconductors and retail still leading. Okay, futures trying to regain the highs of the day. The longer it stays up here and just doesn't make any more forward progress, the more I would think take some profits off the table. VIX is dropping 1554, fading from the high of the day. All right, I'm going to take a 5-minute break. Let me just put something on here. Take a 5-minute break.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for or FOMO. Today we are talking Walmart with a nice 6.5% move to the upside. I mean, a significant breakout. We're trading now just below $73 a share. So here to tell us more on what the street liked about this report is Diane King Hall, senior markets correspondent for the network. So Diane, walk us through all the good, because I love a good report, a good retail sales day. All of it is like the stars aligning right now.
Yeah, it is. And it's like you asked the question what the street liked about it. What didn't the street like about its results? It beat expectations on both the top and bottom line, raised its guidance. So we've got a beat and a raise here. Adjusted EPS came in at 67 cents a share. That was better than expected. Revenue topped 169 billion, also better than expected. So it did well across those metrics in terms of its guidance going from here. Walmart now saying it expects sales to rise by 3.75 to 4.75% for the full year. Adjusted EPS, they're expecting that to come in between 235 and 243 per share. To put that all in perspective, previously their guidance was for sales to come in a range of between 3 to 4%. So you've got a solid increase there. They'd expected adjusted EPS to come in between 223 and 237. So they've increased both the lower end and the higher end of their range of their guidance. So they did well just on a variety of metrics. So you're seeing them be rewarded with this 6.5% gain, hitting all-time highs in trading today. And they're really holding up in the face of this conversation about, is the consumer flagging, right? We've seen some concerns about that. We saw that earlier this week from Home Depot, where they talked about, consumers not taking on as many projects. But for Walmart, it is still holding up in the face of consumers that are being choosy.
No doubt. And if investors are being choosy, you can see why a lot of them might have chose Walmart over the last few years. I look at kind of several time frames, usually just to kind of get a snapshot of how a stock's performed. Amazingly, Walmart has outperformed the S&P 500 on a 1 day, 1 week, 1 month, 3 months, 6 months, 12 months, and 3 years. Any time frame I look at, Walmart is outperforming the market. We're not talking about a semiconductor stock here. We're talking about a consumer staple. It's got defensive elements to it. It's got resilience elements to it, and it's outperforming just the broad-based index. I bet those who you're talking to on Wall Street there have to be excited about Walmart.
You're about to talk to a retail analyst shortly, but here's the other things that stand out for them. They've really mastered the e-commerce space. That's another strength area for Walmart. E-commerce sales rose double digits, rose more than 20% recently. And then they talked about just the diversity they've had and other things they're doing, like the third-party sellers on e-commerce platforms. So they've seen growth there in terms of transactions recently. Those increased, those rose 3.6%. Average ticket prices were up more than 0.5%. So you're just seeing strength when it comes to pricing, and they've talked about on this, off the back of this most recent earnings, that they won't have to continue to do these rollback prices, because you remember somewhat recently they had talked about, the consumer facing some challenges as well, having to do some rollback prices, but they're not going to have to continue to do that. Now, the CFO, John David Rainey, did talk about what's happening with regard, he highlighted the inflation report that we got out this week and talked about one of the reasons they may be benefiting is because grocery prices are not rising as much as dining out prices. Like we saw in that inflation print this week, that grocery prices are up a little over 1% year over year. Yes, inflation has been easing, and where it's been easing more is within the grocery segment, and Walmart gets more than 50% of its revenue from grocery.
So that's exactly where I've said this is like the ultimate winning point of Walmart for the past, many years at this point, frankly, because it's the largest U.S. grocer. I feel like we discount that. We consider like our Mariano's, our Kroger's, our Albertsons, but I mean, like Walmart is the behemoth, and it's the fact that it's been committed to keeping its prices low. I mean, it makes me want to go to a Walmart day, and there's not even any in like the 20-mile radius from us here in Chicago.
Right, and the other thing that Walmart started to see within the past, last year, over the past couple years, when you saw inflation rearing its head, and you just saw just these hot increases in inflation, you you started seeing the six-figure customer trade over to Walmart from, say, Target or elsewhere. And that has become a habit. And so they've managed to hold on to that client as well, along with the, its base that it had previously.
And I just can't wait to see the ways that like a Target responds to this, because I feel like they're so incomparable at this point. But you can see why. We're all looking for a good deal, and I can speak to them myself when even just grocery shopping. It's so expensive still that again, everyone wants to feel like they're saving or cutting corners somewhere, and maybe groceries are the way to do so. But great insight as always, and great breakdown on Walmart making a nice move to the upside today, all-time high. Sam King Hall, senior markets correspondent for the network, and now. Alex, we trade this name, and I think that the trend has been clear. I mean, you made the greatest point of all, and that's the outperformance we've seen from Walmart on every major time frame.
Yeah, no, it's beyond impressive at this point in the gap it's putting between itself and, let's say, in Amazon at this point, or even a Target, is really, really not something to discount. But I also think about whenever we talk with Ben Lichtenstein and he talks about those vertical and horizontal phases, it's very, very clear when you look at a name like Walmart that it's tended to jump around earnings and then kind of find its way into that new range and then make another jump on earnings. And so leaning into that, and I think that chart does a pretty good job of sort of illustrating it. Yeah, it's been leaning to the upside, but the big jumps, the big movement has been around those earnings events typically over the last year. And so perhaps it sort of eases its way into this new price zone. And we looked at a strategy that would benefit from that, which is a slight upward drift towards 75. We looked at the 75 call calendar. What we want in particular for this one, or what we used for this example, was selling the September monthly 75 call and buying the October monthly 75 call. If you did the whole package for a 50-cent debit, the most theoretically you could lose is $50 per spread. And it's one that'll benefit if implied volatility expands a little bit, and if the stock, of course, moves its way towards 75, which is just a small 2% or so increase from the current share price here, Jenny. But we're talking about Walmart. We're not talking, I know it's outperformed, but typically this one actually doesn't trade with a ton of volatility. It only has 17% implied volatility, which is actually pretty in line with the overall market. For comparable purposes, I'll pull up, let's say, a name that we talked about at the top of the show, which is Qualcomm. It has 37% rather implied volatility. So less than half the amount of movement the market kind of expects from a Walmart. It's more of a slow and steady. And so with that being said, we looked at a strategy that will benefit from a slow, steady, methodical climb towards 75.
Yeah, and I think a good way to play into like the lack of volatility we see in this name, obviously ripping today, but historically this is, I think, seen as one of these like flight to safety, like more value type names. Although the growth has been frankly
Okay, looks
impressive.
like SPY's not done.
It's dipping into both pools right now because
Looks like SPY isn't done. S&P is not done.
the overall retail and consumer world. But
Hasn't done enough damage to the bears today.
talking about next, we'll look more into the state of the consumer following retail sales that beat expectations. Are we concerned about the state of the economy, or are we starting to ease off of those fears? We'll have more for that on you coming up next.
Okay, a move above 54.40 would break structure. You got a chalk right here, change in character on that downtrend back to an uptrend. So it's looking pretty good now. Super Micro is still going. About to break through this supply zone, Frano. You see that?
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern, on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing, and it's time to continue our discussion about the strength of the U.S. consumer, a point of resiliency for the overall economy for the better part of the last year. So joining me now to discuss more on this is Jerome Martise, the Director of Consumer Research.
Super Micro.
EG. So thank you so much for being here today, Jerome. What a great topic to discuss. I mean, we couldn't be more topical right now. We've got Walmart, we've got retail sales. So let's start with more of the macro. What are some of the trends you're seeing from retail sales today?
It's good to be here, Jenny. So yes, retail sales came in much stronger than expectations for the month of July, but it's important to note that this was mainly driven by promotions. In a collaboration with Centric Market Intelligence, LSEG discovered that the amount of merchandise on sale reached the highest level it has this year. That means that retailers were discounting almost everything, and this is, of course, being driven mainly because of Amazon Prime and then all the other discounters that hopped into the event. They definitely received the boost, but it underlines what we've been hearing from retailers, that the consumers being very strategic when they open up their wallets. They are waiting for those promotional events in order to go buy those discretionary items that they need, and also they're thinking twice before making those big merchandise purchases over $1,000, which were actually down 6% at Home Depot. So as you can see, the consumer is very price conscious and very value driven at the moment.
So, Jerome, as we kind of take that sentiment and we kind of compare that to, you mentioned Home Depot, which of course didn't paint the most optimistic picture. And then we look at Walmart, which we know is sort of that trade down, all encompassing retailer. What are big takeaways that we have? We have a choosier, more value conscious consumer, but is that good or bad?
Well, the consumer, that traditionally happens.
Roku, watch Roku. Could get something going here.
We're seeing some volatility with the consumer in itself. Having said that, another theme that we're seeing is that e-commerce is critical for the consumer right now. In today's July retail sales number, e-commerce grew the highest year over year at 6.7%. This is in line with what we saw with Walmart today, 22% growth. Home Depot, robust 4%. And both retailers said that the bulk of those online sales are being fulfilled in store, which underlines how important the omnichannel presence is for the consumer. The American consumer is all about instant gratification, and they want to be able to order something on their mobile phones on their way to home from work and be able to pick it up at the store. So value is very important to the consumer, and convenience. And therefore, we're saying that the discounters, Amazon, Walmart, are the big winners because of it.
So I'm very curious that when you look at a name and like the start to economy and the performance between like Target versus a Walmart, and I've been making the argument all day, I don't find them comparable anymore because they offer such a variety of price points, a narrow range, but also like as far as their e-commerce, which you can shop online, it's definitely seen as like an e-commerce player, whereas there's still the perception lacking that Target isn't really there yet.
Absolutely, and the main reason for this, it's not only against Target, but it works also against Amazon. Walmart's biggest compliment is the fact that 90% of the U.S. population is located within 10 miles of a Walmart. So they have the flexibility of using their stores as a lot of the warehouses, whereas the other two retailers don't. So definitely Walmart has the upper hand. And what really stood out this earnings season is, again, that membership income rose considerably, 23% for Walmart this earnings season, which means that on top of all the memberships that they've already gained, they're continuing to gain even more members that are looking for those everyday values. And the thing, it's not just about the value, it's the loyalty. It's getting to know that you can rely on Walmart to get these items as you're ordering and don't have to wait, for shipping 2-3 days as opposed to like at a Target.
This is a really great point. I'm glad you brought this up because one of the big takeaways for me is some of those higher margin aspects of Walmart really seem to be driving the operating income pace a little bit faster than sales. So yeah, they're growing across the board, but they're doing so in a more efficient way than their peers. And so much of that probably is due to both membership and their ability to have those fulfillment centers basically everywhere across the country with all those locations. If we take a step back, though, and go back to just kind of the broader macro retail sales picture, the economy has seemed a little bit more manic, at least the investor reaction to things has been over the last couple months, where we have a declining July, then we have a huge number, or the number released in July for June, and then a huge number now for July and August. Is it more important to step back and kind of look at the trends to kind of quiet the noise, or do you put more weight into recent
Super Micro,
No, exactly to your point. I mean, why
Pinterest, big gap between where prices are right now and where supply is overhead. Okay, let's go to the hourly time frame. This is Pinterest. Frano identifying a potential trade there last week. What's Nike doing? Nike broke trend last week. This week, I should say. Nike looking like it's going to keep stair-stepping higher. Nike.
For the third quarter, and this is mainly because we don't really have a big promotional event like Prime coming up that will entice shoppers to open. Yes, there's Labor Day weekend, but for the most part, what's driving the consumer to open up to buy those extra discretionary items is a promotional event.
Yeah, and I would say that as far as like the earnings season goes,
Super Micro.
very clear have and have nots of retail, which has been what's been
Nice turn. Super Micro.
Season, but as far as like trends now going forward, what are you watching into the back half of the rest of the retail earnings?
Absolutely. So as we mentioned, value proposition is very key for the consumer. So the discounters are going to be big winners. Obviously, Walmart, Amazon, Costco. And then the off-price retailers are going to be benefiting from this trend, like Ross and TJ Maxx. And then Old Navy is going to help Gap. Analysts polled by LSEC are very performance. In fact, they believe that Gap is likely to beat earnings estimates and post a positive surprise. And then, of course, it's back to school season, and teenagers are going to be eyeing what their classmates are wearing and then go back to the stores to buy it. And two teen retailers that are going to be benefiting from this trend is Abercrombie & Fitch and American Eagle, who have been also able to provide timely strategic promotions to lure those teenagers in.
Yeah, and I think that this has been a fun space to watch. Well, hopefully we continue to see a lot of this momentum that we've seen from retail sales as well as CPI, PPI this week continue, as it seems like it's led to some strength in this overall market. But appreciate it. Appreciate you being here today, Jerome Ortiz, Director of Consumer Research at LSEG. Now stay tuned. We're shifting gears here away from retail. We're talking Sirius XM, up 4.5% today. We're moving back to some of these filings of the SEC and what's got investors excited. Stick around. We'll be right back.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for Under 30. Today, we are talking Sirius XM, a name actually I have not checked out in quite some time, but definitely guarding our interest today as a result of Berkshire increasing its stake in the company. So here to tell us more on this story, I'd like to welcome in Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab. So, Jeff, walk us through what you're seeing here as far as what's driving shares to the upside today.
Yeah, the stock is still way under 30. In fact, we're on the year where we've seen it hit lows we haven't seen since 2012. At one point in June, getting down to $2.45. As you pointed out, up almost 5% today, trading a little over $3. And that's based on that news that Berkshire Hathaway has raised their stake in the company by over 96 million shares. Berkshire holds about 133 million shares, valued at over $376 million. They also are the largest stakeholder in Liberty Sirius XM Holdings, the tracking stock for Sirius XM, with a stake of about 30%. Those two companies are set to merge in September. Worth noting, some of the other names on the list for Berkshire Hathaway that they took more stake in was Ultra Beauty, Chubb, as well as Occidental Petroleum. And some of those names might make a little bit more sense when looking at the chart. So the Sirius XM purchase is probably a relatively big question mark for some of the shareholders out there.
Yeah, it's not completely unlike Buffett and team to look at sort of these almost fallen star-like companies, Jeff, but certainly not like the strongest of fundamentals behind this company when you look at sort of the revenue picture basically being frozen where it is. But I will say, living in Chicago for a long time, I didn't have a car. If you would have asked me a year ago, Sirius XM, I'd be like, why would I ever need that? But it's kind of nice when you do got the car. Now that I'm driving it, I actually prefer it. Takes the pressure off me. I don't have to choose what I'm listening to. You let the radio choose for you. What else is there to focus on with this? You mentioned that kind of combination out in front. It's not the biggest of market cap companies, perhaps something where they absorb the entire company. We don't want to speculate, but that's not something completely out of the cards, I would guess. What are you focused on, Jeff, when it comes to Sirius?
I think that is a focus point, and I think probably is playing a role in this purchase here. Liberty Media, who owns Formula One, Live Nation, announced they've reached a definitive agreement deal with Sirius XM. But I think outside of that, what we have to look at, to your point, Sirius is the top satellite radio broadcaster out there. They've got a significant market share of U.S. vehicles equipped with satellite audio, but we're continuing to see subscribers cancel or frankly never sign up for it. And a lot of that has to do with these other names.
All right, we're back up to getting close to the highs again.
Apple over 32 million, million subscribers. Amazon over 29 million, and more cars can connect directly to smartphones in some form or fashion. They can also leverage AI and other technologies to enhance that user experience, and we're seeing that in the numbers, right? In the recent years, the company continues to face some skepticism about what they're going to be able to do with the competition. After 8 straight years of organic revenue gains in the single digits, Sirius XM posted a 0.6% decline in 2023, and it looks like this year may continue that pattern. They're expecting about $8.75 billion in revenue. That's a target for 2024. It's 2.3% lower than what we saw last year. If you look at the last report, you're going to see revenue decline, subscriber revenue for both Sirius and Pandora struggling, average revenue per user decreasing, and ad revenue, which we know is important, is continuing to decline as well.
Yeah, Jeff, I have to say I agree with Alex in the sense I never even realized how relevant this still was, but I don't have a car. So I maybe when I get a car, I can retest, do some channel checks on the Sirius XM overall offerings. But we'll leave it there. Appreciate the insight as always, Jeff Pierce. And that'll do it also for Next Gen Investing for Alex and myself. Alex, check in where we left off. We always joke the market's like completely upheaval during our show. Today we are like flatline in all four major industries.
Yeah, session highs though, so nothing to complain about if you're a market bull today. What a recovery.
I know. What a nice week we ended up having, but we'll leave it there for our show today. Coming up next, we have the watch list with Nicole Pedalides.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I'm Nicole Pedalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Remick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Good afternoon. Welcome to the watch list. I'm Nicole Pedalides, and I'm comfortable calling this one a comeback rally now. Right up again for the S&P and NASDAQ. The Dow's up 500 points. Right now, it's 2 p.m. Eastern Time. We're live on the floor of the New York Stock Exchange. Glad you're with us. We have a big show for you. Paramount is in focus here. The media company closing linear television studio as part of its cost-cutting efforts.
Okay, a lot of people talking about Supermicro.
Jeffrey Kleintop standing by with some global market perspectives for us on the rise.
Supermicro, having a good day.
How the markets have shifted to defense in the
Supermicro.
third quarter. And our panel standing by to talk all about Deere's earnings release this morning as the stock beat estimates despite the challenges brought upon the current macro environment. In the meantime, meantime, taking a look here right now at the market. You can see the S&P 5539, that's up 1.5%. The Nasdaq 19,041, up 2.5%. The Dow's up 1.2%, and the Russell's up 2.8%. It's worth noting now with this move today too, we've now S&P has completely erased that sell-off that it saw in August. And here's a look at the futures products. Looking at right now, by the way, 15.45 on the VIX, the dollar 102.85, gold 24.92.
Okay.
Oil $78 a barrel, Bitcoin 58,900. And I hear a lot of clapping, as you do too, and that would be for the USA women's fencing team. So congratulations to our Olympians here in the United States of America. Right? Always a lot of fun. Congratulations to them, the USA women's fencing team. So the market's back in focus. Kevin Hanks, host of Fast Market here on Schwab Network, taking a look, and we'll begin with the bigger picture. We've gotten in some data, and you want to take a look at that. Let us know.
Yes, Nicole. You know, if you combine strong retail sales along with good corporate earnings, as well as a lower than expected jobless claims offer, and you get, like you mentioned, a recovery rally that now hits 1.6% on the S&P and almost 2.5% on the Nasdaq. Here's the numbers, Nicole. Retail sales for the month up 1%. The expectations were up 0.3%. Ex vehicles up 0.4. That's better than the up 0.1.
All right, SPY's about to take off again. About to move. About to go. S&P 500.
Jobless claims comes in 227,000. That was
Making new
less
highs. S&P 500.
to go at 233,000, and that trend is now on the downside. That along
Bollinger
with
Band's coming together, but we are making new
everything else we
highs.
have going on this week with favorable PPI and CPI data. We've made it through 3 days of economic data, Nicole, with a strong recovery in stocks. The market's having a really good week.
Yeah, without a doubt. That being said, let's talk about Walmart. We'll add some other good news here.
Yeah, you combine the retail sales number with Walmart's earnings. Think about this, Nicole. They made 56 cents a share, which was actually a slight miss in terms of earnings per share. Revenue, $169.3 billion. That's almost $2 billion a day in revenue. The expectations were for 167.3. Comp sales, here's where it gets really interesting. Comp sales up 4.2%. Weakness in the U.S. consumer not showing up at Walmart with a 4% jump in comp sales. Here's where it gets really interesting. They raised their fiscal 25 adjusted earnings from $2.23
All right, silver. We got some action in silver noted by Jason over at Three Peaks. Silver. Yeah, silver looking pretty good. Silver.
Improved consistency. They're sealing off. They're getting higher margin revenue streams. That warrants a higher multiple, is what analysts say. So all good things coming out of, frankly, Walmart that has already had a nice run, up over 6% today, Nicole.
Yeah, and a new all-time high, right, of over $74. And
Yes.
Wells Fargo keeps that overweight, but it's $81 target now. So great news for Walmart shareholders. Kevin Hanks, great to see you. Thank you. Let's take a look at the bigger picture. Ben Emmons is with us, Chief Investment Officer, founder, FedWatch Advisors. Ben, good to see you. We've gotten so much information. Bostic talked about, no fear of a recession. He's not worried about that. He still wanted to wait and see a little bit, but that the cut was coming. Any thoughts on what the Fed is doing or not doing, or Bostic's comments?
I think, Nicole, that Bostic's comments were kind of interesting because he's always been this messenger of the Fed. He's been the one that first signaled the tapering in 21 and then the big rate.
All right, McDonald's coming back in a little bit. McDonald's profit taking.
One actually to more explicitly say that September is really the meaning they will cut rates, because so far none of the other
McDonald's.
really indicated that, other than saying that they're getting pretty close to this point of rate cutting. So I think it gave the market some additional confidence today, in addition to all what Kevin just talked about. Good earnings data, good retail sales data, just really taking away all those fears of recession.
All right, Meta. Let me take a look at Meta.
Underscoring that this is a fact that
Big move
that
on
wants to
Meta.
cut rates when it is the moment they can, because it's actually the soft landing is happening in the economy. I think that's what Walmart earnings was really about today. Soft landing is here, and it doesn't require these big rate cuts. It just requires one increment cut as a start. And I think that's what Bostic said today, and I think that's what we can expect in September.
Right. How many cuts are you pricing in? And Citi had a comment too about the cuts as well.
I'm somewhat more conservative, Nicole, because I think that the market price is about 200 basis points or so over the course of the next year and a half or more. And I come a little bit on the cautious side there, thinking this may be more like 150, because this Fed is still looking at this data that we kept rates restrictive enough to slow the economy down.
Warner Brothers, WBD.
And yet we have an inflation picture
They're
that's
trying to
nicely cooled
bounce.
off, but there's still signs there of sticky inflation. Plus, there's the risk that if you cut too much too fast, that you actually supercharge this economy again, and therefore inflation could. We've talked about this a few times previously on the show. Michelle Bowman still is the main person out there saying that this rate hike remains on the table. Now, it's definitely not priced in today, but the fact that they're keeping it on the table.
Okay,
makes me
Upstart.
cautious
Let's
of
see,
the
Upstart.
It's 200 basis points in a short order.
Nice
Maybe
little
not the case.
bounce.
It's more like a incremental approach here, or maybe 125 basis point cut, and pause by a meeting or two and do the next one. You know, considering where the economy is, you end up with fewer cuts in the initial stage. I think more like 150 than 200.
Right. I mean, originally Citi had said that they were looking for 50 basis points cut in September, 50 in November, and 25.
All right, Lyft. We were looking at earlier. Lyft.
They were rolling that back a little bit. I'm not sure, but they certainly felt the cuts were coming. We'll have to research and see what they said today. That being said, big picture, do you feel a recession is looming or no?
No, I don't think that's the case. You know, I've been on this idea for a while now that it is an economy that moderates. It continues to moderate from this huge
Super micro.
pandemic boom and explosion. But it's
Consolidating at the highs. We got some supply right where we are right now.
Just take the CPI data from yesterday. If we're getting a recession, CPI would really start to decline quite sharply. And that's not happening. That's important because if companies can maintain pricing power, just like the Walmart earnings actually showed that, right? They have had some deflation on their shelves, but it drives up sales, and as a result, they're actually not losing really any pure pricing power. Then the economy is not in a recession or near a recession. Now, there's always a recession around the corner, I guess, but it's more about if the economy continues to be above potential at this point, and that's what this. Let's say the retail.
Nvidia, nice follow through. Chips doing well.
The control group is 2.5%. That's
Inside day on Ulta after Warren mentioned a position. Nvidia at supply again. Nice follow through. I was going to take the 120, 125. I decided against it only because I'll be out tomorrow. I'm going to be taking my daughter to college. First trip.
September and November. That's what I read. Talk about the elections and how the market volatility could be more prevalent, less prevalent. What are you thinking?
Yeah, the market volatility, I think, was partly affected by that how quickly we shifted away from the Trump victory and the Trump trade, right, back to with Harris picking up the polls really quickly and now basically surpassing Trump in various states. And again, that makes that the perception of the election like a very tight race, and probably will cause some level of uncertainty as we're going into September, October. You know, who will be ultimately the winner and what
Nvidia. Okay, looks good, Nvidia.
That's definitely a narrative narrative that's coming into the market again, I think in the next week or so, after this rebound sort of maybe fading out a little bit. It's also interesting to note that the Infrastructure Act and Inflation Reduction Act, some of the projects that people were doing on those two acts have been put on hold, in part because of the uncertainty about the outcome of the election. So that's notable because those projects had such an influence, such a contribution to growth last year, and it may have explained why we've had a bit of this soft patch over the last couple of months, and some of that infrastructure spending has slowed down. Nonetheless, the consumer isn't stopping, and it seems that the consumer isn't so affected by the uncertainty of the election just yet. Really, I think because we do deal with inflation further moderating, which probably is giving consumers a lot of confidence. So I think the election will play a big role, no question. It will again dominate market narrative, and maybe less so the consumers.
If people want to make money, what's a best bet?
I think today, Nicole, that the staples will really look attractive now because you get a little confirmation that the staples and Walmart's really done well, so there's maybe more upside. That stock, by the way, is trading 27 times forward earnings, so it's a little on the expensive side. But there's a lot of other staple stocks with like 20 times forward earnings. The same related to consumer discretionary, retail, or materials. Those have all been lagged. There's some upside here because of seeing some confidence back in the markets.
Right. Good to see you, Ben Emmons. Thank you so much. Appreciate it.
Thank you, Nicole.
Coming up, Options Corner. Tom White is standing by, and he will highlight the unusual options activity we're seeing, how investors are looking to trade on recent news of Walmart, Disney, NVIDIA. We got you covered. Options Corner is next. We'll be right back.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. We want to welcome in Tom White, host of Fast Market here on Schwab Network. He's always hawking out the big trades, and of course, Walmart making big news of its own, trading at all-time highs today. And you, in fact, found a bullish trade. I was seeing that earlier. I think I quoted an $81 target from Wells Fargo on Walmart, which hits this all-time high. But some of your thoughts on what you're seeing here.
Yeah, you'll probably get a bunch of analyst commentary over the next couple of days, Nicole, as far as price target hikes. I don't think there's going to be any upgrades just because most people have a buy on the stock, up nearly 40% this year. Pretty good report that they put out there as far as revenue growth of 5%. Comparable sales grew 4.2%. That's pretty massive for the world's largest retailer in scale. If you look at some of the commentary from the CFO and the CEO, that said that they're seeing growth in all of their consumer segments. So it's not one pulling away from the other. Grocery business has done really well.
Okay, S&P pulling back
Now that's done really well, but then
at
they
the
saw an
moment.
uptick in a lot of the other segments that aren't tied to grocery, and that's a positive. And then retail sales on top of it, kind of reflective that, hey, try to bet against the U.S. consumer and you're going to probably lose at this point. I think one of the concerning things is Walmart might be on an island of its own because of the fact that you've heard other retailers kind of put out there that, hey, we're going to cut guidance. We're seeing some softening demand in certain areas of their business. So Walmart just kind of takes care of everything, where they've got the low-income consumer, they've got the high-end consumer that's actually trading down because of inflationary pressures also. So everything working out well for Walmart. Shares are up over 6% today to those all-time highs that you mentioned. But we did see some more unusual option activity in here out in the September monthly cycle. So 36 days.
Okay, Super Micro
Traders come in and buy over 15,000 of the 75
pulling back a bit.
strike calls
Super
in
Micro.
September. Average debit of only 87 cents. There's not a lot of option premium in options that are out of the money here in Walmart. So they didn't pay a hefty option premium, only 87 cents per contract. So that break even is 75.87 over the next 5 weeks. That's about 4% above the current share price. So just one more day like today, Nicole, and you're already above that break even. Call volume, though, 7 times normal daily average volume. So you can see the rally here at all-time highs has the call buyers out in full force.
Yeah. Just one more day like today. Yeah. And meanwhile, we're up all these days in a row. We're up 6 days in a row for the, what is it? How many days are we up in the S&P?
6.
Anyway, I think it's 6 days, right? So now maybe are we too toppy? Do we start to sell off? All you need is one more day. So we'll see. This trading's not easy, I know.
Yeah.
How about we get to the next one, Disney?
Yeah, shares having a good day today, up to over 2%. Still down about 2% on the year, but still this month of August, you mentioned the S&P 500 and NASDAQ 100. Those actually ticked into positive territory for the that we had to kick off the month is in the rearview mirror at this point. But Disney's still under pressure on a year-to-year basis. Their streaming services finally turned a profit, small one, but an improvement over year-ago levels where they lost over $500 million in that segment. So that's the good news for Disney, that they're maybe starting to become positively, profitable on the streaming side. Now, the park side, they're starting to see slower growth there. Revenues basically flat there, and they expect it to kind of decelerate over the next couple of quarters. That's not a positive. They did just have their D23 fan convention where they rolled out their promotions moving forward. They're adding more cruise ships. They're adding more experiences at the park to try to draw back that consumer. But, this is one of those, travel or entertainment type of companies where it's not cheap to take your kid to Disney anymore. I don't know if it ever has been, but it's getting more expensive. And I think that's why maybe you're seeing a pullback there. Disney Plus, 154 million subscribers. So that's lending some credence to the profitability side of their streaming business. ESPN app will be rolled out as a separate entity in 2025. Live sports are doing really well. So there's some things working in Disney's favor, but they have to turn around that parks business at this point. But we did see some unusual option activity out here in the November monthly cycle. So a couple of months until expiration on this one. Trader bought 5,000 of the 95 strike calls for an average debit of about $2.37. So that break even of 97.37 over the next 92 days. That's about 10% above the current share price. So seeing some bullish flows, and not only the ones that I'm talking about today, Nicole, because calls are out trading puts on across the board basis on nearly a 2-to-1 level at this point. So that breadth of this rally really taking hold as the S&P hits its 6th straight day of gains.
All right. I hope everyone's having a good day. I'm just marking up some charts and doing some things while I'm waiting.
You got a little squeamish on that big sell-off on Monday. You missed it. Right now is the gain. Now that you see another bullish trade.
Yeah, not surprising. This stock's up nearly 17% over the last week. So it's made, some pretty good inroads to that fall that we had. Remember, this stock was down at $91 a share just over a week ago. So we've seen a resurgence. It's on the August 28th, so that'll be the next catalyst for this stock. But it seems like people are piling back in. If you looked at some of the 13F filings, though, a lot of the hedge funds were selling their stakes in NVIDIA last quarter. Now, that's lagging indicators, but we're still below that all-time high of $140 per share. If you look at the total addressable market for
MACD stochastics turning on Supermicro.
NVIDIA produces, it continues to expand.
Let's go look at the triple Appel.
The other big tech companies like Meta, Google,
Triple
Alphabet,
MACD.
Microsoft continue to grow. Expectations
Okay, so your long term is about to cross the zero line. That'll be the final crossover we're looking for. Okay, looks good.
The last three, so they've got to keep that streak going. I think at this point,
RSI rising.
valuation's starting to get lofty, but the stock has rallied. Over 2.5 million calls have traded so far in the day.
$1,100, $1,200 bucks.
Left in the trading day, so that'll probably get added on to.
Was trading near 1,200, 1,190. Made it all the way back to 500.
Really short-term positioning by these traders.
600-point
Over 20
move.
or over 50,000 of those 125 strike calls were bought up. Average debit of about $2.10. So they're already doing well as the market continues to surge upward. The break-even 127.10 over the next 8 days. That's only about 4% above the current share price. So you don't need that big of a jump, but it's a really short-term trade. Call volume, even though we have massive call volume on a daily basis in NVIDIA because it's one of the most tradable products, it's still double normal daily average volume that we've seen over the last 5 trading sessions. So, yeah, not surprising on a big rally day to see people piling into the call side here in NVIDIA.
All right, thank you for that. Yes, and about an hour and a half left to trading. So
Supermicro.
Good to see you, Tom. Thank
Nice
you.
little
Every
bounce.
day here with Options Corner on the watch list, Tom White. Coming up, let's dive into Paramount. The company closed linear television studio, began layoffs ahead of the merger with Skydance.
I'd like to see us get above 640, 638. 638, 640. I have a hard stop at 4 o'clock. I got to run the DMV and pay for a license plate renewal.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben
NVIDIA.
Wittgenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Okay, we're at the high of the day. Don't buy calls at the high of the day. I'm talking to myself. You don't buy calls at the high of the day, Vinny. All right, it looks good, though.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own.
Bitcoin, pretty decent drop in Bitcoin
Oh, I gotta take this
from the
call.
highs today.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Okay, S&P cash hanging out at the highs. S&P cash.
Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We're watching Paramount. Paramount, the latest media company, reducing its costs, planning on cutting $500 million this year. How will they do it? Well, we'll break it down. We're seeing them sell off parts and making deals.
Microsoft's still going. There goes
Naveen
Amazon.
is with us,
Amazon.
Telecom Managing Director, S&P Global Ratings. Thank you so much for being with us. So we see the cost cutting. We see the Skydance synergies, for example. Explain some of that. And do you think, because I know you're also there at S&P Global, sort of rating the balance sheet, are they making some good moves?
Nike going again. Nike going again. Nike starting to move.
All the media companies are looking to
Nike
do the
going.
same thing that Paramount has talked about doing, which is to right-size their cost structure, especially at the linear TV business as that continues to decline. And the focus here obviously is to improve profitability. The steps that Paramount is taking,
Amazon.
steps that Comcast, NBC has taken in the past. Disney announced a bunch of cost cuts as well. So this is certainly well within the things that all of these companies are trying to do to improve their profitability, their cash flow, and for us to improve things like credit metrics.
So, when you look at improving the cash flow and profitability, there is that decline in linear television, no doubt. So the steps that they're taking here, one by one, in the end, are we going to be calling it Paramount? Are we going to call it something else? We know they've had to spin off.
Meta up 10. Taking a break. Meta.
Folks and more, right?
Right. And it's Paramount. If you look at the things that they announced recently, they've operated two separate television studios, and that's a legacy that dates back to when
See ARM Holdings.
was a separate company from
Just sideways.
They both ran television studios. There's no reason to have two separate television studios. You can combine that. You can have all of the work done by one group, and so I think you're going to see that as well with some of the specialty film studios.
ARM Holdings.
that media companies have.
Daily reversing the trend too.
Headcount at the corporate level, or at the
Chips had a nice discount. A lot of firms buying chips.
at one studio rather than multiple studios. And then on the linear TV side, you've had for years businesses that were built around larger sales forces, general managers running each one of these cable networks. You don't need to do that anymore. You can eliminate a lot of those costs. And so this is an ongoing thing that's been going on certainly with a number of other companies for years, and Paramount is now accelerating that process.
Tell me a little more about the merger with Skydance Media. So obviously they're spinning off, they're shutting down the TV studios by the end of the week. These are aggressive cost cuts. They're laying off folks, but all of this is ahead of this expected merger with Skydance. Do you think that seems to be there are synergies?
Apple going for higher today.
And why is that a good deal?
Sure. So Skydance laid out $2 billion in potential cost savings as well as synergies
Apple.
when they announced the proposed merger with Paramount.
Okay, Apple. Nice hanging man candle about to push through.
Is part of that
Yes.
$2 billion number. And so, it's certainly a way for them to combine this company and to reduce costs and to try to grow EBITDA again. In a way, this is kind of a head start for Skydance once they take control of
Apple.
sometime after regulatory reviews next year. They're going to want to do a lot of these things, and the fact that they're willing to work with Paramount to start some of those cost cuts today means that when they do take over the business sometime next year, they've already started that process of improving
Look at the volume.
cost structure for the company.
Yeah, they said that they're laying off 15% of the U.S. workforce.
Look at the volume on Apple. Looks good.
800 positions in February.
Apple's about to break out. Apple's about to go.
Tough, and their company is not immune. Would you agree that times are tough for all these media companies, and would you have other examples?
Sure. Oh, definitely times are tough for whether
Oh,
it's
great.
Warner's
Great
or
buying.
even Disney. They're all facing the same issues, especially with the legacy media businesses like linear television. And so you've got to constantly think about how to right size the costs at those businesses. And it's not just headcount, it's also what do you do with programming. At the end of the day, I think what we're seeing a lot of these companies try to do is to, as revenues decline, they're trying to maintain margins. And so that requires them to also make cost cuts as well. Actually, one of the risks in doing all of this is media at the end of the day is a people-driven business. And so if you are cutting people, you might impact the way that either content is created
Lyft.
or the relationships that the studio has with content creators. And so that
Pulled back a little bit. Lyft, looking for a follow-through. Next few days, Lyft. PayPal. PayPal at the high of the day.
David Zaslav, Byron Allen, who made a $30 billion bid for Paramount, Apollo Global, Skydance. Then there was Apollo Sony, Shari Redstone, of course, going through all of this with all these folks. So Shari Redstone has approved this Skydance.
Let's see. Pinterest. Let me take a look at Pinterest.
And it seems to be in place. Was this the best bet? Were any of the other ones that were you upset that they sort of let that one go when you were doing the balance sheet and the credit ratings?
PINS, Pinterest.
Yeah, so I mean,
Yeah, looking good. Looks like it could see 33.
That Edgar Bronfman is put together a package to potentially make a bid as well. So I don't know if I can say that we're at the finish line in terms of Skydance being the final winner. We'll see what the potential offer could be. At the end of the day, it's difficult to. I mean,
Netflix squeeze.
Voting control of this company, and so how they, what choices they make or what choices she makes is really up to her, and obviously to the board.
Nike going.
Whether this is the right choice, we're going to have to see longer term.
Nike's going. All right, looking good on Nike.
If it was another strategic, another media company that made an offer, like a Sony, for example, that faces a lot of regulatory risks that you certainly aren't going to get from this kind of a transaction. So we'll wait and see. Certainly, it's a different management team that's going to come in and run this company. They may have different ideas on what they could do to try to stem the losses at legacy businesses and to try to grow the business going forward. And certainly, it doesn't help that that there could be a potential more money coming into this business. With Larry Ellison possibly putting in more money than you do.
Look, there have been people quoted as saying that both Paramount and Bronfman have declined.
S&P trying to go.
Any comments, but according to Bloomberg reports that
S&P is trying to go as well.
Junior was close to making this offer. To your point, he's the Seagram heir, and that he would be looking to make this offer for National Amusements.
98 million.
Company that controls Paramount, but we don't know the details of this offer. So it really looks like it's not over yet. This is the longest no deal in history, it feels like, right? Final thought. It's been brutal. I feel like I've covered this a lot. Final thought.
Yeah, no, it's certainly been a transaction or a potential transaction that's been in the press for an awful long time. And so watching it get negotiated, essentially, with the media staring over the shoulders, paying attention to it, it's been a tiring process. I'm sure, I'm sure everyone would like to get to the finish line and to start to implement whatever strategy they want to put in place. But we're going to have to wait until that deal actually closes.
You want
98 million right along this area bought as we push through this level. Let's see if we can follow through some more.
The deal is done by the end of the year.
Amazon still going.
I think we end up, yes.
All right, we'll go with that.
You still have to get through regulatory review. You still need to get through regulatory review, and so it's always the slowing part of the process.
Good point. So this and the election are two things I'd like to get through.
Okay, the New York FANG stocks are looking good. There goes S&P. S&P is about to break out.
Naveen Sarma, S&P Global Ratings. Thanks for being here on the show. Coming up next, we'll get some global market perspectives. Charles Schwab's Jeffrey Kleintop standing by. So he'll give us all the details. Japan's latest GDP report? What does it signal for the consumer growth we need to see overseas? And what does that mean for us here at home? Jeffrey Kleintop has the answers. We'll be right back.
S&P is about to blow a gasket here. Here we go. About to go. Looks like we're going to lift. Yes, sir. There goes Apple. Pow. Oh, boy. Look at this market. Oh, this is great. What a day. What a day to daydream. Do, 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 do.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Nike gone. Nike's gone. All right, S&P showing a breakout, but nothing happening.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides coming to you live from the New York Stock Exchange. 90 minutes left in the trading day. The Dow right now is at 528 points. We've been climbing.
All right, looking good.
Now, the S&P erased the August sell-off, and we'll get a market update. Ben Lichtenstein is with us, senior futures contributor. I'll leave it to you because you're watching.
Nvidia fading. Nvidia fading.
What stands out to you? I think you're looking at the NASDAQ and more.
Yeah, those lows from last week certainly seem like they're in quite the distant past. And
I can't help but think that we should be taking some profits off up here. I feel like we're getting greedy.
For the major indices, you've got the Russell, which is leading the way. We're talking another 3% attacking on its small caps today. A big move up, but I'm looking at tech. I've got my eye on the NASDAQ and some of the gains we've seen there this week, back above 19,000 with conviction. And in fact, today to, well, just shy of 19,500. Look at this really well-defined trend up. This is just today's intraday price activity. Stepping away from the 1-minute candles into a longer-term chart. We talked about, again, reversing that big move lower that we saw into the beginning of August. Here we are. That's right. We're back to the basically July 31st highs here, Nicole, in the NASDAQ. Again, a big move up through 19,000 of the last couple days, and a reflection of what we're seeing. Some of that unease, those concerns, the uncertainty about the economy, as we've seen labor conditions remain strong, but not too strong, right? I feel like we saw retail sales, which kind of hit the mark, and I think Walmart's kind of a pretty good indicator of all of this. New all-time highs. The one sort of standout player, a lot of green arrows in terms of this risk-on sentiment, but Bitcoin's actually lower today, which is kind of interesting, down around 1 3/4%. Not really sure what to make of that, but again, a lot of green arrows across the board. It's not just the indices.
Yeah, without a doubt. I mean, I don't know that I even saw a sector that was lower today. I'll double check.
Yeah, it's been a good
while
day.
You're telling me about, not even one sector is down.
Yields, I mean, one of those odd days where just everything is rallying, Nicole. Take a look at the 10-year, up to 3.94. So again, some pretty good data this morning suggesting that the consumer
What does, let's see.
there's very little little fraying.
What's McDonald's doing? McDonald's. Okay, pulled back a little bit from the highs. Looking for a follow through tomorrow.
Maybe not as much as we thought. Come September.
Momentum indicators are suggesting that we could see a follow through.
Expectations for the rest of the year, but just taking a look at the dip that we saw down in the 10-year when we did get below 3.7 down to around 3.65. That had us back to levels.
Nvidia fading.
We're going all the way back to June, May of last year, but again, starting to recover here. Still holding well short of that 4% level, but again, kind of back into this range that we've been in, where the market's found comfort and where stocks have been able to rally while we've held within here. So it'll be interesting to see if we get back above 4% over the next couple of days again, and how the market responds to that. But as of today, it seems to be a pretty favorable reaction again as it sort of looks at this all, I think, on the bigger picture and kind of with the economy in focus and not so much these individual markets.
All right, Nvidia fading pretty fast now. All right, so you had your opportunity to sell into strength.
Thank you for all of that. Appreciate it, Ben Lichtenstein.
Somebody took some profits just now. Nvidia just profit taking. S&P is up nearly 100 points.
Bring in Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Thank you, Jeffrey, for being here. So you're watching Japan's second quarter GDP print, which was a surprise, right?
Yeah, blowout number. Today's U.S. retail sales data kind of trimmed the outlook for Fed rate cuts this year, boosted the dollar versus the yen. But that might only be temporary, because today's report showed Japan's GDP grew an annualized 3.1% in the second quarter. Now, that might not blow your mind, Nicole, but remember, this is Japan we're talking about. It's an impressive number for Japan. It's actually 4 times faster than Japan's average pace of GDP growth over the last 20 years. So that rebounding growth in Q2.
We'll have more opportunities. This market is super bullish, but I would be looking for opportunities for some pullbacks. It is, we got about an hour and 15 minutes to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. Nike's on the move, up $4.22, 5% on the day. Nike following through. Nike breaking out. Wow. Nike, wow.
And took rate hikes basically off the table this year, but Japan's growth now continuing to beat expectations could bring rate hikes back on the table for the BOJ and shake up the market's concerns over
Walmart.
trade. Markets right now are only pricing in a 50% chance of another rate hike from the Bank of Japan this year, but further improvement in the
All right, S&P just not giving it up yet. S&P is not giving it up. Look at this freaking market.
I was thinking September, but that could be pushed back into the fourth quarter. But it seems likely, given the backdrop of economic growth and inflation that is above target, and everything kind of falling in line with what Ueda had talked about in
Apple trying to pop a little bit more.
Essentially, the markets are meeting or exceeding the benchmarks that he put in place for
Damn.
rate hike later this year.
Looking good.
All right. What's diversification? What is that?
Well, it's basically, if you try to diversify over the last year out of the AI-driven tech stock leadership at any time, it ended up not being rewarding. It was diversification, trying to diversify away from tech. But that might be changing, Nicole. So far in Q3, along with the shift to defense.
What's Chipotle doing? Chipotle, nice reversal. Chipotle.
For equal-weighted indexes since the bull market began back in October of 2022. Equal-weighted indexes.
Chipotle buyers all day long.
The performance of the average stock have lagged the capitalization-weighted indexes we always talk about, which more closely track the performance of the biggest companies. So broader diversification may finally be beginning to reward investors when it comes to both managing volatility and seeking better performance.
Right, understood. What does this all mean for us at home?
Well, I think more volatility over the remainder of this summer. Usually in August, it's kind of the dog days of summer. We don't have anything to look forward to necessarily, but we do, right? We've got Jackson Hole from the Fed. We've got a number of data points coming up. We've got a lot more data related to the job market coming up here. That's going to be critically important. And, of course, you've got geopolitical risks going on, the wind-up to the election. All of this suggests higher volatility in the markets. I think it's interesting to see the markets rotating in defensive sectors. Not today, no, but so far in Q3, defensives have outperformed cyclicals. And notably, it's like utilities and healthcare and staples outperforming tech and communication services and consumer discretionary. And so I think we might still see that defensive bias over the remainder of this month, given the potential volatility connected to
All right,
things like the APR
CMG.
trade, but also this concern about
Not
the
freaking
slowdown
out.
in U.S. economic growth.
CMG giving you a nice opportunity at 48. It's up $6. Nice.
Great to see you. We appreciate it. Thanks.
Chipotle. And it's still going, Chipotle.
Discuss some earnings for you from Deere. We'll be right back.
All right, let's take a look at the Aussie dollar, Japanese yen pair.
How's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Big fade now.
Yeah. At Schwab, I can get full service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available
All right, looking good, folks. Looking good.
on any device for free. Only on the Schwab Network.
Doesn't look like they're getting off the bus yet. Or the train, whatever you're taking to the party.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience.
Meta coming out of a squeeze, perhaps. Nike, nice move on Nike. Nike. All right, so you got a nice fade on the Japanese yen, Aussie. We've been looking for this since Monday, over a week and a half ago. Okay, so that Monday that we had the problems with the Nikkei and the Bank of Japan raising rates freaked the market out. Okay, we've got a nice reversal from 31,200. Wow. 5,000 point move in the Nikkei.
Welcome back to the watch list. We're watching Deere trading higher after reporting its earnings this morning. I want to bring in our panel, see what they're thinking here. John Eade, President, Director of Portfolio Strategies, Argus Research, and Jonathan Secreta, Equity Analyst over at CFRA. Jonathan, you have a 390 target on Deere. Tell me some of your thoughts and where you think it's headed and why.
Yeah, so we thought this was a strong third quarter. 38% decline in EPS, 17% decline in sales, and Deere still beat consensus view. So that really gives you an idea of just how negative the expectations were going into this quarter, and for good reason. We've seen a very difficult and challenging macro environment. You've seen peers report very lukewarm earnings. You saw AGCO and CNH Industrial significantly cut their outlook for 2024. So the fact that Deere & Co. reiterated their $7 billion net income target was very impressive. And it's a large reason why we're seeing that 8% rise roughly in shares today. We think that Deere & Co., this is a good indication that this is a best-in-class company, but we're still keeping the company at a whole, just given that the macro environment really is that challenging. We recently had the USDA crop production report come out, and we're expecting record level yields of both corn as well as soybeans. So we think the prices and commodities are going to continue to be challenging, though we are quite impressed with the execution from Deere & Co.
I mean, there were lowered estimates. We did sweep past those profit beat, but there is some concern, to your point, Jonathan, about the macro environment, right? They said due to a challenging environment, some muted demand maybe across many different areas. Johnny, some of your thoughts, where it's headed.
Yeah, thanks, Nicole. And I agree with almost everything Jonathan said. And Deere is a company that really manages what they can. They can't really take control of the overall global macro environment. So they focus on their operations and on their workforce and on their strategies. And I think you saw that in the report today. For example, if you look at their inventories, they're not expecting much demand over the next few quarters. So the inventories are down 18% year over year. Not building tractors they don't expect to sell. They're holding on to price. They had volume declines in their agriculture divisions, but they did offset that with steady to slightly
Lyft
higher
at the highs of the
pricing.
day.
So they're
Lyft
doing
looks
a good
good.
job on price. And
Super
they even
Micro,
mentioned that they're going to be trimming their workforce
Apple.
a bit in order to hold up
Apple
their
looking
margins.
good.
Now, Deere has been a margin story for about the past 5 or 6 years. They used to target a 12% mid-cycle margin. Then they raised that to 15%. Now they 20%. Their margin year to date is about lower than they want to be. But this is a simple company. And I think with the value that the stock offers, low PE, low price to sales, nice yield. We've got Deere on our buy list with a target of, I believe, 430. They both are buys. I would say that Deere is maybe a year or two ahead of Caterpillar in really focusing on the margins and trying to turn their business more consistent. Caterpillar is trying to get a bigger mix of services, which are higher margin and more consistent than the sales of the big equipment. And they're doing better than they had expected on margins. But I do think that Deere is setting the pace in the race between those two.
Yeah, understood. What do you think, Jonathan, Secreta, about Caterpillar? One higher target, 390 target, 377 for Deere. What about Caterpillar and other industrial stocks? What's the best position?
Sure. So as far as large construction equipment manufacturers, we actually prefer a company called United Rentals to kind of capture some of the more attractive sectors.
All right, Meta looks like it wants to go again. Meta is not finished.
So if you look at a lot of the tailwinds coming from the IIJA, IRA, some of that manufacturing reshoring coming back to the United States, there are positives there. We think that there has been a shift towards rentals versus direct ownership, given the large cost of capital equipment, especially with the higher interest rate environment. We thought that the most recent second quarter for United Rentals was very attractive, and we think there's still some room to run there. So we have a buy on United Rentals. Caterpillar is dealing with some more of the global issues, a lot of lumpiness internationally, particularly in Europe. But this is less so with, say, a company like United Rentals that is focused entirely, almost entirely in the United States.
Yeah, United Rentals, URI, trading at 723 today, and you do have a buy rating on that. So very interesting. It's off the highs of 789, almost 790. What's your target? Do you remember what the target may be? But you just, I'm putting you on the spot. If you don't have it, it's fine. I know you have a buy.
Wow, what a day.
Yeah, currently a buy rating. We recently increased it after the recent second quarter, but I don't have the exact target right now.
Right. So for URI, which 1 year has been a winner, 50% higher. Jonathan Eade, last final quick thought on the group.
Yeah, another stock we just upgraded was 3M, MMM Corp, with a new CEO on board and a new plan for restructuring. We think there's a lot of opportunity there. The shares are still 25% below their all-time highs, a lot of room to run, and still early in this CEO's tenure. So that's a new upgrade from us at Argus.
Great to see you both. John Eade over
Thanks,
at
Nicole.
Argus Research. Thank you. And Jonathan Secreta at CFRA. Thanks. Good to see you both. Appreciate it. Good look there at Deere, which is up 7.5% today. That's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with us every day, 11 a.m. and 2 p.m. right here on Schwab Network, which you can get the Schwab Network app for free in the Apple App Store. Tune in 24/7, schwabnetwork.com. Thanks for being with me. Keep it right here. Market on Close with Oliver Rennick is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends. All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Oh, I'm shocked.
That easy.
It is
I mean,
with
I know you're
Schwab.
talented, but damn.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up.
Nice. Makes sense.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick. And we've
All right. I'd be taking some profits off. Hopefully you're taking profits.
see how far we can run this thing up. This is about as good of a day for stocks as we've seen in a while. Not just including the last couple months when things have gotten a little choppy, and of course, last few weeks in the middle of a big sell-off.
Yeah.
Obviously, nice
Take
to
some
see
profits,
green,
folks.
but
Take some
the whole nature
profits.
of today's market is distinctly good, and I think high quality. So let's go through it here. Firstly, the Russell leading the most, up 3%. A lot of times the Russell is the head fake early on, the trap, the small cap tease that has faked.
What do they do? Are they satellite? Are they satellite, Brano?
Spurred on by CPI last month. Well, this week it's looking like the real deal. But this is really important that today was the main event. This is something that we talked a lot this week about, that the numbers from retail sales and jobless claims would be the one that moved the needle more this week. That was the correct analysis we're seeing here. Inflation is nice, of course, and the PPI move was big too, but this was the main event. We generally know that inflation's cooling off. We generally know Fed's preparing to cut. The more important question has been why? Is it out of celebration, an immaculate landing, or is it because we've choked off economic activity? Of course, the concern here since the bad NFP print was that the signs were pointing towards
AST Space Mobile being mentioned by Frano. First and only global cellular network in space to operate directly with standard unmodified mobile devices based on extensive IP and very nice.
And what you should be rooting for, consumer discretionary stocks up the most. Walmart with another killer report. Nothing wrong if we're spending at Walmart. There's no bear case in sales at Walmart. Maybe it's not as buoyant and jubilant as stimulus-driven pseudo-luxury spending and going beyond our means. I could live in a world where everybody shops at Walmart, and so should you. So let's celebrate Walmart ripping and moving higher here. There's really just a clear positive message that the consumer still has life in it. Okay, maybe we want to save a little bit. Maybe we're not blown as much on big ticket items. That's all right. Sometimes you got to dial it down a little bit. Bottom line is we've still got a solid pulse on the economy pumping, and that's important because when you see the jobless claims also
CMG at the high of the day. CMG.
That shows us that maybe things aren't spiraling out of control. Does it mean that directionally we're still slowing? Certainly can be within that paradigm still, but two key pieces of information that gave us reassurance about the economy, and the market has a broad rally with it. That's important too. This isn't like we got the small cap attempted leadership before when it was at the cost of tech. That's not a good trade-off. That's why the rotation didn't work in July, because you can't trade the market for big tech because the big tech is the market. So the fact that NVIDIA went right through $120 today, the chip makers are in the mix too. We do have Applied Materials this afternoon, by the way. We're going to hit those earnings. But NVIDIA up 4%, going right to what could be an area of resistance. This was an important line on the way down, I think. It's like somewhere around 120, but it fits the pattern here the last 48 hours of stocks ripping through potential resistances, whether it was 5,400 or 5,450 on the S&Ps, 5,500 added to the list, NVIDIA 120 as well, just moving right through it. That's impressive stuff. That's very good. We want to see it hold. So what doesn't work on today also is stuff that you can kind of welcome. One of the main ETFs that I've been tracking throughout the year that I've said is a great way to kind of thread the needle, the anti-beta fund, which has worked really well when there's volatility. It's caught up to a lot of the high quality or even some of the momentum stuff on the year. But days like today, that's going to get hit because the low beta stuff is selling off. Kind of safety trades. Look at the way utilities are underperforming today. Some of the stuff in the more defensive category of the market's down. That's what you want to welcome to be down if you got to pick. So this really is about as good as you can get. An equity rally that's based not on the need for cuts, but the surprising strength of the economy. Huge difference also showing up in bonds today too, which are flattening the yield curve, but still, at least it's not the bear steepener that has always been the end cycle indicator. So this looks like a much more healthy rally. And by the way, if you needed any more proof, the extra stuff, the excess, is not taking part. Bitcoin down almost
Roku
2%.
getting some alerts on
Not having a great
Roku.
day either, even though the chart's been really good for gold, because when you have good economic data, maybe you don't need gold as much. Maybe you stick with it. Maybe just go with the trend when it comes to these things. And they've been polar opposites. Gold looking great, Bitcoin looking weak. I could live with that. Stocks up, high quality companies leading, good American data, and Bitcoin down. I'll take a day like this any day of the week. I got Kevin Hanks and Jenny Horn here with me in the studio. What do you think, Jenny?
I love it. I love that Bitcoin's down. I mean, I'm not saying I'm like rooting against Bitcoin, but it's just so funny. Like the flight to safety, the flight to quality that was Bitcoin when like we had like the narrative of the banks collapsing and like
what flight to safety? I mean, the market like has never been safer today, and look at Bitcoin.
All right. So down about 2% right now. Hopefully, I mean, look, I do believe that it has real utility as an indicator of risk-taking appetite. So to some extent, you know, you want to watch it because if it like starts falling off, that's usually not an environment where stocks are doing great. Of course, there's also potentially a moment, maybe this is the moment when we just put the junk aside and say, let's go for the high-quality companies here, Kev. I mean, that's kind of what's happening.
Jenny Horn looks forward to your notes and letters on the bearish Bitcoin move.
I'll dive in front. I'm already taking the bullet.
I was gonna say, I'm sure I will hear no shortage of commentary.
Exactly. She looks forward to them. Trust me.
There goes Apple.
Here's the way I look at the market today. Great data, great earnings, and even though yields rallied, they're not a scary level. Even though the dollar rallied, it's not a scary level. Dollar and yields, they may have come up anyway, regardless, because they were a bit overdone on the downside.
Sure.
So the fact that those two are rallying hasn't concerned stocks because they're still at levels that don't scare the market.
Right.
So they did not impede today's rally in any way. It was all about what we warned it was going to be all week. It was going to be retail sales combined with Walmart, throw in a little jobless claims that were weaker than last week that the market liked, and you've got a prescription for a pretty nice day here.
To the point on bonds, also the selling kind of slowed in the second half of the day. We've got the bull flattener today, the bear flattener. That's an interesting one. So you got the bear flattener in bonds. One could kind of go into a whole argument about that, but generally, I think still when the alternative has been the cuts-driven steepener, which is like always the end-of-cycle indicator. The market was wrong to celebrate that. I feel like if you have to pick a curve, I'm going to go with the one where yields are going up again because that's the one that says the economy is not going to hell in a handbasket.
Well,
now we may not get as many cuts, which we're not because the 2 years coming up quick today too.
Exactly. The cuts, what we're going to lose is any notion of 4 by the end of the year.
Emergency.
And their emergency was never on the docket. That would have signed. You're at the point now of fighting against inflation where it's legacy. He's got to get it right. Raphael Bostic even mentioned if we cut and have to re-hike, that is a legacy killer right there. So they want to get it right, and so they're willing to be patient. And guess what? This gives them more ammo to be patient, right? This doesn't force their hand in any way. So I think status quo, but the 23rd is going to be a big day.
Yeah.
He talks about exactly this.
I think Powell's actually kind of breathing a sigh of relief from this, to be honest, because the pressure to do 50, by the way, I'm not doing it yet, but I've got a little list of those who called for emergency cuts, and I will be coming for you. But I'm going to give it more time. Because that was the most absurd thing.
That was the quickest I've ever heard the emergency rate cut meetings.
Yeah.
I was like, we got 1 day of elevated VIX,
Come on.
or 2, I guess.
Like, and all these people want to say they can do their job better than Powell. They would have panicked on the yen trade, and they would have started slashing rates that day.
That's why they're not the Fed chairman.
There's nothing worse than old guys telling trading stories. But here's the good one. When you identified a guy like that, you know what you said to him? Come over and stand right next to me. I want you to stand right here. I want your trading ideas, and I want you to stand right next to me.
So you can do the George Costanza?
That's so I can fade.
Do the opposite?
Yes, exactly.
Okay. All right, let's talk a few things here that are moving. 13F reports from yesterday. And interestingly enough, the biggest movers today are the ones with some new investors in them, whether it's Ulta, we talked about that a little bit this morning, but Supermicro actually too in there as well.
Yeah, Soros' fund management is revealed they purchased around 25,000 roughly shares of Supermicro. Such a high-profile fund. I mean, Soros is like one of the ones I most closely follow, but it might oftentimes signal like obviously confidence in the company. But the purchase, while not the largest position, it's enough obviously to gain some of this attention. But what I actually think is more interesting about this move with Soros specifically is the Apple stake, which was like $160 million, that was the most notable, but they also disclosed investments in like Broadcom, Micron, Texas Instruments,
But not all of these chip makers were found equal. Actually, they ditched their stakes in Qualcomm and Ambarella, which I think makes them the move in like Supermicro even more strong, because this was a favorite by this fund. So I think this is becoming more and more of like the ultimate stock pickers market. I think it's really interesting. You look at the best performers in the S&P 500 this week. We have Supermicro's number 2, just behind Starbucks, which of course had its own news. Then Nvidia, Micron, Ulta Beauty. I mean, all of these names have had like specific company stories, which I think makes this interesting. It's not just like this rising tide lifts all boats, as we've talked about with AI for so long.
They've all had activist investor stories.
I like all the activist investor stories. Look at it. It's spurred this rally.
Well,
maybe not spurred the rally, but it's definitely not hurt it.
No, it did spur a pretty big rally in some of these. But the thing today is that alongside, there's some high beta stuff in there that's in the mix. There is some lower quality stuff in the Russell that's going to be up today. But importantly, high quality factor 2 is up like 2%. Dividend payers are up a good bit. Value stocks are up. I mean, there's a much more healthy tone, I think, to this rally than really anything we've seen lately. I'll give you last thought, Kev, real quick.
Yeah, other than utilities and real estate.
Sure, fine. Sell it, who cares?
Exactly. With interest rates doing what they're doing, that's
Right.
fine.
Yep.
But here's the thing. This market, if you're in favor, they take you to ungodly valuations. If you're out of favor, they crush you to unbelievably low levels. And what's the effect? Activist investors coming in to buy good companies that have been left for dead.
Good companies.
Ulta Beauty had a
Look at Nike.
14 PE. That's the lowest since 2010. That's the lowest PE.
Look at Deere today. No activist investor, but like Deere's ripping too.
Yeah.
A lot of these names that we've forgotten about that are still like high value names. I appreciate the rally and some of these lesser appreciated names.
For sure. Definitely. All right. Appreciate it, guys. Thank you very much. Good analysis. Nice session. Fun one to think about. Definitely some nuances here beyond just a big rally. Jenny Horn and Kevin Hanks. Let's talk some volatility. Let's talk some trading strategies with Noel Smith. He's a CIO at Convex Asset Management. He's got a deep background in trading options all the way to being a seed investor in KCG and what will become Virtu. Noel, great to have you here on the Schwab Network.
Thanks for having me.
Okay, so tell me what you're thinking about right now. We had mostly like this big fall event that captured everybody's attention. You got macro stuff mixed in. Today seems like this really healthy rally. But given where we came from, do we need to go back a little bit? Walk me through here how you're thinking about the market right now.
So it was a really unique opportunity. The volatility response that happened on August 5th was so outsized relative to really anything else. So I did an interview previously, and I said that I was going to fade that volatility move. It ended up working out really well. But some of the indicators that we look at in terms of why would you want to fade something like that and what is the risk inherent in that is some of the stuff that I thought would be interesting to talk about. Because if you look at the market structure overall, writ large, wasn't that much of a freak out. It was really just a volatility freak out.
Some have called the VIX spike like a fake because it all happened overnight in pre-market. Would you describe it that way? Is it worth even going down that road?
So it's a little bit of both. You could have traded it in the sense that if you wanted to sell your house for a quarter right now, you could. The markets were really wide and it was difficult to trade, but it was tradable. And unfortunately, I know some people that did make some really substantial moves prior to the market opening. But in terms of the market open stuff that most people would normally look at to trade, it was a much more civilized market. Still a large move, but it was nowhere near this VIX 65 that people talked about. If you look at the August future when it opened, I think it was like 37, which don't get me wrong, it's still a really high number, but it's not 65.
Okay. It seems like another way to frame this is basically, do you think that the ramifications of this event will be more similar to VIX events that were like above 50 or those below? Because if you put it more in the category of like Fallmageddon 2018, then okay, maybe just a trade went bad and we'll go on our merry way. But when you've really only got comparables above 50 to like major economic turning points, whether it's COVID or GFC, then you've got a very different answer.
Exactly. So what you're looking at is a response that is much more indicative of a much more serious event. And a yen unwind and volatility that was creeping up the week prior, and then all of a sudden an overnight freak out because of the potential of the Japanese market blowing up. It's just not the same. It is a structural trade as opposed to a macroeconomic trade. And frankly, the market has really borne that out since then. If you look at the rally that we've had and the squish and fall, it really has no precedent. The ascendancy involved and then the declination involved, the rate of change on both of those things was so substantial to not really have an analog.
That's a really good point. That's a really interesting point because then it maybe allows us to kind of fade some of the macroeconomic implications as well, given that there was a bad employment report mixed in there. Today, good data helping drop that VIX even more, though. Does that kind of speak to a macro force that was mixed in there as well with the poor employment?
Yeah, I mean, a lot of people, ourselves included, we take risk on, risk off postures as a result of the macro climate. And also
All
what's
right.
going
We've
on
got 45 minutes to go. 45 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a really, really bullish day. It's been a kind of a roller coaster this week, right? Roller coaster. Love roller coaster. Remember that song? Love roller coaster. What do we have? Monday was a flat VWAP day. Tuesday was a ramp up day. Yesterday was another flat VWAP kind of day. And today was been today it was similar to Tuesday, only better. Wow.
I think it lives a pretty short life. So if you look at 2022 relative to last week, you had the market down from peak to trough something like 25% in 2022, and it was down maybe 5% last week, which is nothing close. And volatility was so muted in that 25% move in 2022 relative to what just happened. Puts didn't explode. There was no reach for VIX calls. It was just a very different environment, and it was flash of a pan. So it didn't act anywhere near the same. So the idea that you would fade a move like that, to me, seems a lot more reasonable.
Okay. So, Noel, the other thing that was going on in the market, also vol-wise, before the big spike, before the big crash, was the dispersion trade. You could kind of look at it from a vol perspective, which many did. You could look at it from just an equity leadership perspective with the concentration at the top. We had a really interesting period where there was like this massive dispersion because all the big tech was winning, and then we tried to flip it on its head with the rotation. Didn't really work, and a lot of vol traders I know were basically partying in there. In the meantime, playing that spread between index and specific companies. Is there any of that left?
There's a ton of it left. So, as previously discussed, is it a stock picker's market? And if you think it is a stock picker's market, that bodes well for dispersion correlation trading. So, bear in mind, dispersion and correlation trading is the same word twice. It's just yin and yang of the same idea. So, the idea that stocks have a mind of their own and they don't move as a unit is beneficial to a dispersion trade. And while that trade lost money in the VIX spike, the trade is still very much on. And if you look at the relative location of that trade going into it, it was so low. So yeah, it went up from a low, but it's also much lower than it traditionally has been. So I think there's still a lot of life in that trade. And if you look
You ever put stuff where you won't forget where you put it, and then you forget where you put it? You ever do that?
it's really a good environment for it because we don't really know where rates are going as well.
Okay. Can you give me like a little 60
There we are. Okay, I found it.
secret sauce from what you guys are currently in convex? Got about a minute.
As my late father used to say, always put things in the same place. That way you know where they always are. Tools especially.
Warehouse volatility. So the event for us was a gift in the sense that we always have on some kind of hedge, and if the market freaks out like it did, that's something that we can monetize. So I would say that if you had that luxury, it's something that you should have monetized and you did. Moving forward, we also re-engaged some of our short ball ideas, and those have been working since August 5th, and we think that they will continue to work for a while. And we're kind of reverting and recycling back into more of a risk-on posture. It's easy to say when the market's up 167 bips, but the indicators were there even before that happened.
Hey, one question for you. The last thing, Knowles, when I look at the VIX curve, especially with the vol dropping and the short in so hard right now, it's kind of there's a few kinks, and it's kind of elevated in somewhat of an unusual way. Is there anything?
So you have the election, and then the election uncertainty that comes around that. Using 2016 and 2020 as an analog, we're electing to basically short the front and be long the back. We don't know any more about the movement of the market than anybody else, but the rate of change in the front we feel will be more swift than the rate of change in the back. So we think that we can protect ourselves in the back while make money and profit in the front.
Okay,
and short it.
Okay, understood. No, thanks for the catch up. Looking forward to keeping in touch.
Thank you.
Absolutely. Noel Smith, CIO, Convex Asset Management, right? Unique look there at volatility and understanding what happened over the last month now, basically. Coming up, let's talk some housing. Home builders that have been really enjoying the lift in Fed expectations for a cut, i.e. lower rates, are rallying again today up 1.5%. We'll be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
All right, the S&P is just really doing very well. Apple just off the highs of the session. Take some profits off. Lyft having a good day. Lyft. Hi, kitty cat. Hi, kitty cat. Bitcoin, not so good day, but that'll come back. Supermicro looking okay. Supermicro.
I'm Tom White.
I'm Kevin Hayes.
Okay.
Catch me on Fast Market. Weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, let's talk some stock picks since market is ramping up. Lee Munson joins us, President CIO at Portfolio Wealth Advisors. Always excited about his picks. Lee, what you got for us today?
Well, I was doing a research day yesterday. That's where
certain dollars in financing to make it appear the mortgage.
All right, so a little profit taking at the highs today. Looking for follow through tomorrow. VIX dropping off. VIX dropping.
How the math works, it appears magical that they can get a 5% mortgage when if they go buy a used home or something like that, it's going to be from a bank at a higher rate. Right. And so, here's the thing. This is a secular issue. I don't think this is cyclical this time. And I really don't think, a big place like Deerhorn, they're really limited by inventory. They're not complaining about, the high rates, right? They figured out ways to overcome that. So I don't think that rates being a little longer, if we don't get 3 or 4 rate cuts,
Wow, what a day.
Ridiculous.
What a freaking day.
Everyone. But even if we don't get those rate cuts, I think these stocks still have a
Tesla.
plan to win over the next year. And if rates go down,
Wow.
we'll see. I think the volumes will go up, not down. And I think that that's the case with a lot of stocks we're seeing today as investors are realizing there's a lot of companies that are, growing earnings by 8-10% this year. Why should they not go up? Why should they be flat for the year? And I think home build is just one dynamic that appear rate sensitive, but when you really get into the 10Ks, the 10Q, it becomes a different story.
All right, good argument. I like it because it would help explain, why the persistent bid in these companies, despite some of the variance in housing data, despite some of the ups and downs.
Tesla up 6%. Tesla's up 6% and still off the best levels of the session.
Hey, while we got you, how about the tech stuff?
Nice reversal. Really want to sell.
Piece of the stuff that sold off. I think we're going to be going back to records.
Put credit spreads.
I'm not sure we're going to go be records between now and November, now at the end of the year, but I'm trying to caution people. I'm more of a value player.
195, 190, something like that.
Not selling either. I am not. I am only looking for
20 deltas or lower.
the NASDAQ, the Qs, the Mag 7. Those are still on my buy list for the right price. And I'm not talking about 30% down. The issue is, as we get up to next quarter and the following quarter, we're worried about the hyperscalers. We want to make sure that sentiment is still there. And but I think if you can get somebody saying a good deal, I would think.
Okay, all right. What's a good deal from here? Like 10% down? Maybe we'll have some video?
Oh, on high beta stuff like that? No, man, you got to get 15 to 20%. Okay. Take what you would normally take for a regular stock, multiply it by 2, and that's good. Just pretend it's volatile, so you want twice the dip before you rip.
All right. Okay. Love me some numbers. Thanks, Lee, for your time. Months of President CIO, portfolio wealth advisors are making the case for the secular trend in home builders and waiting a little bit for a deeper hit to the big tech winners. Let's talk options when we come back, looking at flows, looking at levels, how quickly things are rallying, and how fast we're adjusting to the upside. Russell with an almost 3% boom today. 30 minutes left still.
No politics, no noise. From Bell to Bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access. Even when
Futures about to go for another high.
on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
All right, we are ripping and just busting through levels left and right. Kevin Green taking a look at how quick market makers are reacting here. I mean, are we just sliding all the calls up? What's going on, KG?
Yeah, we continue to see a lot of this rolling activity taking place here, Oliver. I mean, we've had a stair-step type of momentum over the last couple of trading sessions, which is good and which is also bullish for now. Now, we are going to be approaching a really key area of resistance at 55.50 on the open interest side, so that's going to be the first area to be mindful of. Now, if we actually did see resistance and had a little bit of a pullback, I wouldn't get too concerned about this. I mean, if you're looking at the moves from the lows of Monday of last week to where we are at right now, even if you had a 38% retracement back, just from a Fibonacci standpoint, you still would be looking at around 5,400, which is not bad at all. And you're not having a lot of put activity taking place. Now, I just checked. We did see some buyers.
All right, VIX moving a bit lower. VIX is dropping off.
Friday, it's the monthly expiration. We could see a little bit of fireworks. There might be some hedging activity that is taking place. But this is the distribution that we've been missing for the last 3 weeks, where we are now starting to fill this out. We are now in positive gamma territory, which means that dealers, if we do have this upside momentum move, we could actually see dealers starting to compress markets. And when we have compressed markets, we also have compressed volatility. You can see that within the VIX. We do not really want to.
All right, let's take a look at the S&P 500.
A lot of this move to the downside, so that'll put us in the negative gamma territory. But
Wow, what a freaking day. What a freaking day. Look at this market. Yikes. All the moving averages, 921.50. Everything's turned up.
I would say that we could be in the cards, or could be in the cards that we could hit all-time highs here, maybe by next week if this momentum continues.
Yeah, this looks like a lot more normal of a distribution curve now. It really seems like things, you kind of got still that sort of tail lingering off down there on the put side, but everything kind of shifting in a hurry upwards. So at this point, a big pullback would be a major shocker, it kind of seems like.
Yeah, definitely. And actually, if we could bring up the open interest chart, I highlighted a couple of key areas to kind of focus on just moving forward.
Wow. Frankly, I'm very impressed. RSI. RSI says more. Volume says institutions. MACD cross. All right, we got 27 minutes to go. 27 minutes to go.
In such a quick fashion, even if you got to the 50% retracement, that would bring us down to 53.50, give or take a couple of points there. That's also still bullish in nature from a technical standpoint. Once you break below that 50% retracement from those lows that we saw last week, that's where you would get a little bit concerned. Notice that 38.2% retracement level, which is sitting right above that negative gamma level at 5,400. So that's what to keep your eye out on. You're looking at it from the downside, upside 55.50, then 5,600, and then once we break through 5,600, you're looking at darn near all-time highs, which will be out of the ordinary in an August and then September type of time frame, because that's usually when we see higher volatility. But if the market's going to try to plan this thing out and it wants to continue to move higher, who's going to really stop it outside of any type of economic data that kind of changes this narrative over the last 48 hours that's been kind of soft landing?
Okay. The last 24 hours has been about as good as you could ask for. Now then, if we do, so your point basically, we kind of get through the next threshold and your target's basically the all-time highs. If we don't, if things turn around, then obviously like there'd be some pretty serious offsides within the market right now. Some of these big institutions, it seems like, but they've also still got a little bit down their left, so it'd have to take like a pretty big drop as well.
Yeah, well, we haven't seen a matching from the upside rollouts and calls compared to the downside hedging input. So the puts haven't been rolling up as aggressively. So we have, once again, this kind of spread out type of scenario where it gives yourself a little bit of wiggle room and dealers don't have to really intervene to the downside if you see aggressive selling, rather than these upside moves where we break through upside levels. That's when we have this, gamma squeeze scenario kind of taking place. So I think you're correct there. But the put side, we haven't seen any type of aggressive put action taking place over the last 3 trading sessions.
Exactly.
It remains like that. That's bullish.
Okay. All right. Now, what about like getting stuck? Do we have so much momentum that that's unlikely at this point? If the skew is kind of bending upward at this level, does that generally kind of limit the potential that we just grind, or is that just, we'll see in what way and watch?
VIX dropping hard. There goes the VIX.
From a technical standpoint, you kind of want to grind it out a little bit. I mean, the velocity of these moves, especially if you're looking at today's move, I mean, we broke up and then just continue to this move higher here. Actually, if you're looking at a trend line and you compare trend lines over the last 3 trading sessions, it's getting more and more aggressive to the upside as far as that angle. And so you start to question the sustainability of a move like this. And so what we would like to see is maybe a continued grind higher, but not as aggressive. Maybe we have these 25, 35-point days where we grind to the upside here. Once again, negative or positive gamma territory, you're also going to have compression. So compression just means that once we hit upside dealer gamma levels,
Tesla going.
gamma levels, dealers start to sell.
Tesla.
Price volatility. And then when we have the test of lower negative gamma levels, dealers start to buy. And so that's what we kind of want. We want this gradual movement to the upside after this violent swing that we've seen over the last 2 weeks. That will provide you sustainability. This continued move to the upside may also, and we don't have the volume to back it up. We're starting to get volume and liquidity back in. If you don't have the volume to back it up, then you can have a lot of technicians really questioning, from an option theory standpoint, the sustainability of these price levels.
Okay. All right. So up, obviously nice, but sideways just fine after we got here this quickly. Okay. Anything else? Any VIX stuff?
Yeah.
Hit me.
Yeah. Real quick, let's hit two real quick charts. Driving to the close here today, the volume chart that we had out there, I wanted to highlight a couple of areas. 5540 is our positive gamma area, so that's where we were seeing a little bit of resistance. And actually, pretty much for the last hour, maybe hour and a half, the technical chart technical chart, the hour and a half, we've been kind of hitting that level for a considerable amount of time. And then we have seen some buyers kind of stepping in at the 5545, 5550 call spread. That happened about an hour ago. And so if we're going to see this long shot or moonshot type of trade, 5550 could be your area where we see close at. That would be a long shot trade because they placed that about 2 hours ago. I saw it about an hour ago.
That means they're putting it on intraday, putting a little pressure on it at the close.
Yeah, and if we do see a reversal, your balance area is 5517. So that's something to keep in mind. But this is ultimately bullish. And then last but not least, we do have liquidity coming back in the market for the last 2 to 3 trading sessions. We're starting to see the bid-ask spreads on the even the S&P 500 future.
Medicare's got some fresh numbers. Right back.
There goes Tesla. Notice the chalk. Notice the chalk change of character on Tesla as it pushes through this structure, breaking out on this structure.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech. Trends.
All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. Let's talk about some of the other stuff on the move today as bonds sold off around our data this morning. The dollar's been firm too. Of course, stocks are liking it right now. Scott Bauer joins us, CEO of Prosper Trading Academy. What do you think about the way things are connecting today, Scott?
What a day. What a surprise, quite frankly. I would not have expected this, Oliver. Seeing the data come in this morning, now all of a sudden a little bit stronger data is what the market is looking for. When it was just, a few days ago, we're looking for a little bit weaker data. So I guess maybe all the stars are aligning right now for the markets, where maybe the economy is right in the sweet spot. Maybe we're right where everybody wants it to be. That a potential Fed move, which we're going to get, maybe it's not a sign of weakness for the economy. Maybe it's just time. So I would be a little cautious myself. I mean, this move certainly caught me off guard, but boy, the market really likes it. There's change in a heartbeat.
Scott, you think we put the floor in for the yields at this point after the extreme move around the market sell-off?
I wouldn't say we put a floor in, but it held real nicely there. And so, we're seeing some of those probabilities of 25 or 50 bip cuts come down a little bit, or what that cut might be, which is why we're seeing, yields pushing a little bit higher. But I do think once we get that first cut from the Fed, that if the economy, if the economic data still remains, let's just call it in line, I think that's the perfect situation here. We will see rates coming down further, because that could really be the impetus then for the market to say, yeah, you know what, we can cut, but not because the economy is getting weaker.
Okay. Now, that's really the key, right? I mean, that's kind of the dream scenario here, that you could still see the Fed kind of go on a path maybe shallower than what the market wanted, but without the consequences of the economy blowing up.
And again, I'll go to the beginning of our conversation. Not just did today catch me off guard, but this whole move and the whole interest rate complex, if you will. And it just goes to show, I think, how on edge this market is and how fickle the market is, that any little eco data point that we get we honestly don't know whether the market's going to take that as a positive or a negative. So I think you have to remain really, really nimble in this marketplace.
Okay, that does seem still a reasonable thing to believe, right? Because we've been moving quick here to the upside, about as quick as we moved to the downside. So with the fall fading here, I mean, it seems like still the thought is that the sell-off we got around the yen was a fluke, but 15 VIX, I mean, by some argument, looking cheap, like, you know.
Okay, folks, I got to cut out of here early today. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Thursday, the 15th of August, 3:45. We got 15 minutes to go for the closing bell. I got to cut out 15 minutes early just so I can get over to DMV before they close at 4:30. So I'll bid you adieu. I'll more than likely start the stream in the morning, maybe about 8:30, whatever time my daughter leaves. And I'll just have it running all day. Should be back and I'll be monitoring the stream during the trading day. Okay, so I got to get out of here. Take care. We'll see you tomorrow.